Yo, 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 good morning.
What is up? How are
How
we
is
doing,
everybody? How are you, my friend? My buddy,
I'm
my
gravy,
guy?
baby.
You
I'm
gravy,
all
baby.
good. I'm all good.
All
I
right.
have had a holiday from hell. No, I'm joking. I just had a quick chest session. So I tell you what, I did like a superset. So I did a tricep push, like pull down on with the ropes, and then finished off with the what do you call it? A drop set right at the very end. Bro, my arms were twitching.
Nice. I also did upper body day today. So lats,
Nice.
shoulders, triceps, biceps, chest, the whole shebang. So yeah, also got like a nice pump this morning.
That
Feeling
is what we like to hear.
stiff as all hell already.
Oh yeah, dude, you can't beat it.
It's a nice feeling, especially when you like try to put on a shirt or a jacket and you're like, oh, I'm so huge, and why can I not lift my arm above my shoulder? What's going on here? Anyway,
Do you
good
know what
morning
was
to everybody.
just even worse?
What?
The fact that a couple of months ago I put this black shirt on and my arms were tight in it, and then I took the missus out for our anniversary this weekend. I put that same black shirt on and it's loose. I was like,
Loose around the arms, loose around the
yeah.
shoulder,
I was like,
tight around the waist.
Yeah. I was like, oh dear, that's not what what I want to see.
Oh no, oh no. Yeah, I have the opposite issue now. All my shirts are becoming too small now. So
Dude, that's
around
sick.
the shoulders, around the biceps, around the chest, it's tightening up, and around the mid waist, it's loosening up. So
Yeah, good man.
trying to get that very nice V taper, you know.
Yeah, that's what we like to see.
Yeah.
I'm slowly getting there. You know, I'm building it back up, and you know, hopefully we can get it sorted.
Nice. I do love doing my morning exercise session. It aligns perfectly. I go to the gym, I come home, I get ready for the day, start everything up as I need to, start having a look at some of the stuff if I haven't done the stuff that I was supposed to yesterday. Then I try and like get it quickly done this morning. And then I can just come and stream with you and try and take some trades, hopefully.
You a lucky duck.
Dude, have you seen the absolute craziness that was the gap this morning?
No, I've heard, but due to the fact that I've been in the gym and I've been working on some other projects ready for when I go back to the UK. Like I said to you, I'm going back to the UK a little bit earlier this time. So like in a month or two's time, I'm going back to the UK early. So I've been sorting stuff out for that. I haven't actually had a chance to check out the market. So, but I have heard it's been a bit of a roller coaster with the gap down. And
Yeah,
I'm just seeing you've brought up.
So
Just
this is NAS.
on the Nasdaq.
This is NAS. This candle here does not exist on the MetaTrader terminal. So we basically went from there all the way down to there. That is a gap. So all of this is gap. All right. Just to give an idea, from here to there. Sorry, let's move this out of the way because I think that's screwing things up. That is a $335, so 33,000. Is it? No, it's 3,500 points on NAS. Drop. So $335 on price. Drop. So we have quite the gap to potentially come and fill. And it's not just on NAS. US30 is the same. Euro USD, the same. GBP USD, the same. UJ, same. UJ's wasn't as large, but like pretty much every asset that I have had a look at this morning has jumped. Let me go to gold. Gold didn't. didn't gap, but it was trading lower in the earlier session this morning, and then try to return to let's call this 140 mark, and then just kind of rejected ever so slightly after this. Let's call this day open was this attempt over here, this big candle. So just this little section here, daily candle trying to push price lower, and we haven't come to retest the daily open as yet. So on gold, it does seem as though this might be the potential direction for today. We might have a potential downdraft on gold. USD CAD, same idea. Massive gap. We took up the whole gap as well, wicked below the previous day's close. Well, Friday's close, let's put it like this. Came back up to the daily open, and since then we have been pushing lower. Potential that this might also continue pushing. In this case, maybe a bit more bullishly rather than bearishly, I would think. Same with NZD, USD, massive gap as well. We've filled the gap with NZD, and I think with AUD as well, we've also filled the gap as well. Almost pretty much. We've still got this little segment over here that needs to be filled. But pretty much every asset, mate, has gapped over the weekend, which is going to be interesting because if we are going to come back to try and fill this gap, it is a massive gap to try and fill, but I think it can happen. I think we can potentially, eventually throughout the day, maybe during the New York session, maybe, we can potentially try and fill this gap, maybe even come and test this order block that we have up over here on NAS as an example. Interesting thing that I found out this morning when I opened up the charts.
Go on.
Daylight savings time has ended in New York, which means that New York is going to open up an hour earlier. Yeah.
Yeah. Oh wow! Is that dude? Is that already?
Yeah.
Ah, that's nuts.
So if we check the calendar, daylight savings time yesterday has reverted back, and then I think we have the pound one at the end of the month or next week. Okay, it's the end of the month. At the end of the month, we have the euro, the pound, as well as the Swiss that's going to return back to regular opening times. So this afternoon, instead of having it at 2:30 GMT, the open of the New York session, it's now going to be 1:30 GMT for the New York session. And then on the 29th, we will do the rollover for Europe. So for Europe, pound, CHF. And then instead of having the London Open at 10 GMT, or 8 GMT, sorry, it's now going to be 7 GMT. So just for everybody that's trading, keep this in mind for this afternoon. If you do see some volatility suddenly, and you don't know why, it's because of the rollover of the daylight savings time. Daylight savings time. Yeah. All right. Let's have a little quick gander who is in chattings. First and foremost this morning, we've got Scribbles. Hi, Fivers. Currently awaiting email about my account. Had a bit of a unique situation this morning. What made it unique, Scribbles? Tell us. Tell us about your unique situation. We've got James in. Morning. Good morning, James. Welcome in, everybody. You are officially in the building for the start of a 100K celebration week. Yes, celebration week. 100K subscribers on Wednesday. On Wednesday, we will have a giveaway for everybody in chat. You can participate. And then, I don't know. Let's see if it comes up now. But we do have a new background. And there might be something on the back. Oh, there we go. A new two-step program. Very interesting. I wonder what this is. For those of you with keen eyes paying attention to the backboard over here, we are releasing something new, a new two-step program. But you're gonna have to stick around until Wednesday to kind of like see what that is all about. We've got Ferring saying good morning to you. Yes, smash that like button. Tell us where you're tuning in from. Let's get this energy up in the March 11th giveaway. Yeah, please tell everybody that you know. Will has a nice little, rap section where he raps about who needs to be brought in. So everybody, tell.
And so we'll save that for when I have better Wi-Fi, which will hopefully be either later or tomorrow.
Well, or it might be never. We might never hear Will ever say his thing again. We've got Henry. Good morning, Henry, for us. Good evening to you, Henry, from us. We've got Imram saying good morning to you. Lyrical, there we go. Hi, hello. We've got It's Vinny. Yo, nice to see you guys. What's good? How was your weekend? Mine was nuts. Man, it's been raining with floods and everything. Vehicles swept. 29 dead. Lucky to be alive. What? Dude.
Damn, Vinny! Bro! Where are you?
Dude, like, what is going on? Like, we have a cold front here in South Africa, where I am right now. It was nice and chilly. The wind was crazy, but not like flooding levels where I am, at least. So, dude, Vinny, what the hell, mate?
Man,
what's happening in your country,
bro?
dude?
What on earth is going on with you, my friend?
You know what's crazy about this? He's like, yo, nice to see you guys. So crazy weekend, mate. People died. And it's just like, dude, how are you so nonchalant about this?
What's good, guys? Anyway, I'm lucky to be alive. It's like, okay. Are we just gonna like move on from that topic? Like, damn.
I mean, to be fair, isn't that just the perfect way to kind of like handle that like level of sadness?
Facts.
Is to be like, you know what? Yeah. Horrible weekend, guys, but I'm gonna have a positive outlook on life, and I'm gonna move on. You know, James saying winter weight, lol. Yeah. The thing is, Will is nothing but winter weight currently. We've got Darth Vader. Hi, Doctor Strange, Richard, and Williams. Is it because I look like Doctor Strange? Do I look like Benedict Cumberbatch?
Yeah, I was gonna say. I think it's because you look a little bit like Doctor Strange. I mean, bro, I suppose that's a compliment, man.
Dude, I've been okay. So years ago, I was told I look like Kevin Bacon, and now I'm being told I look like Benedict Cumberbatch. I don't know how I feel about that.
I mean, hey, look, there's worse people to look like, I suppose.
Have you seen crude oil too? The market, yep. Just looking at Brent, same idea. Just massive gap, but this makes sense. This makes sense. Obviously, 20 million barrels of oil that's supposed to go through the strait cannot go through the strait. And on top of that, the extra, let's call it bombing of desalination plants as well as oil refineries as well across the whole of the Gulf is going to cause prices like this to start picking up. I don't know whether or not we're going to come back down to fill this whole gap. I'm going to say this. I do think that oil is going to probably stay either above, let's say, 96-ish and potentially like 98-ish. I don't think that we're going to come back down just yet to try and take up like lower areas down here, like 80, 84 and so on. I think this is going to be the new norm for a while. Much higher oil prices. Oil prices go up. Everything from traveling to imports, exports, everything's prices are going to pick up. If your country is reliant, let's say, on imports of goods, let's say for argument's sake, you're a country that relies heavily on importing, I don't know, meat products, that is going to pick up as well. So the price on the consumer is going to pick up quite a bit because of a higher oil price. Higher oil means higher prices for transportation. Higher transportation costs is going to lead to higher higher consumer prices. There we go. I keep thinking community prices. I was like, community. That's not the word I'm looking for. That's definitely not. Is it community? No, it's not community. No. So, brain. Yeah, oil, crazy. In terms of where we've been last time during this phase, it's been a while. I mean, February 2022, according to this one, obviously, but Brent crude February 2022, and we're already like very high above where we started. What is this? February 27th, 2026 was $73 that we closed, and we're already sitting at 103, where with this price up over here is sitting around 131. So if things carry on the way that they're going, we are probably going to come and test this 130 again. 120, maybe 125. 123, yeah. So just take that into consideration. Oil is going to be quite volatile, I think. There is a potential for us to try and come back lower, but I doubt it. I really do doubt it. Well, that's on Brent. We've got Ty Keith saying good morning, Rich and Will. Good morning to you. Daily facts. I missed the time change. Good morning, everyone. The time change on what? The daylight savings time change? Or the time that we start our new stream? Well, with the time that we start the stream. In terms of the... Oh, you got stopped out because of the... Okay. The changeover has only just taken into effect. So daylight savings time on the dollar is affected. Not yet on pound. So I'm not sure if you got stopped out because of the daylight savings time change. I don't think that this is because of daylight savings time, to be dead honest. This is definitely news-related, war-related, geopolitical unrest-related. I don't think it's got anything to do with daylight savings time changeover, mate. Time hasn't affected London Open. No, not yet. Like I said,
No.
I
didn't realize that it was this soon.
Yeah, it's only the US and the Canadian daylight savings time rollover. The 29th will be CHF, Euro, and Pound. Daylight savings times changeover. So roll back 1 hour. So in this case, the London Open is unaffected. So it's only going to be the New York Open this afternoon that's going to be now at 1:30 GMT instead of 2:30 GMT.
I got to try and work out when the rollover for Hong Kong is going to be.
Is there a rollover for Hong Kong?
I think so. I'm sure there is. Let me Google. Is there daylight savings in Hong Kong? Let's have a look. I'd imagine there would be, but I don't know.
Yeah, just because New York clocks change doesn't mean London traders go into office an hour earlier. Yeah, Craig, like we said, it's only the New York office is basically, well, not New York, but the North American daylight savings time that has taken effect right now. So it will only be the New York Open that will be affected. Imran saying good morning. Henry, what about the time of the Fiverr's live stream? Is that going to change because of the daylight savings? Probably not. Did it change last time? I don't think it did. Did it?
Did what now?
The time that our stream starts.
No.
I don't remember it changing.
It did with the one before, with the Apex one. Do you remember? with the Brotherhood, you went on an hour earlier. When daylight savings went out, it was actually supposed to be an hour after. So I don't know if
Yeah.
the vibe. Do you remember that? You were
Yeah.
like sitting there for an hour. So I don't know if I don't know. That's a fantastic question. Actually, I don't know if we're gonna change that.
I mean, we can if everybody wants to. If it's an hour earlier, I mean, the London Open will be an hour earlier. So
I mean, I'm
instead of
fine with
us
that
being
because that
half
means
an
I get to finish at 9 p.m., not 10 p.m. So that works for me.
it's, okay, you know what? I will talk to all parties involved, and then we will decide whether or not we need to do the changeover. But obviously, that's only going to be from the end of the month then for the next for April, basically.
Yeah, yeah.
Yeah, but we'll notify everybody
Actually, no, no,
beforehand.
no, no, no. Can we keep it as it is? Because when I go back to the UK, that means I'll have to start work at 7, not 8, which means I'm
Dude,
gonna have to go to
life,
the gym even
dude, life
earlier.
does not revolve around you, mate.
Yes, it does.
It revolves
You
around
change it.
me.
You change it to go back when we're in Hong Kong, and you change it to go forward when I get back to the UK.
All right,
Good
boss,
afternoon
I'll
from
do it.
Thailand. In fact, Thailand, I think, is 2 hours different. I think it's GMT plus 6. I believe Thailand is.
I'm not entirely sure.
I'm sure it
Shane is
is.
asking, got any tips on syncing MetaTrader 5s with the Fiverr's hub? I got a trade that says that it's still open in the hub. So generally, there is, I don't think there's a way for you to manually sync it. I think all you need to do is just kind of like wait for the trade in the hub to, finish syncing itself. Unless there's anybody in chat that knows exactly how to do that. But
Sorry,
I
man,
don't
I'm a
think there is a way.
dinosaur.
Hello, Fivers. It's been 3 days after passing phase 1. No response to my phase 2 till now. When did you pass your phase? Was it on Friday? If you passed it on Friday...
Yeah, 3 days, I'd imagine Friday.
If you passed it on Friday, technically that is a weekend where the Fivers is situated. So just give it some time. They probably will get a look at it now for you this week. Just a little bit of patience, my friend. Sometimes over weekends, there can be a 24-hour to 72-hour delay between your accounts. So phase 1 to phase 2, it can happen.
A business day, though. Let's specify business working day, which is Monday to Thursday.
Yes.
Yeah.
Well, technically, their business day is Sunday to Thursday.
Oh yeah, of course. Oh yeah, fair. Sunday to Thursday. Yeah.
Try me with 100K, just learning temperament of actual trader with you guys in every live stream of the Fivers. Oh, dude, yeah, that's cool. I like that. Just learning the temperamental side of actual trading. Like, what temperaments do traders have, and he's trying to learn from actual traders what kind of temperament they have.
Oh, fair. Okay, that makes sense. Okay, fair. I was going to say, I think my brain hadn't fully registered that comment. Yeah, no, okay, no, that's super cool. Yeah, that's amazing to see that you're trying to learn and understand the sort of brain waves of us mental cases.
Yeah.
Come join the dark
Imran.
side.
Yeah, join the dark side. We have cookies. Imram saying, from Uganda, my African brother, welcome. That was me.
Are you allowed to say that? That feels wrong.
Dude, I'm born in South Africa. I was born in Africa.
No, I know it.
Dude, everybody in Africa is my African brother. Void is my African brother, mate. He's all the way in the north. I'm all the way in the south. We're still brothers. What are you talking about?
True that.
And
I mean,
that was, yeah, if you're an MMA follower and you follow someone like Dricus du Plessis, who was the middleweight champion for the UFC from South Africa, he referred to everybody as his African brother.
I mean, technically, just saying, we are technically from Africa.
Anyway, Botir is saying, can you analyze gold for me? Yes, we can. Will, do you also want to bring up your screen, mate?
Yes. I mean, my Wi-Fi seems to be working at the moment, so
Shall
let's
we
go ahead and
utilize
do
yours?
that. Let's go ahead and make hay while the sun is shining, as they say.
Okay, so Botir, we'll get to your gold analysis in a second. Let me just run through chat quickly as well. We've got Atukunda Kevin from Uganda. Another guy from Uganda.
Oh.
My African brothers. What's up? Is it possible to copy trades? Well, I can't stop you from copying a
Yeah.
trade. It's not, dude.
I
It's
can
not like I'm
recommend
going to
you.
reach through the camera and grab a hold of you and say, "Don't do that." I can't
No.
prevent you. I can't prevent you from copying trades. We do advise that you don't copy our trades. This is
Yeah, we
purely
highly
for
recommend.
educational purposes, educational and entertainment purposes. Let's put it like that. But yeah, like I said, I can't stop you from trading.
Oh yeah.
Sankit is saying, why my 10k funded account disabled, not daily loss limit hit, daily loss limit is 250 and I am loss of 230. Why my account disabled? This is scam. Well, your daily loss limit is dependent on the 12 o'clock open, the actual equity in your account. So if your account was already less, then the daily loss would also theoretically be less as well, because it's a percentage of what's in the account.
Yeah.
So your daily loss
it's
is
not daily loss. Yeah,
daily
it's not
loss is 5%.
loss of your total.
Yeah, 5% of the equity, not 5% of the open of the account. So it's 5% depending on where you must have already lost one or two trades the previous day or something like that to get down to 230,
Yeah.
which is not all that far from 250. And to come like drop in here and say it's a scam, that's a bit unfair, I think.
Yeah, absolutely, man. Like, let's say, for example, you're 5% up. Your daily loss it's not 10%. Your daily loss is how much you can lose within a day. Doesn't matter whether you're up, down, or break even on that account. It is whatever your account balance, equity, whatever you want to call it, is at that day or during that day trading period. If you lose a 5% from your account from the moment of the new day start, that is a breach.
So 250 in this case. Well, also here, Scribbles is saying, check, you haven't had commission payments that have pushed you over the daily limit. That's potential. So on a 10K,
Yeah.
250 is technically not 5%. So, yeah. So 10K times 0.2, sorry, 10K divided by 100, that gives you $100 is 1%. Times that by 5 gives you 500. So that's the daily loss is 5%. Okay? But now imagine you had 9,400 left, as an example. And you divide that by 100, then all of a sudden 1% is now no longer 100, it's now 94. And times that by 5, and then you get 470. So in this case, it changes. So it goes from 500 to 470 is the 5%. So in this case, you would have lost your account, but you kind of like get the idea. So in theory, you should not be hitting your daily stop at 250 because that's only 2.5%. Your 10K would have been at 5% for the daily loss. So
Yeah.
anyway.
Indeed.
Edie Miliband's crusade for zero carbon messing up the UK.
I think there's a lot more going on geopolitically regarding the UK than the zero carbon goal. I'll be honest with you.
I mean,
Even
it might not be helping. Let's put it like
No,
that.
true that. It depends what you're talking about. Look, I mean, zero carbon goal in the UK is, if you're talking about a global scale on trying to help global warming, and then if that's what you're talking about on a personal level or on a social level, then it's, we're a fraction of 1% on the global warming scale or participation scale. Although, if you're talking about the geopolitics and what's going on financially with the UK, the global war, or sort of the zero emissions goal, it's a fraction of what we're all concerned about in the UK, I think. But I mean, hey, I don't know. I'm not a fundamentalist. I'm not an economist. So feel free to educate me if you think that I'm wrong, because I'm more than welcome. I'm more than welcome into education.
Nice. Anyway, dude, bring your chart up and then let's go through gold.
Yes, absolutely. Let's take a look at this. Where am I? There I am. I couldn't find me. Hello. Here I am on gold, checking out the 4-hour. Okay, so I wonder if I can actually. Bye. Okie dokie, let's have a look. So we've got this nice little consolidation zone here. First things first, I want to mark out my areas of interest, and that is going to be significant lows, significant highs, consolidation zones, and imbalances, or fair value gaps, whatever you want to call them. So to me, I'm on the 4-hour chart right now. How you doing? It does that. There we go. So on the 4-hour chart right now, it is the higher time frame. I don't trade this on gold. However, what are we looking for is some form of trend. Now we can clearly identify right now that we are on an uptrend if we go ahead and draw from the lowest point to the highest lowest point. And if that doesn't make sense, what I mean by that is the lowest point of the low to the highest point of the low, and connect those two dots, and you can see that we are clearly in an uptrend. So now that has been established, we want to be looking a little bit more closely, a little bit more personally on what's going on right now. So immediately, and what I mean by immediately on the 4-hour is everything probably from the previous week, if we're talking on a Monday, which we are. So I want to be looking at this price action here predominantly. Now, we had a gap up after this consolidation. This looked very nice on this move up. We had a gap to the upside, we filled it, and then we tanked down. So therefore, this area here was not respected. So I don't care about what happens here now. So now I need to look a little bit deeper. If I'm going to look a little bit deeper, where do I want to be looking? We've got a nice zone here, which also marries up with this sort of almost consolidation sort of range area where price sort of really slowed down and tried to, identify where price wants to go. And then this is where the move up was made. Consolidation, of course, break out, pull back down lower underneath these lows into this consolidation zone here. Or if not, we have got this low down here. Now, this low to me would more be a target for sells than an area of interest for buys. If we get this low, I am not going to be buying from this particular area. It would be more interesting to see if we could wick it and then see if we can put in some sort of price action to confirm a shift in trend. But however, we have got a really nice wick into this consolidation zone. Rejection, consolidation, pull back down. We just sort of mess around a little bit here. We don't really do much. We fail to break higher, so we don't put in a new pathetic higher high. And then what we do though is we put in another two. Let's try that again, Drew. We put in another 2-wick rejection just down here. So therefore, price is rejecting this point here, showing us that it's come down twice now to this area, failed each time, and is now starting to move back up to the high side. So Let's just delete some of this. Cool. Now, oh, I was going to say what's just happened then. I skipped a pair. There we go. Right, now we'll go down to the 1 hour time frame, and we can see again we are in a range in market because why? We have got this low here, we've got this high here. These are the two previous. Everything else inside it is garbage price action. Absolute dog's bollocks. So not interested in that whatsoever. Dim diolch, no thank you. I am going to wait and see if we can move in some form of decision direction, breaking this high here, or on the adverse effect, break and close below this point here. Now, these are going to be the two areas that I'm going to look at. However, this is on the 1 hour. So this is if you're looking at a bit more of a higher time frame, maybe a longer hold trade. So to see if we can get something on the smaller time frame, the lower time frame being the intraday. Now, the intraday for me is the 15-minute, 5-minute. And that's where I like to try and see my precise entries. Now, we're not really seeing much again on the 15-minute. Guys, like I said, we are still in garbage price action zone because we are in between this high and this low. So therefore, we've got to be extra cautious and take a lot more precaution when it comes to opening up a trade due to the fact that we're in an area of not so much higher time frame confluence. It's actually higher time frame garbage. So lower time frame when higher time frame equals garbage, lower time frame equals lower probability. However, when you come down to the 5-minute, we can establish what I like to call microstructure. Now, when we're looking at microstructure, we can see that we wicked into this area of interest, broke out with conviction, filled out an imbalance, which is also the break and retest, which is also going to be a nice fib fill, broke further higher high, consolidated, broke up again. And if we look at the candlestick characteristics as we pull back into this consolidation area of interest, we've consolidated, attempted again. I keep right clicking. There we go. Consolidated, attempted again, pushed up, and now we're currently in an area of potential break and close above previous high or consolidation high. So if we wanted to take a high risk, and yes, this would be a high risk entry criteria, 5-minute microstructure, gold long, then here is your opportunity. We are going to wait for a break and close above this high here. We're going to want to see a nice confident break and close candle to the upside. Then we're going to wait for one of two things. We're going to wait for either a pullback into a nice area of interest. For example, could be a fair value gap. It could be a base candle. It could be a base candle. It could be a fib retracement. Or it could be all three, which to determine all three, you are going to take a mean, and the mean is the average. So you're going to take a mean average of the highest point entry criteria, the lowest point entry criteria, and whatever is in the middle. You're going to try and take an average of those three entry confluences to then gain an average entry zone. And that's what I've done here. So as you can see, if I just move in a little bit closer, now, this doesn't have to be perfect. I'm not saying get your calculator out, but what you can see is we've got some form of base candle, we've got a fair value gap, and we've got a Fibonacci retracement. Now, what we can do is actually move that up a little bit higher, but you want it closer to these two confluences because two confluences stacking up is stronger than one confluence on its own. So therefore, what we can do is see that we've got one confluence here, two confluences here. That's three totaling up if you can have it around here somewhere. So there's your entry criteria. Boom, off you pop, up to the upside. Or you can go ahead and take the higher risk of a high risk gold long. Now, I wouldn't recommend this 90% of the time because, if you're going to have a low probability trade, you don't really want to take a high risk entry model as well because you're really lowering that probability of the trade. But what you can do is on the close of the candle, which closed above your area of break and close or break, close, and retest, you put your stop at the low, and then you target wherever you're targeting. For example, the higher time frame consolidation breakout high or range high. And therefore, you got a 3.45 risk reward ratio. You're in the trade now, and you're in profit. I would be very, 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 very cautious taking that sort of trade. Or you can be a little bit more cautious and take this lower trade down here, which gives price a little bit more time to retest and continue. Higher probability is going to be here. Lower probability, higher risk is going to be here. However, for me, I personally wouldn't take this trade at all due to the fact that the risk is just too high, although we have got higher time frame trend on our side. So if you put a gun to my head and said, if you do not find a trade, I'm going to pull the trigger, this would be the trade that I take.
Nice.
And that is gold.
Gold, baby. Gold.
Gold, baby.
Yeah. Apparently the question was for silver.
Oh, for God's sake.
We do apologize. Sometimes we read it like very quickly. We don't spot read. We just go like, okay, and then carry on. Apologies, you were looking for silver. We did gold, but I assume silver is going to have a similar kind of like play. The thing is, silver and gold, there is some level of correlation between them. However, silver to me does not look good at all. I've had a quick little look at it. The whole of last week has not been the most bullish, let's put it like that. Last week ended up being a bearish week, which was mainly from Monday and Tuesday sell-off. But then Wednesday, Thursday, and Friday was just kind of like consolidation. And we're continuing that same level of consolidation right now on silver. So I would say from silver, I would really need to see a strong break and close above this area of consolidation that we have currently, and you're very close to it, Mike. You can see the consolidation very nicely.
Yeah, exactly.
I've tried
labeling it out nice enough so you guys can see it. Okay. It's not nice at all. It's gold for me wasn't as nice, although we've got a nice wick under here. Gold wasn't as nice for me, but you could force a trade on gold if you really wanted to. Even on the 5 minute, maybe like you just don't care about your trading account if you're going to take a gold and silver trade right now, especially silver.
Yeah. The thing that I can see is that if I bring my screen up, then you should be able to see this. Okay, we're back. Silver had this area of consolidation that we came to test last week, Tuesday-ish. We did try and react off of it nicely. When we had an opportunity to come back to it, we failed. We couldn't even come close to test this area down here. So what I've taken is, that last, it's on the 5 minute, you'll see it. The last candle here where price tried to push lower and then rejected off of it. We come to retest it over here. So this area over here is now becoming a little bit more stronger support, in my opinion, rather than this area slightly lower. Anyway, price started to attempt to push up, but then immediately went into consolidation, making lower, not really lower, but like equal highs and then slightly lower highs. We have this little area over here where price also tried to break through, failed, and then eventually we did come back to it this morning and we broke through. But the thing is, we've reacted exactly to the pipette off of this zone this morning. So there, when it was established on the 5 minute, the last candle, the full candle, so the low and the high of that candle, we've already had a singular reaction here and now a secondary reaction this morning based on literally a wick. We've wicked off of it and then we've started to push up. The problem is this area that we created over here had a singular reaction, secondary reaction, and now a tertiary reaction as well. So we've tried to push lower. We're not breaking this downward channel. We're not breaking newer lows. We are technically making higher highs across the board. We came back down to an area of consolidation. We're seeing a bit of a break of that consolidation. We must now break this zone, which is 84.86 to 85.55. We need to break above this if we are to say, yes, silver is going to start pushing bullishly, and then what we can come and test is the 90 area again, maybe even slightly lower, around 87. Just because we've had multiple reactions in this area already, you know. So there is a potential for us to break through there, but the biggest area of interest, area of resistance, is this 84.86 to 85.55 area. Obviously, if we do not break higher and we start pushing lower, then we do have this 79.65 to 77.96 area to potentially come and test. Definitely a strong area of support and definitely a strong area of resistance. We're currently stuck between these 2 points. So silver, to me, is really going to depend on whether or not it wants to break the support or the resistance area. I'm not entirely sure what it wants to do. It is consolidating. It was consolidating for the whole of last week as well. We did have the drop-off on Monday and Tuesday, but Wednesday, Thursday, Friday, if I go onto the daily, you'll see it clearly. That's Monday, strong sell-off. Tuesday, continuation of the sell-off. And then Wednesday, Thursday, Friday, it's just kind of like stuck in this little area of consolidation. So we need a break. That's what I'm just going to say straight up. We need a break. It doesn't matter if it breaks lower or higher. Personally, if we can break lower and then come back down to 76, 71-ish, that would be pretty cool. And then we use that as a base to try and push price up higher. That would be pretty cool. But I'm not going to hold my breath for that. There's too much price action on the lower time frame that needs to be broken through before we even come close to that area.
Yeah, I totally agree. I've drawn something similar up. So this is gold and this is silver. So I've drawn something similar up on each, but the probabilities of these trades are garbage. So I think we need to see some form of nice strong break and decisive move in order flow just so we can get something going.
So I did take a to get the price right.
Just seeing. Ayan, Willie, India won the T20 World Cup, bro. I know. I didn't manage to get to watch it. I tried to find it. I couldn't find it anywhere, but I did manage to get the result. They won by 7 runs, I'm pretty sure it was. I think. Or was it
Yeah.
6 runs? I
Now,
did. It was
congratulations to
super
them.
close.
Yeah,
Yeah, so
congratulations to
screw
them.
you, India.
Say that,
Yeah,
mate.
no, watch me. I never said I was a good loser. I'm joking. No,
Okay,
big up
fair.
India.
Fair. I just want
No,
to run.
well done.
I just want to run through this Nasdaq trade of mine just very quickly. So we had a bearish order block on the 5-minute this morning. I think it was on the 15-minute, to be dead honest with you. Yeah. So on the 15-minute, if I just move that out of the way, you can see the high of this candle was broken. The low of the candle was also broken, and the body of this candle closed outside. So it is a outside bar bearish order block. So what I had is I just marked up the open of the previous candle and the highest point to see whether or not, if price were to come back to it, if it was going to react the same way it did when it started to volumetrically push down. I pulled it all the way through. We already had a singular reaction over here, which happened to be the high of the Tokyo session. This was pre-Tokyo high over here. This is pre-Tokyo. Okay, I'm just going to move the gap out of the way because it's a little bit annoying. And then just move that. And then on top of that, I'm just going to... Okay, so we had this high order block tested. And instead of having a new low created and this order block down here tested, same principle, exactly the same principle as what's happening here. The candle, the volumetric movement that we had, the candle low was swept by this candle, the candle high was swept by it, and the body closed outside of it. So it's an outside bar order block as well. Instead of price pushing lower from here to try and take a new low, like this order block low down here, we made a low. We tried to push back up again. We almost made an equal low up there. Then we made a new lower low, and then we started to push up as well. But if I go down to the 5-minute, you'll see that we closed outside the high. We closed outside of this order block on the 5-minute, on this candle over here. So we swept the high. We swept the high of the Tokyo session. We closed above the order block. And when we tried to push lower again, instead of making a new low down here, we made an equal low. Or not equal low, a higher low. So we're continuing that up, push up higher. So higher high, higher low yet again. And on the close of the candle, I just waited a little bit and then I entered just to kind of like get my stuff in place. Entered my typical take profit and stop loss is usually a 1-to-1 during London session. However, because of the fact that we have this gap, I thought that there was a potential for us to get a little bit more than just your typical 1-to-1. And because I use static take profit and stop losses, it was going to be a 40 or a 4,000 point, so $40 on NASDAQ stop loss. It was just like in line with that previous swing point. So not entirely below it, which I would have preferred. But if I had gotten in at the moment this candle closed, kept an eye on it, knowing exactly what I was looking for, and then jumping in the moment it presents, I would have gotten in on the close of the candle. I would have looked for a 1-to-2, and you can see that the stop loss would have been lower than that recent low swing. So that could have presented with a little bit more, like less fear that if it were to come back down, it's going to just wick this low point and then pick up. Yeah. So probabilistic, it feels like a better trade. However, the way that NAS moves sometimes, it doesn't even give you the opportunity to get the retest Sometimes it literally just, if it breaks and starts moving, it just moves and doesn't come back down. This is on the lower time frame, like the 5 minute, the 15 minute, and so on. So this would have been the idealistic entry point. This was the one that I got. However, a little bit of an attempt to try and push price lower. Didn't really worry too much about it. Pushed up. Lovely. Done. So I am done for now. I'm going to wait for the New York session to open up for a next trade. So I will trade one trade during London, another trade during New York, unless I get something that really sparks interest. So generally, one trade is enough in the morning for me. I can do other stuff. I get my secondary trade. If my secondary trade is a loss, by all means, best of 3. Then I'm going to try and get that tiebreaker between who's going to be, or is it going to be a losing day or is it going to be a winning day today? And then what I would do is just do best of 3. But generally, one trade in the morning, this is already more than I would normally go for. So this is a 0.5% risk, 1% trade. So normally it would be a 0.25% risk with a 0.5% gain. In this case, it's already 1%. So this is good. So in the afternoon, I'm just going to risk 0.5%.
Yeah, nice.
So that if I do lose that trade, then I'm still 0.5% up.
Yeah, nice. Yeah, don't blame me.
But yes, so we are pushing nicely with NASDAQ, and it is most probably because of this gap that wants to try and fill now. So we'll see. We'll see what happens
I looked
here.
at that on the NAS, the US 30, even GU and EU look like they want to try and fill that gap to the upside.
GU and EU did not fill me with a lot of confidence because of the fact that we had this very nice attempt to try and push price lower. So
thing is, we hadn't even taken highs either. Like, we hadn't taken Tokyo highs, we hadn't taken previous highs. We failed to break higher. We actually ended up creating a lower low, but now we're heading back up to create a higher high, and it's like
because we haven't broken Tokyo lows. But like, imagine this: you have the Tokyo high over there. That is the high of the day. Like, it's the high of the day. All right. So this is the high. Okay. You have the most recent low swing, which is down here, which just got broken. So that's the high and the low. So you've already established a lower low over here. Lower low. And when price tried to come back up again, you've established a lower high. Lower high. So the moment this is printed as a lower high and you have this, obviously, this is opening candle of London. I generally don't trade the opening candle. However, just going on the same principle that I did with the NAS trade, you could have taken a sell, not on this candle, but on this candle over here. So as it starts pushing lower, you already know that there is a lower low for you to come and test. You've already tried to take the high and you failed. You could try for a trade, put your stop loss just above either the most recent swing, and then either target the low or look for a static, let's say 1 to 2 as an example. Or have your stop loss just above that candle itself and then look for a 1 to 2 or something like that. Maybe a 1 to 1.5. Yes, hindsight, yes, but it's this exact same principle. Failure to make a new high, you've already created a new lower low. Prices showing volumetrically strong bearish candles that it wants to try and push lower. So when price tried to push up, it flattened out a little bit, and then when the continuation happened on trying to push price higher, it slowed down significantly. Look at these candles in relation to these candles. Quite a bit different, quite a bit slowed. And it's also roughly in the same area where we previously also had a bit of a attempt to try and push price lower. Not push price up and then failed and then started to push price a little bit lower. But once again, this is all lower time frame, as Jonathan would say, garbage. Garbage price action. Noise. Price action. But yeah, there's if you want to do some lower time frame scalping with, don't put a lot of risk on, just try a trade like something like this where you fail to break higher highs and you create a new microstructure.
Yeah, just acknowledge basic order flow. Once you can acknowledge basic order flow, you'll start finding, even no matter what time frame you're on, if you're trying to scalp in and out of the market pretty quickly, basic order flow on the lower time frame works to perfection. It's just about
Yeah.
understanding how the market moves.
And you can see it on the 15-minute as well. If this was your low, sorry, wrong.
Mm-hmm.
If this was your low of the day, you have a high swing over here. That was your recent high swing on the 15-minute. You create a higher low. You don't break the high here, but you do break it here. Do you see? So maybe you could have tried a breakout of this, but this is a lower probability in my personal opinion, because you do want
The form is
this.
still there.
Yeah, the same form is there. It's still the same structure. It's a low, a high, a higher low. Yes, we have a delayed upswing for a new high. However, you could have gone and taken this here as a new high as well. And then on the break of this candle, you could have tried. But these, like I said, this is just a lower probabilistic trade, in my opinion. It's much better if you wait for that recent high swing to be swept as well, and then an attempt to try and take the low, and then failing, and then starting to show that you want to start pushing up. That's what I would rather look for. That's why this looks a lot better, because more volume during London versus Tokyo. A little bit more volume, and we are aiming for a nice gap after attempting to push price lower here strongly and then failing. So it did look a little bit better. GU is the same. Same structure down here as
You
well.
actually look
Your
a little
low.
bit nicer, in my opinion, because we've got that nicer order flow to the upside.
Yeah, the only difference is we broke the highs.
Yeah.
And then we swept the low
Yeah.
with regards to these two areas over here. So
Yeah. If we can close nice and bullish, I think that'd be really nice.
yeah, EU is a little, I'm not sure, mate, because this was a strong push lower. We didn't break the lows of Tokyo. We've not broken the highs of Tokyo either. Strong attempt to push price lower, strong attempt to push price up, and it's kind of like just stuck there. So, I don't know. GU looks a little bit better, you're right. On top of that, we have come into this area over here where we've reacted once off of it, and then a second time off of it as well. So you've got this micro structure down here that had a strong reaction, and then when price came back to it, it reacted strongly as well, taking a new high. So this looks a lot better in terms of price action for me, and I agree with you. It does. EU, not so much.
Yeah, I don't like EU. Truth be told, I'm not keen on price action at all today. But if I was to choose one, it would be GU over EU.
Hold on a second. Martin, you're saying you're targeting the top of the gap, so you're all the way up over here. All right?
Yeah,
So
nice.
my trade, you're aiming for there. Oh, dude, that's... If I kept it in, and it does go to this area where you are saying, that's a 7R trade.
Woof.
That's 3.5% gain. That is crazy. Where did you enter? You have a 1 to 5 on it. Oh, wow. Okay. Yeah, that's kind of crazy. Yeah, that's kind of bonkers, mate. That's kind of bonkers. Anyway, good trade, mate. I hope you get your filled all the way to the top here. It's the gap itself. It's a little bit lower than the gap, but it is the low of the London and the New York session prior to the close of the weekend, or the close of the week. So I would never aim for above that. I would always aim for below that. Let's rather say. So I won't aim for the above the, or even the top end of the gap. I'll always go a little bit lower. Just a higher, in my opinion, just a higher chance of it actually hitting take profit. Yes, NQ, US Tech 100, NAS 100, NASDAQ. It's all NQ, but it's the CFD version. Let's put it like that. It's not the futures version. But yes, NQ is US Tech 100 in this case. I see there's a few people asking this question. Active traders, anyone exploring Lexivana for signals and automation? And it's the exact same. So this guy and this one, exactly the same thing. Are you guys bots? Is this like a bot thing? Because it's literally the exact same. Bots, mate, bots. Anyway, yeah. Martin I saying a little bit lower, a little bit lower. Ooh. For me, the target. No, I get it, mate. A little bit lower. 24332. 24332. Oh, you just hit it then, mate. Oh, 24332 is the entry. My apologies. So 24332. Let's say like that's your entry, and you're targeting 530. And then you have a 5R trade like this. Jeez, dude. What a tight stop loss. Okay, hold on a second. I literally just said, wow, what a tight stop loss. It's about $40, so it's about 400 points. I mean, or 4,000 points. It's what I usually use. Are you copying me? Martin, you naughty boy. Now, if this goes into your favor, mate, that's pretty good. You've already set your gain to 1-1. All right. So your stop loss, you've moved up to break even. I mean, you could have on the low swing here, have that, because remember, there might be a bit of a pullback now, and just make sure that that pullback does not like sweep, your low. And then what could have been an amazingly good trade ends up being a break-even trade. But yeah, looks good so far. That does look good. Let me just return this to what it was. Yeah, that looks good so far. Shirok asking, can you explain your trade? Yeah, I did, but I will gladly explain it to you again. So, one thing that you need to know about me is that I love trading trends. I want to see reactions off of established areas. An established area can be, for argument's sake, a high or a low of a session. It can be a previous day high, previous day low. Just areas where generally I've seen reactions. So it can be support or resistance areas, like this might be a resistance area because you've had more than one reaction off of it. Okay, so in general, I want to see a reaction off of an established area. Then I kind of gauge how strong or how weak that reaction is relative to the previous time that it tried to react off of that area. So what we had was we had a bearish order block that was created just before the Tokyo session. So price moved lower strongly. It was a 15-minute order block. So 15-minute order block, price pushed down volumetrically, very strong, reactive, like very strong reaction pushing price lower. On top of that, we have a massive gap, which kind of like falls in line with the idea that price is going lower. Obviously, people jumped in to try and sell this morning, the moment the market opened up, and that is what's forcing price to push lower. However, price eventually reached a valley, came down to a point, and then failed to push lower. So what happened was price started to attempt to retake all of this downward action that we had, and then when we had another attempt to try and push price lower, it failed. We had a secondary attempt to try and push price lower. It failed yet again. And then we started having this volumetric reaction, taking or at least creating the high of Tokyo. so far. So we have the low of Tokyo down here. We have the high of Tokyo up over here. All right. Then as we exited Tokyo, we started to... You can basically say this order block here is an established area. It aligns with the Tokyo high as well. So I wanted to see a similar reaction to what we had here. I wanted to see this so that I could sell price back down again, trying to reach this order block over here. We didn't get that. What we had was micro order flow, micro structure. We had created a high, which is what this was. We tried to push lower, and then we created a low. Well, you could almost think as this whole section down here as a different order flow as well. This can be a low, higher, high, that kind of like thing. But I try and use the most recent structure. So just that section, basically. All right. So this was the high, this was the low. We tried to sweep the high. We just wicked above the high on the 15 minute. And then what we created was a higher low. What followed was a push up. So I went down to the 5 minute. Even before we had this 15-minute candle sweep, I was already on the 5 minute because we'd already established a higher low. So what I want to see now is I want to see the high broken, closed above. In this case, we got it on this candle over here. So if I move this line all the way back, you will see that it is higher than the order block. That was the wick. But it's also higher than the Tokyo high as well. So price closed above the order block, and it created a new high in the process as well. So what do we have here now? We have your very typical straightforward low, high, higher low, higher high. Simple, straightforward. So what am I looking for now? Now I'm looking for price to attempt to push lower, because remember, we've swept now. Now I want to see it try and push lower and fail and then produce a new bullish candle. So this is what happened here. We swept the high. We closed above. We tried to push lower. We made another higher low. And on the close of this candle, so basically new bullish structure with a slight pullback and a reinitiation of the upward trend. This candle, this bullish candle over here, is all that I'm looking for to enter. I entered. I have a static take profit and stop loss. In this case, for today, it's a 1 to 2. Normally, I go 1 to 1. The reason why it's a 1 to 2 is because we have this gap. I want to see more of this gap filled. So a 1 to 1 would have just been above the Tokyo high, which we've already swept and tried to push down lower. So discretionary, basically, but discretionary is a 1 to 2. And in this case, I went into drawdown a little bit, wasn't too worried. My stop loss was at the low of this swing low over here, or the higher low that we had. I would have wanted to be in on the close of the candle, give or take maybe a few pips above that, or maybe even a few pips below that, so that my stop loss could be below this swing over here. That just psychologically and mathematically to me makes more sense to have it slightly lower, so that in the event where price does come back down and kind of like just does a break-even bounce on this low to try and push up, I would not get wicked out. Whereas where this entry point was, if this candle pushed lower down and just kind of wicked me, I would have been furious. However, little bit of a U-turn here, and then a very strong bullish candle. And on this strong bullish candle, I'm done now. I'm happy. I can have it go to TP. I'm not going to be worried. This is a strong attempt. What I could have done, I could have maybe LJ would have said that would be the better way to handle it. Would be to have my stop loss be just below that point and then leave some of my order on, take half off, and then have the rest kind of like run until I get to a point like this where we start showing a bit more downward pressure and then close out a trade. Oh, speak of the devil.
Good.
Hello.
Happy Monday. Sorry, guys.
What's
I
up,
got
LJ?
stuck in traffic for a
Good,
bit.
my mom.
Pouring down.
How's your weekend?
All day.
Is it?
Yes. Yeah.
So you
Raining,
guys are now in wet hell.
Yeah, we are. Yeah, we go from like scorching heat to just downpour and humidity and like.
I was literally about to say, I bet it's humid as hell right now.
Yeah, the aircon keeps turning off because it keeps like breaking itself because there's too much humidity. And like the little outlets up the top are getting filled up. So, yeah, it's really annoying. But
yeah, I had the same last week. I had to turn the aircon off all day and just let it reset and drain itself. It was a nightmare. It got so hot. Is it mosquito season yet? Like, do you get like really bad mosquitoes there?
Normally we do in summer. We haven't had it too bad. It's mostly been hot. We haven't had too much rain. We've had like portions of heaps of rain and storm, and then just like dry for quite some time. So actually haven't had too many mosquitoes this time around.
To be fair, we've had none yet, but it's not. We're not due mosquitoes yet. It's like my missus said to me. Yeah, I know. I left the balcony doors open just to get some like nice fresh air in, and she comes back from the shop and she's like, "What the hell are you doing?" I was like, "Nothing." I like in my head, I was trying to register everything I could have done wrong. I was like,
yeah.
Turns out, leaving the balcony door open was one of those things I did wrong.
Yeah, anytime it does rain, I always make an effort to go around the sort of balcony area out there and tip out any like puddles of water or brush them away. So that because the worst thing as well, if they get inside, it's the female ones that buzz, isn't it, as well? And you go to sleep and you
can hear it,
and you're like, oh, go away. And then you just feel like it's terrible. But yeah, had a good weekend. It was my partner's sort of birthday party thing yesterday. We had like it was a Barbie themed party.
It was.
So I went as Ken. Beach.
You went as Ken.
Yeah.
Oh, Barbie! I thought you meant Barbie as in barbecue.
No. Barbie.
Oh,
yeah, like
Barbie as in
Barbie.
fair.
Yeah.
Okay, sorry, my bad. Oh, okay.
No, barbecue yesterday would have been terrible because it was raining all day yesterday.
That's what I mean.
So yeah.
Have you got pictures?
No.
I think we can see some pictures. Can you like?
There were a bunch. I don't have any myself, but I can see.
No, I don't care about your missus. I don't want to see her. I want to see you dressed as Ken.
I didn't go too crazy because I don't have too much sort of. I don't exactly have
Ken clothing.
Outfits. Yeah. I sort of just went like white like pants or whatever. Eventually swapped into like sort of board shorts because it was too humid, and then like a kind of floral beachy type shirt thing, whatever. So I was rugged. Yeah, I had that from a while ago, and I think that's like the third time I've ever worn it. So it only comes out for like fancy dress stuff. But I guess I was like rugged beach Ken. So I still had the stash and everything, So yeah,
Aussie Ken.
It was good fun.
G'day, Barbie. G'day, Ken.
Yeah. And then I was just popping beach the whole time, right? Yeah, beach. What do you do, beach?
Mate.
It was good.
Have you been in any trades today, LJ?
I have. I'm pretty much done for the day. I cleaned up the gap on Aussie dollar this morning because I was up quite early, about 6 a.m. my time. It's now almost 8. Normally I'm asleep, but yeah, slept over there last night. Partner had to go to work, so I got up early, wandered off home, and then saw the massive gaps and saw futures for oil up towards 120. I was like, okay, right?
All right.
Yeah, so waited till about
Looking good.
2 hours or something after market open for us to find a base. And then I didn't want to trade. I don't want to touch longs on like euro dollar or the pound right now. Much more risky. So took the Aussie dollar trade. Got in at, what did I get in? It was like 56 or something. 54.3. And then closed out at 70.
On Aussie
So
dollar.
69. Yeah, Aussie dollar. 69.
69.53.
54.3. And then got out exactly at 70.20. So cleaned the entire
69.
thing top to bottom.
Wow. Like mine doesn't even give 54 as a low point. On so you took the lowest of lows.
Yeah, 69.54.3. It wasn't the lowest of lows. It was I think the absolute low was
No, I meant like on my chart.
sorry, that was my stop loss, my bad. I got in at 65.
Oh, fair.
Yeah, sorry.
65.
That was the stop. Yeah, 65.9.
So 65.9, and your stop loss was at
54.3. Yeah.
so right
so basically
there.
54, yeah.
And then you
And
aimed
that's
for what the
I got out exactly 70.20 after that run up.
70-20 flat.
Yep. 70.20
Oh.
0.00. Yep.
Dude.
And that was the exact candle I jumped in as well.
I'm still 90% sure that you insider trade.
I mean,
Dude, that was a juicy trade of like 5.3% on that.
Hella
So
trade. That's
done
mega.
for today. Yeah. I also closed out my
you
oil
basically
trade from
went,
last October on my personal account
Oh, nice. You close it, dude.
at 118. Yep.
Yeah, nice.
On WTI, so on West Texas.
So you basically took the low of, when was this? The 3rd of March. You waited for price to come back down to that price point over here. You waited for what exactly? You waited for this candle over here to
that candle, and
basically
then
a break.
yeah, and then also watching because I mean we had Nasdaq still coming down, we had the euro, the pound, so I waited for all of them to sort of start basing. Aussie started basing a little bit earlier. Euro jumped up a bit, then had another candle lower, but couldn't make a new low, and then we got that candle printed on the Aussie, so jumped in. It's good.
Myself personally, if I had to trade that one, I would not get in as low as you do, dude. You have like crystal ball vision.
Like I do, like I said,
sometimes, yeah.
Yeah, I would definitely have waited for this high to be swept,
Yeah.
and then for a higher low to be printed, and then based on that, I would have waited. I probably would have gotten in on this candle's close.
See, I've seen this with gaps on Monday morning during Asia so often, right?
Yeah.
That's also why I did end up getting up, because I was watching, even though I was busy the whole week, did have, was sort of checking in with some of the headlines. I was like, okay, especially after I saw the oil futures, right? Before market opened, I was like, okay, we're going to have a big gap. Big gap. And then, yeah, we always
literally gapped on everything.
Yeah.
We gapped on everything.
Yeah.
It's crazy.
You have the first little, it like jump up, then you come back off, and then coming into like full market open of Australian stock market, ASX, everything, you tend to get that climb back. So, yeah.
This is Martin's trade, by the way, on NASDAQ.
Like from today?
Yes, like Martin entered it earlier today.
Nice.
His stop loss is now at 24,332. So the stop loss is roughly around here.
Okay. So
That's not bad.
okay, so he's brought the stuff up. That's a good trade. I like that. I think
He's
where's
locking
the-
up at 1 to 2, I think, almost.
because
Yeah,
that
he
would
was
be
going for-
roughly at the top of the gap, wouldn't it?
So the top of the
Roughly.
gap is here, is at 24,635-ish. But he's aiming
Okay,
a little
yeah,
bit lower. He's aiming for 24,530,
Yeah,
which is a
that's
good
fine.
one. I had a good little buy trade here. Why is that's not supposed to be there? This is supposed
I
to be.
like that a lot. The current options price for today is 24,607.
So
So-
up over here at the
Yeah.
open.
Yeah.
607 is down here. Yeah. Which is not bad. Dirk, hello. Guten
How you doing,
Tag.
Dirk?
How are
Hello
you?
there, Dirk.
Good morning, good evening, afternoon. Every time zone is present here once again in our stream. How's everybody doing?
Doing well,
Everybody in oil
Well.
shock already? Oil shell shock?
Beautiful. I closed out my swing
you were
trade from
trading it. Okay.
October.
Not bad, not bad, not bad.
Yeah.
Not bad.
Because with the, I mean, I'd love to keep holding it because oil will stay up, but I mean that kind of price appreciation, I think, pretty good there.
I'm not so sure. Maybe that was a bit of a blow off top already. Actually, something
Yeah.
I spent yesterday and today, like looking into, analyzing a bit. My routine, like what is driving the market currently, which obviously is mainly the Iran conflict, plus the private credit sector, which has come,
Yes.
in my opinion, a little bit under the radar. So definitely something, LJ, you and I maybe can talk about in our 2 hours. There are some chances also which are flying under the radar. Talking not about daily trades, talking about like midterm, longer term themes that might keep us busy a little bit going ahead in 2026. So lots of stuff going on, lots of things to talk about. I've been completely keeping my capital sidelined when it comes at least to swing trading and day trading today, because I don't like markets that hang like on every tweet and every interview or word said, especially when it comes to Donald Trump or in general. So technical indicators, in my opinion, tend to not work very well in settings like this. But obviously trades like, Richard, the ones you showed just now, the ones LJ you are doing, I'm sure William also had some nice trades already today, show that it's still possible, of course, to earn money.
Indeed.
Yeah.
Definitely. Like,
All
I
right.
mean, volatility brings opportunity.
Yeah, absolutely.
Yeah. Yeah, it does. All right, gentlemen. LJ and Dirk is going to carry on this next 2-hour segment. Myself and Sir William Davis, the account conqueror, will be back in about 2 hours. Do be kind to LJ and Dirk, please.
I'm sure they will.
Yes.
Have people not been kind today?
No, just
That's actually been really nice.
Don't
they've been
tell
very
me.
nice.
Don't tell me
Yeah.
the trolls are back from last week.
nah. All right,
Yeah,
we'll
last week
see you in
we
2
had some trolls
hours. And then we will still have our giveaway on the 11th of March. That is on Wednesday. So everybody that's in here today, we are doing our 100K giveaway. We're giving away a fair few accounts. And then if you guys notice here in the tippy top of the back layout, there where it says now subscribe with the bell and whatnot, if you pay attention there's going to be a little sneak peek at something that's also new that's being added to the Fivers this week as well. More on that a little bit later. All right, gentlemen, I'm out. See you guys in 2 hours.
See you.
Errors.
That sounds so
See you guys.
exciting. My God. What to do? I cannot wait to see what will be going on there. Good. Before we actually start, let's get the most important thing out of the way. We have to talk about F1, obviously.
I knew it.
Man, what a
Dude.
race! That was awesome. I'm so happy I got up at 5 a.m. to watch that.
Yeah, I heard it was really good. I only caught the last like 8 laps.
Oh man, you went in for the boring last part of the race.
Yeah, I had my girlfriend's, my partner's birthday thing. So I literally brought it up on my phone trying to like check.
Sorry, what? Oh yeah, happy birthday!
I'll be over there.
Yeah, but I mean, that gives me hope. Like for the season, that was insane. Like 120 overtakes, where the last record was like 60 or something like this. So especially the first few laps, was like, what is going on? But like Leclerc and Russell going back and forth, insane.
Yeah, so I heard. People were saying it's kind of like Mario Kart or something. Little power ups.
Yeah.
Because obviously everyone's been complaining about the new regs, but I still have to rewatch the whole race because I want to, because it apparently was really good.
Yeah.
I saw a bunch of people DNF'd. I also got, when I was on the way to her place, I saw that Piastri in the car before the race even started. I was like, what?
And it looked so funny. It's like really, he's like driving and suddenly bang. It's really like driving on one of those bananas when you play Mario Kart.
Yeah. He was saying suddenly he got a bunch of extra power. You got 100 plus kilowatts. So that's what, like 170 or something horsepower, something just came out of nowhere from the battery and he spun out. So I saw Max as well from 20th up to, what was it, 6th?
Yeah.
You finished? So classic Max drive. Yeah, very good.
A bit sad for Hadja, who was really doing well, but then got this oil pressure or hydraulic thing going on there, and
is that what it was?
It's really promising, I have to say, for the rest of the season. That was very, very fun.
Good. I like it then. All right, very keen. I'm going to have to rewatch it, or not rewatch it, watch it in the first place, and catch up then. So keen, very good.
Very nice. Formula One is back. LJ and Dirk are happy.
Dude, I just see you've changed your profile photos. That's perfect, dude. Oh, that's perfect.
But Toto Wolff was looking so smug. He was like sitting there.
Yeah. I definitely saw that meme as well of the Toto like.
Yeah. Oh man. Good morning. Wow. Okay, great. So let's get into market. I don't know exactly what was talked already about. So I spent a little bit yesterday, today looking at oil, especially what you guys might know is like not one of the assets I trade because I tend to lose money whenever I try to trade oil. Nonetheless, like from a fundamental perspective, it's of course important to have an eye on it. Especially I wanted to see like how does the current crisis actually compare to past oil crisis. Why? Because like this we can see like is everything different this time? Like people always like to say, this time everything is different, when in reality
famous last words,
especially when you're a trader or crypto investor, and especially the latter. And but also to see what is actually different. There are some things that naturally are different because the world has evolved. So what I wanted to see, this price a little bit outdated, of course, up here already when I compiled the whole thing to kind of like an HTML document to be able to present that in a more appealing way than just me, talking and doing my crude drawings on charts. And so one thing that is special, in my opinion, is not so much in terms of how the price reacted up to now, because this is pretty much in line with what we've seen from past oil crises, all the way back to 1973, the Yom Kippur, oil embargo, to the last one, which was the Russia-Ukraine invasion. Now, what is interesting for me is always like how long did these crises actually take to resolve itself? Because like this, we can kind of make an assumption, okay, what can we expect? How long is this going to basically keep the markets busy? And there's like one thing I noticed which is that back in the 1970s or even 1990s, so during the Yom Kippur War, the Iranian Revolution, the Gulf War, where Iraq invaded Kuwait, I don't know how it's pronounced in English, and these were all crises which took a little bit longer, between 3 months and 8 months, the longest. Now, if we look at the last 3 times where we kind of had an oil crisis or oil prices at least spiking, which was the commodity super cycle after the financial crisis in 2008, which took 12 months, so that was quite long. But especially at the Russia-Ukraine invasion, that was only 2 months. Now we are 8 days into the conflict, or the 9th day it is today, and we've already seen prices up by about 55% if you count the top we saw today at $115 in the early futures trading session. So in terms of what we can expect from price move up, we took already kind of away what we did during the beginnings of the Russia-Ukraine conflict. What is interesting, in my opinion, is like how long was the time until the peak was reached? So how long from the beginning of a crisis did it take oil until it reached the absolute peak? And there's a pattern in there, in my opinion, if you want to call it a pattern, because luckily we didn't have hundreds of oil crises, but we can have statistically relevant data. But one thing that stood out for me was that in the 70s, it took longer to peak than it took in recent crises. So in 1973, it took us 3 months, 1979, 8 months. The Gulf War, which is interesting, just 2 months. And in the Ukraine week, it was very fast, just 2 weeks until we reached the top prices in oil. After this, a recovery started, which in case of the Ukraine war was also only 3 months. Also here in 1990, it took 6 months to recover from those highs to more normal levels again, whereas in the 70s, 5 years, or like this one was actually difficult to measure because there was a new baseline for oil after that, after 1973. So what I mean by this and why I think that is important is it kind of shows like the way the world nowadays works, in my opinion, because of the interconnectedness of the world, globalization. Most of the countries that play larger roles in the worldwide economy, and of course, somebody like the USA is the largest economy still in the world. They have an interest in getting conflicts like this done because, of course, they want to keep the oil price not too high. They don't want those trade routes disrupted for too long. What did I just say? It was like $300 million or $400 million a day the war costs for the USA. Crazy amount of money. So, of course, you don't want this to go on for a year or something like this, or do like a second Afghanistan, which goes on for many, many years. You simply cannot afford that without giving away a large fraction of your GDP growth or your total GDP, especially if you have already a strained household like the USA has. So from that, I expect, and this is just my personal opinion, of course, that this should be resolved rather quicker than dragging on for months and months and months. Now, what is different this time, and this is very interesting, is this is the first time that we have like a choke point, the Strait of Hormuz, that is like basically disrupting global trade or global oil trade at least, because 20% has to go through this. But I think it doesn't, at least when we look at the USA, for Europe might be something else, of course, but if you look at the USA, the difference is to what we saw in the 17s is that the USA is 70% less energy dependent on other countries. They are, in fact, the largest oil producer now in the world. And I think this is not even counting in Venezuela, which probably makes them complete independent. But being dependent on other countries' oil has dropped since the 70s by 70%. So that's a lot. And what also changed since the 1970s is that almost all countries that play a major role in global trade have their own oil reserves now. This is something kind of like a learning from especially the 1973 crisis, that countries build up their own oil reserve to kind of be able to buffer. The only risk really that I see at the moment is that we could see infrastructure, oil infrastructure in the Iran being destroyed, which obviously cannot be rebuilt from today to tomorrow. This is going to take a couple of months, so that could delay those normalization of oil price a little bit. Maybe some of you guys that were around during the first Gulf War already can also remember those burning oil wells, that were ignited when Saddam Hussein basically had to give up territory, kind of like the strategy: if I cannot have it, nobody else can, so I might as well set it on flames. So that at a larger scale, we have to say, is a little bit of a risk, in my opinion. But other than that, I think what we saw today, and especially what we saw after the spike today, up to 115 US dollars per barrel, that it's like being bought down already. I wouldn't be surprised if this week we see rather quickly gap close down to $92, honestly speaking. It's always hard to predict stuff like this. When will a gap close like this come, obviously, because like I said in the beginning, it depends a lot of like the media narrative, also what is said by the individual parties within the conflict. So if Israel or Iran or especially Donald Trump says something unfiltered again, that might impact the markets largely. But overall, I would be surprised, honestly speaking. I would actually be a little bit shocked if we see an escalation up to $150 or $200 per barrel with the state of the conflict we're in right now. As I said, if we hear stuff like there's infrastructure massively destroyed in the Iran, or the blockade of the Strait of Hormuz keeps on going on, it might be a different story. But also there, I don't know if that number is true. I read something like that Israel and the USA destroyed already 74 ships of Iran. You can only blockade that long, right? And for sure, they also don't want to do something like a invasion with infantry, because if I'm not mistaken, Iran is sitting like on a military capacity of 400 or 600,000 soldiers. So you don't want this kind of Afghanistan all over again, in my opinion. I don't know how you think about it, but I have kind of a feeling we are seeing a bit the peak crisis move slowly.
Yeah, look, so let me jump over to my chart. 1 second. So similar deal. I think I brought up this chart last week. So this was from last week's price action in oil. Similar deal, looking at how long this sort of takes to jump back to median prices or get back to baseline after crises. And then, so this is the average of all oil shocks post 1980. So this, obviously, orange here is us right now. This would probably be somewhere, with today's jump, actually, at peak, it would have been a bit
over
higher,
that already.
40%. Yeah. So it definitely seems as though we've had a bit of an overshoot, to be honest. Now, it's not necessarily a reason to short oil, I would say.
Please don't translate that into I have to short now.
Yeah. If you manage to get in at some of those tops today, I mean, we've already dropped quite a bit for that exact reason, right? But they definitely will stay elevated for some time. I do also agree with you with how much is centralized around the area, both with oil. There's also other things with like fertilizer and things. So I think we'll stick to oil today. I've got a little thing for the fertilizer stuff we can talk about maybe Wednesday, just so we don't jump around a bit too much. But it also becomes a problem of food. So in short, about 40 to 50% of urea, which is used for fertilizer, passes through there as well for the globe. So the longer this goes on, it starts to reduce those transfers. I think every week it's about 1.5% that goes on of global fertilizer stock. And then obviously that's going to have not just a oil energy shock, it then becomes like a food crisis, and it's like food security, all these kind of things. So I definitely think it will have to be shut down early. And then the thing is basically if, you get to a breaking point with other players like China coming in and putting their foot down, right? And I think if it does somehow manage to kick on for some more time, China will eventually come in because they have to and sort of quell everything, right? So, I mean, these were all the sort of headlines I tried to gather from the weekend as to why we've sort of kicked off, right? You can see, Trump has said, Iran has said if Trump wants escalation, we'll give it to them. Israel has started attacking Iranian oil infrastructure, hence the jump in oil. Iran is saying they're prepared to go for another 6 months. I don't think that's really even possible, to be honest. Trump saying they'll fill up the SPR, which is the Special Petroleum Reserve, at the right time. So right now they're thinking about unloading it. They were starting to stock up at those low prices. But yeah, we've had a whole bunch of headlines constantly out. So it's just further escalation, and hence we've seen that gap in prices today across the board. So you can see, read through them if you want to pause it for a second and read through them all. Be here for a while if I go over each one. But you can see it's constant bits and pieces of escalation across the board. And then, Russia getting into attacking some of the Ukraine gas production as well. That has the effect on Europe and EU sensitivity to energy shocks. Now, fortunately, like we talked about last week, they're out of the kind of very gas-heavy cold winter demand, fortunately. Otherwise, I think natural gas prices would be much higher. They're definitely still up on a relative basis from where we were. But if we go back to like
the Ukraine war,
Ukraine, Russia, we're nowhere near those kind of levels or that kind of price action at all just yet. So that is one thing keeping things stable. But I definitely agree. It sort of seems like it has to have a pretty early endpoint because of other wider factors and other countries that will also, start putting the foot down. So, yeah.
Which is also in line with like what the world nowadays feels in general, in my opinion. That things like crises flare up faster because everything is so interconnected, and through information being available to almost everybody in real time, price reactions are also naturally faster than it was. Actually, when I grew up, when I started working as a trader, things were much slower. You used to have like a shout box on your trading terminal where there was somebody just reading the news, and once something came up or heard something, you would like broadcast it to everybody, so you would audibly hear it from the shout box. Unthinkable nowadays, of course, luckily, because I always found it very disturbing, and I was like, oh my God, this is like, who's screaming at me? And so that is faster, and which leads to an escalation of prices faster. This is why we see very often these immediate volatility spikes and these large wicks to the upside and downside, like in oil, for example, on the daily candle, this large wick to the upside. But on the other hand, on the flip side, it also means that a crisis is faster resolved, at least when it is in the attention of the media. There are things, of course, and one of those, in my opinion, is the private credit sector crisis we see at the moment, that are kind of lingering underneath a bit because they don't have immediate effect on most companies, because those are usually not companies that are publicly traded, that are clients of companies that give out those private corporate credit loans.
Yeah, so we've definitely had and we have been talking about it a little bit. Like prior to the shock, obviously, the main reason we had the big fall off. But yeah, I did see was BlackRock, wasn't it? They closed
9 point
Yeah, for
something
the-
percent lower.
yeah, because they closed their $26 billion private equity fund because of too many withdrawals.
Yeah, that was, if you don't mind, and I switch quickly back
Yeah,
to
go for it.
my screen because I try to kind of sort this into a hopefully more visual, appealing way. There are actually three players, in my opinion, that are important because they are on very different scales of the spectrum of a crisis. The first one is BlackRock, which were a private credit fund called xauusd, which were ironically just purchased, I think, was it like 2022 or something, for I think $12 billion back then. So quite an investment from them. The fund size is $26 billion. And what the problem now, and you read a lot of this on social media, like this is like a super big thing at the moment. And it's like, the starting points of everything once again collapsing, the whole world is coming down. It is not, spoiler alert. But I want to kind of explain what is going on there. So BlackRock has this private credit fund of 26 billion US dollars. 19% of that, roundabout, are private loans to software companies, which have come like a little bit into the mangler, not a little bit, quite a lot, because of AI, because of companies like OpenAI, Anthropic, rolling out tools that can basically replace a lot of the products by these companies overnight. So we've seen massive selling off. And so there's a proper risk that these, at least a large majority of those 19% of software portfolio from the 26 billion are under the risk of, never being able to paying those credits back. This has led to investors wanting to pull out their money out of the fund. And on social media, I read something like this: there were like 9.3% redemption demands, but they only paid out 5%, which means BlackRock is broke. They cannot satisfy those payout demands anymore, which is not true. Within their statutes, since the inception of the fund, they have that there is a monthly payout cap of 5%. Why is it then? Why does it make sense? Because we're talking about very long-term investments here internally. So when you give a credit out to a corporation, it's not like for a week. It's usually for a year or maybe 3 years or 5 years at elevated interest rates when in comparison to banks. So that's their business. And of course, they cannot risk that suddenly a 50% of the investors come and say, oh, we want our money back, give it back tomorrow. Then the whole thing was collapsed because they are non-liquid asset. As I said, those companies are not publicly traded. You have long-term credit agreements, so you cannot get out of them on a daily level. Thus the 5%. And but still, of course, for people, it feels a little bit like 2008 when people started running to banks to withdraw their money, and the banks couldn't satisfy that as well because they only hold a fraction of cash out of everything they owe to clients because they are also long-term invested and so on and so forth. And when you get those bank runs, which can bankrupt a bank very fast. And this could have been the case here if they wouldn't have that in place. So as long as they next month satisfy the 5% again, it's actually good. Then we kind of have, I first want to jump to the other spectrum, which is Blue Owl Capital, which are invested by over 80% in software companies. So they are really getting the grunt of it, so to say. And they have the problem now that they had 15% of their client base requesting payouts, which they couldn't satisfy. But instead of injecting their own capital or stating like, hey, we have a cap, guys, we're going to pay out 5% now, the next month 5%, they basically said, no, we give you an IOU, It's like a piece of paper saying, oh, I owe you $100 million or whatever. Which, of course, has led to many people, including myself, by the way, thinking like, there is more going on behind the scenes that we are probably seeing. There are much, much more trouble than we're seeing, especially if you see on the other edge spectrum again, a company like BlackRock, which wrote off a loan just now of $25 million that was last month still valued at 100%. Now it's suddenly zero. Yeah. So you keep on thinking, okay, this was for a software company. What if like Blue Owl has this for 40% of a whole portfolio? Would basically destroy them. They are not as largely leveraged as the banks were back then in 2008, because you could translate this also to like the same thing happening back then. It was real estate, private real estate. Now it's corporate credit. It's a bit the same, but not quite. Leverage back then was higher, and but still, like blue O capital is really a danger. Then we have a middle ground here, which they played it the smartest, in my opinion, which is Blackstone. Do not mistake it with BlackRock. Blackstone, who have the largest private credit fund with 50 billion. And they also had the 5% withdrawal cap, but they raised it to 7%. And on top of it, the firm itself plus its employees injected another $400 million of capital into the fund to basically calm down the market. Why did they do that? First of all, because they probably know, like, our business is still solid. And they went to something like this in 2022 already with, I think it was a real estate fund or something like that called Braid back then, where they learned, luckily they learned out of this. So it's really interesting what is going on there. Because on the surface now you could say this is all because of AI. It's not. It goes deeper, of course. There's like a fundamental fear by many investors also when it comes to geopolitics. So we kind of see the same like we see on the stock markets right now. People sell because they're afraid. They want to flock into safe haven investments, for example, gold. We see the US dollar becoming stronger again, especially versus the euro, of course. But I think this whole private credit sector is kind of, because it's like a shadow bank, in my opinion. Like they do the business that the banks do not want to do anymore, because regulation has become so tight after 2008. So it was kind of out.
But they do still do it, right?
They still do it.
They give it to another bank, and then the bank gives it to.
Exactly. You have those circle jerks, I was about to say, of lending going on. And sorry, pardon my English, guys. And
shadow banking.
Banking, it's called. It's very big. It's also very big in China, by the way. Shadow banking for decades actually already, with more corruption, in my opinion. But hard to get numbers from them, obviously. But it's interesting to keep an eye on this, because this for me is an indication. Right now, it's like exaggerated, of course, but like the fundamental thing about this is that we see a transformation of the software corporation landscape, of the software as a service landscape, where we suddenly see like, well, people, smaller companies can very quickly design their own software or copy software that costs you thousands of US dollars every month, or hundreds of thousands in some cases. Look at something like SAP, for example. And they can design this rather quickly by themselves, for example, through tools like Claude Code. And this is just the beginning. This is the first sector where we see it. So be prepared that eventually we're going to see this on other sectors. How this then translates into the whole economic landscape. Is this going to lead to like high unemployment, or are people eventually going to find a job somewhere else? This is a whole different story. But for me, and this is why I really try to take the time to look more into this in depth, is this is like where we see the fundamentals of the first beginnings now of an AI transformation paired with economic uncertainty, for sure, that is going to give us maybe the blueprint for what is going to happen in other industries soon.
Indeed. I was thinking about this as well. And interestingly, like if this conflict situation goes on for longer, higher energy input prices, if they stay at the kind of increased levels that we're seeing right now, that could also start to curb AI expansion. Because the costs get astronomical.
Yeah, absolutely.
Because right now we have a bottleneck of energy in general. Obviously, those feeder prices go way up, and your whole training of models is gonna kind of collapse. Because does OpenAI, like, what do they do?
Yeah, this is ironic. I mean, we didn't talk. We talked about this before, but not like in detail. Yeah. I thought like, okay, what are like the hotspots of crisis that are kind of under the radar at the moment? And for me, we talked very often about this, the Fed independence crisis, with Kevin Walsh being the successor of Jerome Powell, and AI power crisis, because 40% already of the energy demand growth in the USA comes already from AI data centers. And this is just the beginning again we are seeing here. So oil prices elevated above 100 US dollars for sure are going to put the brakes on this or make it even more expensive like it is at the moment. I mean, we are already talking here about trillions of US dollars of investments that flow into this every year.
Yeah, I'm very curious what the Fed does next, because obviously we have the energy input factor for inflation. There's potentially the things with fertilizer and such, which will then lead into food prices. Now that will take a bit of a delayed effect. Same with, I mean, we're seeing energy like oil, like petrol at the bowser already just straight up.
Yeah.
Right? Now, technically, those prices haven't fully flowed through because of supply, but look, they'll take any reason to increase price, obviously. But for the Fed, this makes it very difficult because potentially, if you do see some, like if this is a bit more prolonged, so it's not the kind of 3, 4, 6 weeks thing. Maybe it becomes 2 months, right? If it's 8 weeks, markets and investors will start to completely shift their time frame because people start to price it in as though it's like 3 months, 4 months, that kind of thing. And then potentially that crunches AI expansion to a degree. And there's obviously a flight of capital back to cash and people holding off on doing deals, etc. Which then means obviously AI is making up such a portion of GDP that economic conditions also come right off.
Yeah.
And same with manufacturing, shipping, all these input prices. That puts the Fed in a really, really, really difficult position because they have to be kind of gambling on how long this actually goes on for. And then you've got the labor market. We had the jobs number last week. Not great. Whether that number is correct, like I was saying when we had the Discord call on Friday, I was saying I definitely expect revisions from the prior number. We only got a small revision. The Friday's number was very negative, and the other components weren't too great either. Now, obviously, you always have that January weather effect. We've had that for a number of years going back. So no surprise there. So I also wouldn't be surprised if next month that number gets revised a little bit higher. But the whole report looked pretty bad, which even just where we are puts it in a very stagflationary type.
Yeah. And stagflation is the one thing you don't want to have as a country because this is, I'm not going to say almost impossible, but very, very difficult to come out of stagflation. The prime example, in my opinion, for this is Japan, whichever they either had deflation, pure deflation, or stagflation. They have been stuck in this since the mid-90s. So it's kind of feels like 30 lost years for them, and you really don't want this. And as you said, it's interesting, those elevated energy prices. If this puts a damper on everything we see in terms of AI development, AI data centers, and so on, it really could have a cascade effect, which leads me to like a hypothesis that could be like, is it maybe good to, play some long trades on more conservative stocks?
Yeah, it gets, I mean, because you've got, obviously two opposite pools. So I was trying to check the FedWatch tool to see where this stuff has gone. If I can jump over to my screen. Currently it's not working. So
they don't want us to see it.
Yeah, can't check that right now. But then do you move to lower rates because you need to stimulate the economy in general, or do you increase rates because you're looking at energy, inflation, input prices, that kind of stuff? They're completely pulled again into separate directions. So I don't know if that then means something from, and you have the underlying stuff of the SaaS software stuff. Whether people now see that as cheap because it's maybe a little bit overblown at this point because there's a lot of assumptions built into the AI story that's going to delete everything. But this becomes kind of a coin flip if investors and the larger market are going to go with the fear angle or the optimism angle.
Yeah, most of the times, short term, they go with a fear angle. I mean,
Fear, exactly.
we see what we're seeing right now. The smart ones are probably going to pick up like good companies for scraps. There's the comparison to the internet bubble back then again, people who started buying something like Amazon back then, Facebook in the early days, not to mention, of course, Tesla and Nvidia. They're sitting on a lot of cash right now, or on a lot of wealth. But I kind of feel like this time it's far more complicated. There are those little cogwheels just turning a little bit, changing the whole picture again. And I wasn't aware of that at this level, that like an increase in energy prices like this will have this cascade effect. I didn't expect that this much, apart from, software as a service companies becoming obsolete. I mean, you don't vibe code something like Salesforce just like this
overnight.
But there is the potential that this will happen. Yeah. And
everything else as well. Yeah.
And it will sooner or later. But it makes it very difficult for us as traders. The difficulty is we have to deal with the volatility. On the one hand, it's nice. I don't like it personally because it's news-induced volatility. It's not kind of natural volatility. Natural volatility would be something like NFP coming out totally unexpected, when the market goes like bonkers for half an hour, and then we see like the fat tail going off again into our normal distribution. And this is the market I feel comfortable in trading. I don't like a market, where at any time, and we saw like in your news summary just now, how fast the news actually come out.
It was very back and forth as well.
Back and forth, when you have like the Iranian prime minister, or whatever he's called, apologizing, then they are sending out rockets again. Then Trump says the war's over. Then Trump says we're sending more troops. So it's like what to believe. And this is normally leads to those large wicks we are seeing. So for me, the strategy is and I'm going to be very picky this week again with my trades. I was last week. Luckily, very picky, mainly traded crypto, which also worked out well. Once again, crypto, for whatever reason, my bread and butter. And but I had like 20% of my usual position size there because of me being afraid, even if my stop gets hit, it's on a volatility spike, and I get executed $500 worse in price per Bitcoin than I usually would have in a liquid market.
Exactly. So we've had very back and forth with, Iran is not going to attack the tangential countries anymore. They've agreed to chill out. Then we get, comments from Trump saying potentially, yes, we could have ground troops going in. We get more stuff hit. Then we had Iran naming Khomeini's son. So basically the same regime is still in place. So that essentially sees it as a fail, essentially. And then at the same time, we get Iran's defense minister talking about a potential ceasefire. And that seems to be what, in the past little bit, has calmed things. And we're seeing stuff like the Eurodollar, NASDAQ, that kind of stuff, starting to rally again and make attempts to close the gap. Now, we did have, Philip was asking around this, expectation on NASDAQ going into New York. Now, the other thing as well, for you guys that aren't aware, the what's it called? Daylight savings for America has now shifted back. So the same thing with any of the US data, it will now be 1 hour earlier than it was prior. The rest of the globe is still mostly in daylight savings, and then we go through a systematic period of everyone lining that off. So just do remember, New York will also open 1 hour earlier than last week. With that, so I would say the options level today is basically where we closed on Friday and that huge gap through there. I'd say there's a reasonable shot that we do close it. But given the dip we had and the drive we've had higher, I would prefer not to trade this. Potentially, I'd even be looking for a top here to short until the situation starts to calm down a bit. It's been a similar deal with things like the euro. So obviously we had this gap from last Monday. We never quite got there. Got up partway and then kept going down. Today we've got this big gap through here, and we are making a fair attempt at moving higher. Though the thing is, if we go and look at so this was, is that the prior? Yeah. So this is what I showed you guys last week. This is the pricing for options for 25 delta risk reversals. Basically, people positioning for price insurance using options to the downside. So we've moved below this 1 level, which is the red line here, meaning they're now negative. Thus, people are positioning insurance for further downside moves. And that was last week. We've come in today and we've seen them absolutely crater once again. We've now seen the opposite for, so this was dollar yen last week. This was last week's one, where we saw almost pricing in of potential consideration of intervention again. Last week, everyone was very much on the case of this will be very short. Now we're going back to it might still be short, but a bit longer than we thought. So we're pricing potential intervention risk with dollar yen going higher. It's not getting that safe haven bid, which typically you would see the yen appreciate. So thus dollar yen goes lower. We're not seeing that. We're seeing a flight to the US dollar. And given that, last week, we've now seen a complete reversal that people are pricing for a higher dollar yen and potential break of 160. So that's also going to mean a bit of chaos as far as those things go, because if this does end sooner and we are up by 160, things like dollar yen will absolutely crater. And we'd also see stuff like euro dollar absolutely fly. And we could have massive, bunch of like stops hit, everything else. Now, if this goes on further, you're looking pretty swiftly at euro dollar down towards 114, potentially even this week. So we go hide all this stuff. So down towards some of these lows back from August, July last year, and then this other key level around 112. Those are the next sort of major downside targets. Right now, you can see we've still got basically a high low from these lows, but we definitely cracked the 200-day moving average tap that we had back in January, right before the big run higher. So today's low is definitely a key piece to watch, but you can see that the market pricing is not in your favor, so keep vigilant. This is also the positioning for euro dollar. So this goes back to the lows that we had around 101.25 up to the peak at 120.91. And this blue line you guys can see right here is basically euro dollar positioning. So up here we had net positioning for the US dollar, right? Then we had the Trump Liberation Day or whatever it was called with the tariffs, everything kick off. And we saw the massive appreciation in the euro. So everyone started dumping the dollar. And like I was talking to you guys the past couple of weeks, we're at 27 billion net contracts, which I think the all-time high is, what did I say it was, 33, I think it was. Regardless, basically, since this situation has occurred, that's basically where we were there with that 27 odd billion. We've now come down to 19.8, right? What that means is there's still a lot of people not positioned to, they're still very long euro, right? So they haven't swapped around to the dollar. So if this does continue, then you'll get a massive exodus and this could fly, which would send euro dollar right the way down. Current positioning, seeing as people haven't lightened up too much, assumes that the market definitely sees this as being shorter. I think that's also exemplified from today's gap. Even though we did have a decent sized gap, as far as the moves in oil, relative to the potential energy shock for Europe, this was a pretty small shift, right? Seeing these kind of prices in oil, you probably would have expected euro-dollar to open much lower and potentially be pressing 114. So I would say the market is definitely pricing as though we will see earlier resolution later.
CME is back, by the way, if you want to
Oh, is
access
it?
that here. And if you refresh.
Maybe not.
Maybe not in
There we go.
Australia. There we go.
Yeah, not in Australia.
Yeah, it's basically for March, for April, we see, the picture of unchanged interest rates. And
I think it's June.
I think Henry mentioned that as well. They are still going to cut rates because they would do what Trump wants, which I pretty much agree with. Of course, at first glance, Kevin Walsh doesn't seem like, the guy that is going to just do what other people tell him, looking in his past, being, as con interest rates cuts as he was, especially after 2008. But he was installed by Trump for a reason. And thus, we see, in my opinion, at least the forecast for rate cuts probably beginning in June. I think he's going to be installed in May, if I'm not mistaken. But actually, in June, still, it's still like over 50%, 62% of unchanged interest rates. It's going to be very interesting. Thus, this is why I also took it into my top kind of potential crisis that fly under the radar. Because the thing is, what I don't like about the function of a central bank since 2008 is the fact that prior to 2008, their whole purpose was to monitor inflation and basically do things to fight inflation or to keep inflation at 2%, not let it go too low. When you want to cut interest rates, obviously, not let it go too high. When you want to raise interest rates. And since 2008, with them buying back bonds or giving out guaranteed for bonds, it kind of has changed into the direction of we need to stimulate the economy, which is not in the core function of a central bank. You could actually argue this is like massively against the core function of a central bank, but it seems to be pretty much the understanding also of many individual board members, especially of the Fed, that they have to do it as well. Hand in hand, really. Yeah. And if that is good, that remains to be seen. After 2008, one could argue for sure it kind of saved the banking sector from much worse things than would have gone down when they went. If that is a good thing long term, that remains to be discussed. But there are also people, including myself, that say like, well, let them burn, and this is the economy. This is market economy, and like institutions who fail to make profits are going under sooner or later. Of course, this cannot go hand in hand with a political will, especially for larger banks, because that means a lot of civilians would lose their money as well, a lot of the population. But anyway, thus the now the new purpose of a central bank to also stimulate the economy. And I think this is something we are going, if we see the crisis further unfold, especially the energy crisis right now, we are sooner or later going to see that until that whole thing bounces into our face again. Because like you mentioned, especially when it comes to fertilizer supply, which is going to have an effect on the food chain and food supply, of course, meaning we could potentially in the last quarter of 2026 or next year see, at least for that segment, energy plus food, a return of inflation.
Indeed. So like these are fertilizer prices. So they haven't gone too crazy just yet, but we definitely had a good 25, 30%.
That's a lot
increase.
already, I mean,
Yeah. And the thing is, we're now going into the crop season in the US in particular as well. So
This is already
definitely
directly going to affect, the food prices.
Yes, yeah, and the same with a bunch of how this stuff is. There's huge fertilizer plants all through the Gulf there in the Middle East because obviously cheap energy. So a large portion of the input energy component is that natural gas component, and now a bunch of that has been shut down. And even if the war stopped today, it would take between I don't know 3-4 weeks to 2 months to get this back online after Qatar and everything has shut off things. So regardless, even if it ended today, there is a delayed effect to actually get things up and going again. So I've actually been a little bit surprised that this potentially hasn't run a bit harder.
Yeah, I think it's also one of those things that's a bit under the radar because oil is the obvious thing to monitor. Then, when you think of oil, you at least also me, I have to admit, I don't really think then of fertilizer, but it makes totally sense.
Yeah, which is one of the reasons I was trying to bring it up because just like you said, I think it's one of the less looked at things. I haven't noticed people sort of talking about this and world food supply and those effects on inflation rather than just the obvious one being oil and gas. So, hence I've got a little thing I'll put together and we can talk about it on Wednesday about some of those numbers.
Great comment, Henry. Fertilizers getting expensive. Like my grandpa used to say, there are two professions that will never die out. One is funeral homes. The second one is everything that has to do with human waste.
Yes, definitely. But yeah, with the Fed thing, I mean, we can see that the numbers have definitely started going up. Yeah. Obviously, that would also be in part with the jobs number from last week. So a month ago, we're at 27% here. 1 week, that's by the basically leading into the jobs number and some of the other data, and obviously the war sort of crisis starting. So, but we are definitely climbing, and I think I would indeed be leaning towards them cutting rates. I've seen a bunch of various people from various banks talking about increasing rates. I'm like, no.
The rest of the world doesn't want to copy the Australian model.
They're not the RBA, dude. Which again is exactly why I hate the RBA decision right now. Makes no sense. The main input piece into inflation, like we've talked about, was the energy price inputs because of government rebates and handouts and that kind of stuff. So it's just silly to increase rates on that. It's a temporal, short-lived type aspect. We do have a bunch more government spending in Australia, which is also leading to input prices being higher. So this is, household spending, government spending has gone, right up. But this is off the back of COVID, and so it's sort of just a contingent. Everyone's doing this, right? So to increase prices like that, but yeah, rates, both the odds and the actual rate has gone up, or implied future rate has gone up even further. So I think we're looking at another 2 rate hikes now priced in towards mid-year, which is just insane. And especially after, this, right? Obviously, we're going to have that kind of energy input shock. Next minute, they'll be jumping it up by 100 basis points in one go. Silly. But with that said, amongst the crisis, I think Aussie is definitely one of the better positioned assets in general. One, you do have this central bank situation going on. We are certainly a bit outside of the whole crisis area and our links to. Obviously, we do have the partnership with the US and that kind of thing, but we're definitely a bit situated outside. We are also the #1 natural gas producer in the world. So with the whole Middle East sort of area shutting down natural gas production, obviously Australia is going to have to ramp some of that up.
Send some to Germany.
Yeah, the unfortunate part is we kind of give it all away for free. So that's the only part that,
One more reason to take it for us.
yeah. Nonetheless, I think Aussie will definitely fare a bit better. So same with the trade I took today. Hence, I'd be much.
Excuse me for 5 minutes. I'm going to get a new shot of coffee. Yeah.
Yeah, that's right. That's all good. So yeah, hence with the trade today, I much prefer to take, if you're trading the majors, something like the Aussie rather than the euro and the pound. The pound also tends to fare better in general, given the current situation and in wartime in general. This comes from other flows from like the stock market and such as well, where they've got like 50% of it into defense and everything. Now, the UK has been brought a little bit into the situation after having some of their bases hit by Iran as well. So we'll see how that goes. The base case right now is still that we will get 2 rate cuts. So there's a number of banks still calling for that. Other people saying we're not getting them because of their higher input prices from the energy shock and potential food price shock, which, like we're saying, people aren't really looking at. But overall, pound will definitely fare better. Euro is going to be the most exposed through this whole situation overall. So definitely be careful trading the euro. Try to close some of these gaps. We may just not get the gap fill at all on the euro. Like even through here, you can see the price action is very much struggling. So yeah, I'd probably lean on sells rather than trying to get a pickup to fill the gap. Obviously, if you got in earlier today during Asia or something, I'd be jumping out now already. So what a time to be alive, indeed, Akram, indeed. Yeah, and like Henry was saying much earlier, yes, US, I think, will cut rates. We brought that up before, talking with Dirk. I'm definitely going to be leaning on that side, which comes back to things like the dollar yen pricing currently, where we're seeing a good run towards 160. This could end up collapsing very hard. And we go back to the sort of pricing in potential intervention as well. We could actually see a much deeper fall through that 152 area when we had the talk of threats of potential intervention in the currency. So those are some things to watch out over the next period. And also, if you find a technical structure up here through the daily time frame and the war starts to sort of calm down a bit, we get that rotation, you could capture a massive trade, potentially like 1,000 pips type deal. So can we look at gold? Yes, we can. So the thing with gold right now, I'm sure a bunch of you guys have been looking at gold, wondering why it's not exactly going up, right? Precious metals and safe havens have been quite in vogue for some time. Obviously, we've had the situations with Trump. We had the Iran situation back in, I think it was June or July. I think it was June, July last year. And we had the prior attacks hitting some of the Iranian infrastructure back then. So that plus the tariff situation, obviously defensives, precious metals, that kind of stuff have been quite in vogue. Now, we've made some massive moves. Obviously, we were, 2,200. That was at the start of, let's go back. Let's have a look, actually. So, yeah, 2,200 was basically where we ripped off from. 2,100 it was. So back in Feb 24, and then we just didn't look back at all. We hit those peak points at about 3,500 last year through Trump's tariff tirade, if we want to call it that. And we've had an absolute massive run since. Now with this, you guys can see we've definitely come off. We haven't really hit new all-time highs. We haven't pushed on despite the war. This comes down to a situation where larger firms, larger players have to cover margin and tend to go back to cash and start to rebalance portfolio. When we're seeing these big drops in things like the Nasdaq, we've seen it across the globe. The FTSE, the DAX, you got the S&P. Everything's been getting smashed. So when they have that, they have to liquidate some of the safer assets that they've had to drum up that margin. Now, this said, I think we're probably about done with the falls. So I would not be trying to further short gold at this current stage. This price action does look a bit limp, a bit soft, but we should have had most of those flows pretty much digested. And obviously at some point, people then get that other rotation into that defensive position once they've sort of balanced the rest of the book, put it that way. So I definitely wouldn't be trying to short gold at the moment. This area, we did have the drop induced from today. Again, it's another one of those liquidation events because of the other huge gaps in other markets. And you can see we've pulled right back up.
Interesting that you say that, because I personally didn't trade it. As I said, I'm keeping away a bit from the market at the moment, but let me quickly switch over. No, it's the wrong screen. Let's take this one and then switch to gold. Like the strategy, swing trading strategy for gold that I've been talking so long about was triggered this morning again. We touched the 200 weekly moving average on the daily chart. And that was exactly the point where we turned around. And as you can see in the past, whenever that happened, basically what's currently since October of 2025, that was a buying opportunity. So it presented itself again. So I'm totally, without having talked about this prior to the stream, on the same line with you, that I think we are for the moment a bit done. Does that mean that we're bouncing back to all-time highs? Not necessarily at the moment, but maybe going a little bit more sideways, lingering around. Also, how's the situation in Iran going to develop? Are we further going to escalate? Are we going to see a moderation? Funny enough, in both scenarios, I see gold going up further, because it's a risk everything asset, as it seems, for the past 2 years. But yeah, I would be on an intraday level careful with shorts at the moment. And more like, I really could see myself actually, if we should see a dip today, which probably we're not going to see, below 5,000 or into that area, to try to take a buy there for a quick 40, 50, 60 dollars per ounce to the upside.
Yeah, I agree. So there's always like pros and cons of trying to short some of the sort of more safe haven assets coming into a crisis, because you often do see that liquidation, right? You guys can also, if you want to take the time to go back when you have a moment and go back to all of the prior shocks, right? Even through COVID as well. Initially, you see gold drop, Ukraine, gold drop, GFC, gold drop. And then after that, you start to sort of take off. So go through each of all the prior shocks, even the taper tantrum. Was that 2017, I believe?
Such a long time ago.
Yeah. All that kind of stuff. So you often see gold drop initially, but then it does start to come back. So both trying to jump into safe haven assets immediately because there is some kind of crisis can also end up being dangerous. As you can see, we've had some pretty good falls, but at the same time, you don't want to further short them. So this is where the technicals will then start to show as though gold is very, very weak, or potentially we're going down, but it's because of that flow-driven dynamic. And then you can end up getting caught out and getting your fingers burnt by trying to sell it further, because technically that looks where the market wants to go. That sort of basket starts to calm down. Everyone's repositioned. Everyone's taken the time to reevaluate portfolios and the balancing and everything, people then want to get back into those quality trades. So
Yeah.
you can clean up a bit. Shorting it can be dangerous. Obviously, you get some big moves, and it can be a bit back and forth because there will be a bunch of flows from various people trying to jump in for that safe haven aspect. But I think right now, yeah, we're definitely finding that floor. And I was going to bring up basically the same thing like you did with the moving average through there on that higher time frame. We've sort of tapped off that a number of times. So
Yeah, that's pretty reliable. Yeah, and I mean, if what you said about euro dollar is becoming true, that we see maybe, this final drop down to 114.5 or maybe even 114 or something. So another strong dollar move by the end of the day. This is going to keep gold dollar, of course, also down. So parts in that consolidation that we're seeing right now in gold is also due to the US dollar becoming stronger. I think that's like a factor a lot of beginner traders try to oversee. That it's not just the move is originating from gold itself, but we are always trading pairs here. So if the second pair becomes stronger in that equation, price pressure is on the first pair, if you want to translate it like this. A bit crude, of course, but...
Then, I mean, silver's pretty much the same boat. I think I've said to you guys a number of times, I think silver pretty much a 65 to 90 kind of price range. We did jump a bit over 90 recently and then came right off. So we're now starting to build, there's almost a channel coming up through here. So I think we will start to sort of price higher, but I don't think it'll exactly break out towards those all-time highs anytime soon. You still have very much the industrial portion of silver. It's not quite a precious metal. So you do get a bit of constraint from that end as well.
I always, just this morning, I was asking myself regarding silver or energy price in general, if this wouldn't be like another reason to kind of kick off bringing forward renewable energies, for example. I really think, like, for example, Germany is biting itself in the butt once again, that we were leading in solar energy back in the days, and then we gave it all up to subsidize coal of all sorts, again. And then we also turned off all our nuclear power plants. Now they want to turn them on again. Whatever, like no strategy there. But I mean, if I as a country see an oil price like at $150 or maybe even $200, who knows? We might not believe it, but doesn't mean it can become a reality if a conflict goes on. Isn't that an initiative for a country to say, we are betting now, we want to subsidize renewable energies like China, for example, is doing. They are massive in that. It doesn't make them obsolete from gold, from oil, also not for a long time, but it helps filling out the picture. Or bringing forward technology like nuclear fusion, for example, which is, as it has been for the past 50 years, on the brink of becoming reality.
Yeah. I think I definitely agree with that. Like you were saying earlier, every sort of country is, from past experience from history, everyone's tried to move closer and closer to some degree of energy independence, or at least longer spans where they can keep going. Now, the US has done very well with that. Other countries are still trying to work on it. And, of course, renewables are a massive play for that.
Yeah.
Obviously.
One word on silver. It's like you guys know, like I just told you, I always like to look at this 200 weekly moving average bull market support bands. Talked many times about this. If you compare now how gold has been performing and like how gold especially has been coming back from its highs. Let me quickly get the right tool here. Sometimes I hate TradingView. I've been using it for so many years and still I don't find what I want to use as a tool very often. So I'm talking about this move down here in gold. Today we reversed at the 200 weekly moving average again. For silver, we are already trading below that. And for silver, if we go below 70, where the bull market support band, if you want to call it that, for silver is trading right now, then we are really in trouble, in my opinion, because it shows right now a weaker momentum. So gold is starting to outperform silver by quite a margin. You guys might have, you remember, like, what was like 2 months ago or something, when Jonathan was still streaming with us, we were talking about a potential gold versus silver trade, for example, where I said back then normally they should kind of return to the equilibrium, which would mean go long gold and short silver. That would have been a great trade by now. But why am I saying this? Is not to brag. I'm saying this because it shows how or it shows a methodology how you can judge if you compare two assets that are kind of in the same sector. So you can also do that for stocks, for example, or currencies, to quickly identify which one is the weaker, which one is the stronger one at the moment. And if you're looking for a long trade, you should then prefer the stronger performing asset, because you want to go with the trend. And if the trend continues, it's probably going to have the better momentum to the upside as well. You don't need to do correlation analysis for this. Can do a quick check just with a couple of moving averages on that. We have somebody, Selamat, Indonesia. Welcome.
I might have to jump up just for a sec.
Sure.
My housemate's locked himself out, so
Oh.
I gotta go let him in.
How fortunate.
So, sorry, guys. Give me a sec.
See you in a moment. Oh, man. Yeah, hi. My wife is from Medan, so of course I have a special connection to Indonesia. Nice to see you. And waiting email to buy my first challenge. So if you don't receive an email, first of all, check your spam folder. And other than that, there is a chat functionality on the homepage of the Fivers where you can chat with our customer support in real time. And once you select something like, or write something, hey, I want to talk to a human being, you will be helped very quickly. There might be some waiting time sometimes, of course, because the customer service representatives might be busy, but eventually they will help you. But first, check your spam folder. Maybe the email landed in that. All right, good. What else can we look at? We were talking about dollar yen earlier. So let's quickly switch to dollar yen. As LJ said earlier, kind of picture is changing again. So my projections and crude drawings from the last time we looked at this were not correct. But we are approaching a level right now, if we really just want to simply look at technical aspects, where it might be interesting again to look for a downside, in my opinion. So we had this one, which was broken. Interesting here how it was broken. No, when I mean broken to the upside, we had one time, two time. When we broke to the upside, came down and exactly reversed at it again. Something nice, no? If you see some stuff like this on a daily time frame, that works very well, very often. It's something I like to play with options. But in general, we now have this kind of zone here, where things should not necessarily, as LJ said, it always depends on what is the central bank going to do. I'm talking about the Americans. I'm talking about obviously the Japanese central bank as well. What are they going to do? But naturally, I wouldn't be surprised to see prices of 160. But long term, those would be prices, for example, in swing trades, that I rather would short than going long, because there's a natural stop that you could place, for example, up here. So should we really, I'm saying, should we go up to somewhere in the middle here, let's say 160.30. And you could have, in case we really continue to the upside, stop somewhere at 162.80. And a natural target of, first of all, the bull market support bands and the 200 weeks moving average that we are seeing here, which already at the moment, should we see that today, would be a risk reward ratio of 1.8. So that's already a decent trade. Or if you want to play it all the way to the downside, that we test this long-term trend line again, then we're talking about a nice trade with a risk reward ratio of 3.5 almost. Now, this is a swing trade, of course, so you need to keep an eye on the overnight financing for that as well. But a potential trade, for example, that I could see myself very well play with options. So I would sell the call there, do the hedge, and then wait how things unfold. What else do you guys want us to look at? Fire out your ideas. So dollar yen, in my opinion, covers everything like sterling yen, euro yen, and so on and so forth. When it comes to yen, I really would concentrate on trading dollar yen, in my opinion, at least. We haven't looked at Nasdaq and the S&P. Yeah, Nasdaq interesting, of course, now, because not quite, it's not quite a series of higher lows, lower highs, and lower lows. I mean, of course. So prominent here is this structure at the moment. That was the last high. Second high, which was not technically really lower high. Here also not. So we really have a sideways ranging market there at the moment. Where is my rectangle tool? Jesus, where's my rectangle? Here we go. And so kind of this is the range. Maybe we put that to the close. Interestingly enough, this is exactly where we reversed today, right? The last or the lowest close of the past month we've seen, of the past, what is that, almost 4 months now. This is where we reversed, and this is typical for a sideways range. So in a sideways range, you can basically ignore all the bull market support bands, 200 average or something, which may, as long as we don't break underneath this, underneath this area here, on a closing level, I think there's more potential to the upside. So I would rather, if I do a swing trade now, prefer buying this and then trading it up until these highs here. So until 25 to 59 to 60 at least. You could do a strategy there, of course, of trying to trail in your take profits, your stop losses in this case, of course. And if we zoom out here a little bit, I want to see when was the last time we had a structure like this. Not really for a prolonged, you can argue this was kind of a structure like this, but usually, and this is what it's a bit different, maybe at the moment, usually from the Nasdaq, same like in gold, right? We see like rather sharp pulls to the downside, like we saw here. So the corrections come, if they come very quickly and are resolved very quickly, especially this one and then the one we saw last year, where we then had the V-shaped recovery. So the structure we are seeing here at the moment is quite a bit different. If we look at the price bands there, the price ranges, this was a correction of 27%. This was a correction of 17%. And just looking at the last three now, this was quite a minor one, actually. For sure, it didn't feel like this. But if we see something like this again, guys, then 7% were already done. 17% would lead us all the way down to 21.6. I don't see that coming yet. 26 or 27% would lead us all the way down to 19,000. I don't think that's going to happen that fast. But if you want to be more on the safe side here, and you're kind of afraid that the market is changing its structure into a downtrend, we would need to see a lower low than the one we had back in November, 19th November of 2025. As long as this is not the case, the more probable structure we are going to see unfold is going to be something like this. Sometimes going up, sometimes going down, and so on and so forth. So a prolonged, quite volatile, as a matter of fact, ranging type of market. So we're talking about a range of 9 to 10%, which fits very good also into the pattern that is expected to see during this time. I think I've shown this chart also already many times, so sorry if I bore some of you right now. So if you compare how did the stock markets develop, this is the S&P 500, but you can translate this to the Nasdaq as well. Under Joe Biden, under Donald Trump's first term, and under Barack Obama, through all of these terms, and we're talking about 12 years of data there, we've seen that after the first year since election, which was done last year in November for Donald Trump, that he was elected 1 year prior to this, we see kind of 1.5 years of more difficult markets. So I'm not really surprised to see the structure we see in the Nasdaq, and I could kind of expect that we continue the structure until maybe October, maybe a little bit earlier, maybe it's November this year, until we reach not the bottom really, but kind of a phase where the market then slowly picks up pace again. So maybe we're going to see a prolongation. You always have to ask yourself, if there's a pattern, what could be the catalyst for a pattern like this on a geopolitical level? Obviously, Iran, maybe we have like an energy crisis for a couple of months until things normalize again, which throws AI back, all the things we said earlier, which could lead to markets not crashing. I don't think we're going to see a major crash of something like 30%, just because there's too much liquidity in there, because we will probably have another 1 or 2 rate cuts this year by the Fed as well, which are going to stimulate the markets. Not immediately, there's a delay in that. Usually after a rate cut, markets are also, after the first initial reaction, a little bit in trouble, because there's a economical reason for a rate cut, of course, which needs to resolve itself as well. But yeah, maybe we are going to see this weird event of sideways ranging stock markets. This is probably going to translate also into gold, into currencies as well. It's going to translate into cryptocurrencies, where we are kind of living this status quo of uncertainty. Was your housemate happy to see you?
Yeah. I walked out, I couldn't find them. I was like, where'd you guys go? I tried to go up the fire escape, but so I was like, dude, I'm meant to be on stream. Can you come back? Like, where have you gone? But yeah, no, they're all good. They're all good.
Okay. Good.
But yeah, I agree. We definitely could see a bit of a sideways drop. I don't think we'll be crashing. Like you said, too much liquidity. There's still a bunch to be thrown out there. Economic conditions were definitely improving, and people are starting to look at that risk-on type situation prior to, obviously, this past week's conflict, or what are you now? Day 10, roughly? So a week and a half, almost 2 weeks. So
yeah, week 9, I think we are. Day 9.
Yeah. So I think we will stay bid. I think as well, if some of the sort of SaaS stuff we were talking about before starts to take tech off just a little bit more. We're already starting to see tech as like a defensive play now in amongst the geopolitics. Like some of that bid is starting to come back into the majors, not aggressively at all, slowly. And now, after coming off, so heavily, like I showed you that the chart with the PE ratios, they have become quite cheap relatively,
which is
especially
good.
since where they have been.
Which led to me starting to buy stocks like Nvidia again, not like throwing all my money in at once, but slowly, week by week, month by month, zoning into again. For me, it's always amazing, like to see like general truths that play out over and over and over and over again. And like this market structure we see, for example, in the Nasdaq right now, we see that obviously in the S&P 500 as well, which is exactly the same like we see after 1 year after each election. I've been talking a long time about this, that I thought like somewhere in November, probably we are going to see more difficult times for the markets coming up November 2025. I mean, and it seems like this is exactly the pattern that's repeating itself again. Back then, I remember I said, I don't know what the catalyst is going to be. And it's kind of hard to believe at the moment with so much liquidity, so much positivity, so much productivity growth for US companies we are seeing. But seems like energy is now the catalyst that I didn't have on my radar. Energy prices, to be more precise. So let's see if the rest of the tale becomes true again, meaning that this is going to be more volatile, maybe slide up, maybe slide down phase until October, November of 2026, and then things really start kicking off again.
Yeah, going to be interesting to see how it plays through, because obviously not a large sample size, and you could probably add like Bush in there, but there were too many crises through there that probably
the thing is also the markets have changed a lot over the
since then. Yeah, definitely since 2008. Obviously, everything is different.
Also with like more algo driven investments, not only short term trading, but also
Jane
now
Street.
on the longer term. Yeah, Jane Street, more market manipulation. I didn't say that. It's like the market structure is faster, but like on general larger cycles, pretty much the same still.
Yeah, definitely. And guys, if you're enjoying this, definitely punch the like, subscribe, helps us out a lot. We also do have the giveaway on the 11th for the 100K subscriber giveaway. So definitely stick around for that. DAX. What are your thoughts on DAX?
No, I don't have any thoughts on DAX.
Oh, come on.
I really don't have. I never look at the DAX. I know we discussed that a lot of times here, but I don't trade the DAX. I trade indices, only S&P 500, Nasdaq.
There's Akram. I was waiting for it. DAX.
in the voice of Total Wolf, DAX.
Yeah.
Let's talk about the DAX.
So the thing with the DAX, so any of the European indices in general are probably going to have a bit of a harder time overall. I think we're talking about this last week, and we also covered it a bit on the Discord on Friday night. So obviously, because of that exposure to energy shocks that Europe has, they're a bit more adversely exposed than, say, like the US. US is much more self-sufficient. We've also seen quite a drive higher in European equities for some time. They performed very well. And a lot of that was also out of the defense players. So when you get these kind of events going on, obviously a big shift into drone technology, the other defense manufacturers across the board. The trouble is with the European players, they were kind of already bid up.
Yeah.
So it's hard to see them going much further. So hence we've seen that underperformance from the European indices in general, plus they have that massive exposure to a deeper energy shock. So right now, obviously, we are trying to correct, similar to some of the other indices. You guys can see if we zoom out through here, this is on the 4 hour right now. We did crack that level at 22,900 on the DAX. That does potentially start to open the door lower. Right now, we're still keeping that up, but you can see how this low through here, slightly higher, this one slightly lower. Now we've got another low through here. So that doesn't tend to bode too well. I always hate seeing these kind of megaphone type patterns, right? Or structures, I should say, where you start to get a widening of recent price action with a tighter price range prior, right? That always tends to be some kind of, typically it's a negative, and you tend to fall through the bottom. Now, this is all going to completely depend on the war. So right now, very much have to say, just like everything else, it's all very headline driven. We do have the gap from this morning's open, just like on the NASDAQ, everything else, which we are trying to close. So you guys can see that on NASDAQ, with the S&P here as well. I would say rather than trading the DAX, I'd probably move to something like the S&P, where you've got a very clear level through here with these 2 wicks that forms a bit of a double bottom that we did crack through. So either to fail just before that, so just before the actual gap open through there, and we just hit those base levels. Similarly with NASDAQ, like we're talking about, probably has a bit of a better shot at coming higher. Like we're saying, some of the big players in the NASDAQ are starting to be bought up because they've become quite cheap at the end of the day. So there is the other hand, if this does go on longer, that energy input could start to affect tech and the AI sector, which I don't think anyone is really looking at right now. But that would be in a very obvious, like logical order of operations. So right now we do have, we had some of the headlines I was showing you guys before. Where was it? Got too many tabs now. Here we are. So we did have potential talk of a ceasefire. So right now that's what's keeping things a bit lifted, but it's very fragile. I mean, as you can see with all these headlines sort of from the weekend and into today, it's very back and forth. So we've had good news immediately followed by negative news, good news, bad news, good news, bad news. I think I was talking about this on Thursday as well when we were looking at the euro, and we did have a bunch of good news sort of coming through. What was that? Through here. I think it was this? Yeah, this was Thursday. So that's why I TP'd on that trade when we were talking about it. Took that earlier in the day. Is this the right time? Yeah, London, through London, and then jumped out coming to New York. We had basically everything priced in. As far as good news, chances are you're going to get some kind of negative activity coming through, and we did see that coming through late Thursday into New York. So if you catch some bottoms on the DAX, go for it. I don't know how much confidence I would have in that.
No.
Prefer to short tops for the time being. Yeah.
The thing I don't like about the DAX is, apart from the arguments I had over and over again, saying that in my opinion, it's just copying the S&P 500 starting at a certain time of the day, is especially the stock, Rheinmetall, which is a war manufacturer in Germany, a very big company. They at the top performed 230%, and they, together with 3 other stocks, which I believe were Siemens, which has the largest weight in the DAX anyway already, Commerzbank and Deutsche Bank, they made up 65% to 70% of the performance of the DAX in 2025. This is something I don't want to see as a trader, when an index is so heavily dependent on just one stock. This is also why I don't like to trade the Dow Jones. Apart from, because the largest number of a stock price has the most impact, which is totally screwed up. This is why I like to trade Nasdaq. This is why I like to trade the S&P 500, because it's like more broader. You really see a general sector, for example, driving the performance and not just a single stock. Because what happens, like, if for whatever reason, suddenly we have world peace, everybody agrees, maybe something, like, have you guys ever seen Pluribus on Apple TV? Where suddenly the whole humanity is united as a one hive mind, kind of things. I'm just making stuff up now, of course. But somehow, a more peaceful period of time again. And then, of course, you would see a stock like Rheinmetall probably going back very quickly by 50 or 60%. which would mean the DAX would probably either underperform heavily or also decline in an environment that should be good for the economy, actually. And I think you see that also reflected on daily levels, apart from the DAX very often just copying the S&P 500. This is why I don't want even more things making trading difficult when trading is by itself already.
Yeah, I agree. And particularly where we are now, it does seem, so European equities haven't quite priced in that energy shock type factor. So this is the Kospi. So this is, the Korean stock market. Obviously, we had an absolute belter of a rip since the start of the year. And if we go a bit further back, I mean, we've had insane gains on this index, right? I mean, look at that. The Korean stock market. Now, hence, because of that, yes, we came off pretty heavy because everyone's been positioned long for some time and there's a lot of profits there, just like we were talking about how you kind of get those margin calls, that kind of thing. The thing is, Korea is also definitely very energy dependent on imports for energy. So we'll definitely get smacked around. We've got pockets of the market starting to price that in, just like we've seen oil have those runs, and other portions of the market kind of still on that factor of this will be a shorter duration type event rather than longer. So we're getting a bit of a mixed picture now, where some are trying to price in that tail risk of the longer event, and others sort of staying pretty calm, sort of taking it in its stride by the by. So yeah, I would prefer, if you're going to trade anything, you've probably got cleaner price action on something like the S&P or the NASDAQ or something else rather than the DAX overall.
That's okay, Toto.
Yeah, Toto. No, Akram, instead of the Lance Stroll. Yeah. You gotta come in as Toto now. That can be
Really?
your new your new account.
More German is in the live stream.
Yeah. Frank Yen, of course. Sorry, Chef Yen. Rather. God damn, Akram. I feel like you're trolling me. I hate this pair.
Makes me hungry.
Yeah, Chef.
When you were away, I was talking about dollar yen, actually. And I said, like, if I have to trade the yen pairs, I always would go for dollar yen. I don't see very much the point in trading something like Swissy yen, for example.
Yeah, exactly. Swiss yen, it's just such a weird pair because, at least historically, obviously, they're very much the same. They've got kind of the same attributes. Now, the yen has fallen out of favor as a safe haven because of that interest rate differential for some time now. But yeah, generally, I would just not trade this. So I'm very sure you're just trolling me, Akram. So I don't know if I'll even commit to this. I will say we do have kind of a warped head and shoulders potentially forming, a Quasimodo type thing, I guess, which would then drive us back towards those lows, which could potentially line up with dollar yen once we get to some of these peaks, whether the situation resolves itself or else we do get more talks of intervention once we start pressing 160. It's like we were talking about before, we are seeing options starting to cover for higher prices now, after last week when we actually started pricing in potential intervention talks on the basis of dollar yen running higher. That was before we got to this point this week, and everyone's starting to look at the situation potentially lasting a little bit longer. Not necessarily long. We're not talking about months, but it might be an extra 2-3 weeks over the sort of 3 to 4 week initial expectation. and then it's that lag time of getting all the infrastructure and everything back up and running to full capacity. So yeah, on that basis, anywhere towards 160, I would start to look for price action to begin selling this. I think we will very much struggle to get above there. Everyone knows that that's in the background. So just like with your chef yen ask, Akram, I prefer to short it from some of these levels.
What's your opinion on dollar yen? Actually, because I was talking about it earlier, and I'm sure you didn't hear it.
No,
I would like to hear it. And
I was outside. Give me the quick rundown of what you were saying. What are the bullet points?
I was actually
were
saying. Let me quickly change to my chart.
God damn it, totally.
I was talking about, of course, I prefer the short side as always. As always, is probably going to kick me in the again, but for me, like around 160 plus minus 50, 60 pips, I would prefer a short trade.
Yes, I agree. So
something
I would even be
like
looking
like this. I know you're more on the shorter time frame. For me, it's an option play again. But that in a nutshell. And I said, you know, it's if you want to trade this as a spot trade on the fivers or at any brokers, you of course have to be a little bit careful with the swaps there because you're shorting dollars, you're buying yen, so the swaps are not going to be on your side, the overnight financing that is. So a little bit careful with this one, but this is basically the yellow rectangle there is where I somewhere see that things are going to the downside again. And interestingly enough, this trend line from the top, the blue one here, that worked very good once we passed over it because it acted as a support. So that would be my natural target as well for a trade like this. But the question is, are we going that high? Without
first of all, there's that. Secondly, what kind of time frame would you be looking at for the options play?
For the options play, I would
potentially see that we go deeper towards 147, so a bit further across the trend. Especially when you start,
probably would be like a 3 months option, 3 months call, dollar call, yen put. I would sell.
Because my thoughts are with the Fed rate watch, right? Potentially later, like obviously that rate cut odds are going up. So if you sort of time it out through there, and obviously we get some kind of peak with the war start coming off, then you start talking about potential Fed cuts. This might seem like it's potentially the top.
Yeah.
Right. I can see little reason for us to push beyond, right? So I think, and then obviously with options play, it depends on how you structure it and the timing and
the timing. Yeah, but it's what you say, the potential top. You know, once things start to normalize a little bit again, then and the market returns to a more natural rhythm again, there's more potential to the downside, especially the closer we come to a potential rate cut. I would have preferred to have this scenario like we right now, maybe later this year. If it would have been in May, I for sure would be looking already at actual volatility and at quotes to sell this option pair.
Yeah.
To sell the dollar call and buy the yen put. Because I'm on the 3 months. 3 months now puts me into the beginning of June. So timing wise, not maybe I should look at 5 or 6 months. I have to see how the volatility is there at the moment. And but the general structure, let's say for the remainder of this year, should be, in my opinion, to the downside with the yen getting stronger, especially if we see 2 rate cuts this year in the USA.
Agreed. So, that's the other thing I was about to mention. It depends on the volatility right? So as far as what price you can get options, because I mean everything is obviously because of the weekend, everything's kicked up pretty aggressively. Interesting to see that gold has actually dipped from last week, which, if you actually look at the price, not so confusing.
No, I was just about to
but
say
it-
it's not as volatile anymore, no, at the moment.
Yeah,
for
it goes
gold.
back to highlighting. Yeah, this is basically what I was talking about earlier, guys, with the liquidation of gold contracts for margin calls. So this price is obviously, you can see this was from last week. I brought this chart up as well. But basically, this is why you're seeing gold not really lifting. However, highlighting what I said before, we probably have this as a washout now. So you'll start to see this leveling off and then eventually a rebuild of these positions. So not continue trying to short gold like we were talking about earlier. But yeah, I think when you jumped up to grab coffee, I was talking about dollar yen a bit. And yeah, pretty much looking towards these 160 type areas. We do have the slight break above there. We're now trying to press that again from those prior highs back in January. I think this is going to be the tops. Unless somehow we get a prolonged event, which right now is not the base case. It's not impossible. Probably put it like 10%. Maybe after the weekend, 15 now, right? But it's still not something you really want to bet on because of everything else we talked about. There's other external pressures, like with the fertilizer thing. You come into food security, that kind of stuff. China and those players are going to jump in, put pressure on. Even Russia as well. They've also been they're playing more of a, I don't know, whatever else they're doing, kind of propaganda type thing. We had comments from Putin last week trying to say, "Hey guys, let's all calm down and stop the war." It's like, okay, dude. All right.
Yeah.
You're one to talk.
It's like the
okay.
school bully telling people, hey, we can solve this conflict without actually physical violence.
Yeah. So obviously for Russia, it's technically good because like the US did agree. We were talking about the India situation as far as oil last week as well, in that India didn't want to buy further Russian oil because of risk of sanctions and that kind of thing. And then Trump came out and said, right, we'll give you the pass right now. Fair, we understand. So yeah, I think the Russian commentary is definitely something to ignore, but China, they've thrown out a few bits. Obviously, they say the peace kind of aspect again, but eventually they will start to actually press and say, no, this needs to end. And potentially they do actually start somewhat getting involved if it did somehow continue for a longer period. So, yeah. Richard Butler.
The man, the myth, the giant is back. The greatest bass player on earth.
Interesting. None of those are true, however. None of them.
But we can pretend because we are streaming. Nobody can actually see that you're only 3'8".
That is very true. That's very true. Everybody thinks that this table is 120 centimeters off of the ground, when in actual fact, it's only about 50. The illusion.
Right. Peter Dinklage.
Richard Dinklage.
It's Sir Peter Dinklage to you, my friend. How's everybody doing?
Not too bad. Had a quite busy session discussing all the things that are about to unfold on the markets.
We did. So mostly covered the oil type side of things. And then I've got a piece I'll put together for Wednesday when Dirk comes back around fertilizer and food security type stuff as well.
Interesting.
Which is one of the more one of those pieces people aren't quite focusing on, but
Yes.
it's quite a big.
Yeah. I
big
mean,
input,
when
so-
oil does this, food prices also does that. So correlated.
Yeah, it has a feedback loop with the fertilizer input prices, input pieces being shut down, going through the Strait of Hormuz, which is about 40 to 50% of fertilizer input pieces for production. Obviously, then you need the energy components, which is gas, further feedback position, and then that goes into corn, which becomes part of feedstock for cattle and all that kind of stuff, and then becomes keeps.
It's a really vicious cycle, very vicious.
Yeah.
But the thing is, you won't see it today. You won't see that impact now. You're going to see it like systematically start coming into play, and then for months afterwards, it's going to have impact still. It's definitely one of the longest reoccurrences of negative impact, let's rather say, from, let's say, a singular event. Yeah. It's a long-lived struggle.
And that at times where prices for cattle, for beef in Germany are at record highs already.
Stop eating beef then.
Yeah, I did. I'm eating pork.
We've got the same as well.
Okay.
Even though the actual pricing is lower, like the commercial sort of call it producer level. But we've seen prices at like supermarkets and stuff overtake like chicken. And this is low quality.
It used to be below chicken prices in Australia?
Yeah.
Wow. Chicken is like rather cheap here.
Yeah, chicken is very cheap, but that's the thing where it's now there's a difference between the higher quality and lower quality.
Yeah, of course, yeah.
Yeah. There's quite the gap.
Yeah. So, but now they've like per what I'm talking is like the per protein input, like it's gone kind of just almost exponential. Like they've
little skewed.
Chicken is always the cheapest, obviously, and to be honest, chicken is kind of better. I like chicken.
Yeah.
Okay, Jonathan, relax.
I mean, a nice steak every now and then is also awesome, no? Like, or stir fry with beef.
Yeah, I'm not a big red meat kind of guy. Obviously, a burger, pizza, or something a little bit different, like mince. I like mince. Tacos, Mexican, whatever. But like a steak, I'm kind of like,
Yeah,
some people
you're
love
not
it.
winning me
I just
over.
don't get it.
You're not winning me over with like a really nice cooked steak. I do enjoy a really nicely cooked steak, but I'm way more chicken curry. I love myself like you can add like bacon and stuff like I love that. But steak is just like, oh wow, thank you for the steak. Just
the level of satisfaction in comparison to the price you have to pay nowadays for a steak, it's just not worth anymore.
Yeah. So, and protein per gram on chicken is just so good. And then you look at the price and you're like, okay, and it doesn't taste bad. So
see, I don't like the sort of fattiness, which other people love because it's like the flavor and whatever. I don't like it's like the texture and I don't know.
I used to be like this as well, that I couldn't stand like fatty meat. But after I've lived in Southeast Asia for a while, I kind of got used to it, that it brings flavor because like your Asian food very often is also about texture. So you kind of get used to, like before I moved to Singapore, I never would eat something like pork belly, for example. It was like absolutely disgusted. After I lived in Southeast Asia, I was like, oh, I shouldn't eat too much pork, roasted pork and stuff like this because I like it so much now.
I love ice pine as well. Like ice pine is
I hate ice pine.
Oh, I love it. It's one of my favorites. So it's pork knuckle.
Oh, okay.
And then you take the pork knuckle and then you make it like really crispy. So the inside nice and soft, outside super crispy, and then you usually have it with like a really hot mustard and sauerkraut. And that is just... You are a horrible German.
Sorry.
Dude, you're most non-patriotic German I've ever heard of.
He also doesn't trade the DAX, so
Don't like sausage. I don't like sauerkraut. I don't like BMW. No, just kidding.
Yeah.
What? Hang on, BMW? Really?
No.
BMW?
I don't. I just in general, I don't own a car because for me, it's not worth the price. Honestly speaking, it's like one of the worst investments you can do in your life, buying a new car, and except maybe if it's a collector items, but like collectible cars, the market is also has crashed by a lot, and
only overseas, not here, which is very annoying. Honestly, everyone's talking about car market crashing. I'm like.
So
maybe
with the
you
exception
guys.
of racing cars or something
What's
like
going
this,
on?
it's nice, of course, but other than that, not very much into cars, especially German cars. The problem is nowadays, if you compare the price and the quality to, for example, a lot of Chinese manufacturing, you get the better ratio there from Chinese cars, especially since all the extras are already built in. Like BMW is trying to charge you like €10 a month for the heater for your seat. It's like, what is this type of insane subscription model for cars right now? And you already shell out like 80 or 100,000 euro for a car like this. So you don't want to pay another €10 here, €50 there, just for things that should be built in and taken for granted.
When I saw that, I thought that was insane. Like that was not going to fly, right? Same, they were looking to restrict the performance of the engine.
Yeah.
And you had to pay
to have it unlocked.
Yeah.
I paid literally for the engine right here.
Dude,
I
it's
paid
pay to
for
win.
the car.
It is.
Dude, it's pay to win. What crap is this?
It's gaming.
We're going to limit you, but if you pay a monthly subscription, your car go faster.
Yeah.
Pay to win. Wow.
It's like a gotcha game.
BMW, right? This is BMW, right?
They all do it. They all do it now. BMW, Audi,
trying.
Mercedes, Porsche. Sorry.
I was looking at Audi the other day, or Audi, or however the hell you want to pronounce it.
Wait, did you just say Audi?
Yeah, it's Audi. Yeah. Mercedes, BMW, Audi, Porsche.
Yeah. Well, anyway, I have a South African accent, so deal with it. We also say BMW and Volkswagen.
Volkswagen.
Yeah. Anyway.
Pain.
LJ.
Pain. You don't know how much that just hurt me.
LJ, dude, go to the bathroom or something. You look constipated, mate. Anyway, I was having a look at the Q3 like in the week, and a brand new one. Because I had the A3 a few years ago. Loved the car, really enjoyed it. Was looking at potentially like upgrading our current car to a new car. And I lost all like want, desire, need, everything just disappeared when I saw the price. And I was like, oh, that's unnecessarily expensive. Why? And then I thought, for the sheer, let's call it shits and giggles of it, I'll go and have a look at what the A3 costs. The sedan A3 is more expensive than the Q3. And I'm like, why? Like, the standard one in South Africa is more expensive for the A3 sedan than it is for the Q3 standard one. If you compare the two of them, the sedan is about 50,000 Rand more expensive. Why?
What is 50,000 Rand? Is like $2.50 or?
Yes. Somewhere in that region. Somewhere. Yeah, it's about 2.5K to 3K more expensive dollar for a sedan version of the same vehicle.
That's insane, yeah.
Is this like brand new or?
Yes, brand new out of the box, and they're both the standard trim leveled ones. You know, like
right.
Both are the entry level ones, and it's just like the one is
just buy a second-hand one like 2016, 17, 15, 16, 17. They've got a nice trim. They've got Apple CarPlay. They've got all the stuff. Like, just do that for a Q3. Perfect. Would be good. Great.
What's Akram up to these days?
Here we go. Akram, first time you're going to be pleased to hear a comment of me. I agree with you. Mazda RX-7, that's V card. It's such a nice. You can drive it on the road. You can race a bit in it. It's like a very nice car to drive fast because all the downforce depends on your tires, and it's so much fun. Very dangerous if you cannot handle it. Also, but
It's got a rotary engine, which sucks.
yeah,
I was about to say the rotary
It's
is
still a fun, nice. It's a fun car to drive, though.
A fun car to drive, but it's
All
horrible.
Mazdas are fun cars to drive, must we say?
Yeah,
Like,
they've got that zoom energy, you know.
they've got that go-kart energy.
Mazda is bulletproof. The rotary definitely sucks. If you maintain it regularly, then it's good. Only thing with those cars is the price has gone ridiculous. So now the price of kind of what you're paying for them, not quite worth it. Same with like Nissan GTR, like Skyline, like R34.
Actually, LJ, you don't get to have an opinion on this anyway, because what is an Australian car manufacturer again? Name one, please.
Well, they've gone bankrupt, so
For good reason. For good reason.
I mean, LJ's a consumer, not a creator of the vehicle, so he enjoys. Yeah, he enjoys it.
I will say they have brilliant cars though. Like Holden, they're considered here like they're a bit bogan, so kind of the equivalent of like a bit like redneck per se. But since they've gone bankrupt, like they have made it's pretty much the cheapest large block like V8 you can get, insanely quick for really cheap price because they were Australian made, where we get the luxury car tax on everything else. So quick as anything. And now there's a bunch of them since they've gone bankrupt that they're worth, a mil, 1.5 mil plus because of that. So yeah. And Americans are now obsessed because they're now getting the 25-year import stuff where they can start bringing over some of the older ones. And they're just like, this is insane. How did we not get this? This is crazy. And like the concept of like a ute to them is just like, so.
All right, guys. I want to grab some lunch. I'm going to see you again on Wednesday, and I'm going to leave you in the more than capable hands of William and Richard. And I don't know if you are staying, LJ.
I'll stay for a little bit. Then I'll head out.
So, see you guys.
Awesome.
Have fun. Bye-bye.
Thank you, Dirk. Have yourself a
Hey,
good
Dirk.
See you later, Dirk.
Wednesday. There's a question here. Can you guys talk a little about the 20K bootcamp, how it works? Yes, obviously.
Yeah.
The 20K bootcamp, it's a three-phase, three-step evaluation account. So it is one of the cheaper accounts that we have. That was interesting. That happened there. Anyway, three-phase account, which means that you have 3 steps. So step 1, step 2, and step 3. Once you've passed step 3, you are now in the funded phase. The way that it works is, it says 20K, but you start off with 5K on phase 1. Then you need to make your 6% gain on the 5K, so $300. And then once you've made that, you will go on to phase 2. Phase 2 is a 10K. From a 10K, once again, 6%. Once you've passed 6%, you go over to a 15K. Same idea, you make 6%. And then once you've passed that, you are now in the funded phase and you're given a 20K account. So in terms of payment, you pay a smaller fee via evaluation, or during evaluation, let's rather say. And then only once you've reached the funded phase do you pay the extra bit at the end. So it's basically, it's cheap to play. When you want to try out, you have your, you build your way up, and then eventually you get to the phase where you're funded, and it's like, okay, cool, and then you just pay the little bit of extra that goes on top of it. So it is definitely the longest phased accounts that we have. You need to make a total of 18% across the 3 phases. where a high stakes, you only need to make 13%. But the high stakes is a little bit more expensive. In terms of the leverage that you have, your bootcamp used to be a 1 to 10 leverage. It is now a 1 to 30 leverage. So definitely a little bit more leverage available to you for the lower accounts especially. So you can go higher lot sizes with the 5K and the 10K and so on. I think personally, the bootcamp is the most difficult evaluation account to pass. Mathematically, you have the least amount of drawdown available. It's 5% phase 1, 2, and 3, and then 4% when you are in the funded phase. And you also need to make the most amount of profit, which is 18% across all of the phases before you get funded. However, it's the cheapest. So you kind of like balance that off by the difficulty versus the price. So you can more often get yourself a bootcamp account if you were to fail it. And the nice thing is you either use the 20K or you get 100K. So the 250K, I would say, is only for people that really know how to trade and are very familiar with the bootcamp system, because 250K costs a lot more. But obviously, at the end of the day, at 250K is our largest starting account that we have for all of the phases, regardless. But still, 250K, I would generally not go for unless I am very, very confident, have a very, very good track record, and am willing to dish out that extra payment for that. But yeah, that's generally how the boot camps work. You're not allowed to copy trade from the boot camp. So the boot camp you're not allowed to have connected to other ones as like boot camp to boot camp. You can't copy between boot camp to boot camp. However, you can copy from bootcamp to high stakes, as an example. No idea why, though. But yeah.
Yeah. I think the bootcamps are really good, like, entry point for any of you guys sort of still, maybe you've been trading for a little while, still working out some kinks, but you think you've got something going on. And it's a good way that you're not having to front up the huge investment cost right away. You can put in that first portion. If you do happen to blow it, you can pick it up again because it is that bit cheaper. Now, obviously, if you go through the whole way, you actually make the distance, then at that point, you pay the rest of the cost. So, and especially with the increase from 10 to 1 leverage to 30 to 1, very, very nice. I think it was definitely quite difficult before with the 18% across all three phases with the 1 to 10.
Yeah.
Obviously, that takes a long time. But with the 1 to 30 now, it's much more manageable, much more workable. Yeah.
Yeah, I think that the bootcamp is a good one, especially for people that, A, don't necessarily have an injection of capital straight from the get-go, because a 20K one, you start off with $22. And then only once you're funded do you add the extra 50, which then becomes $72 in total, which is still one of the cheapest accounts that we have. But if you go to the two-step programs as an example, that's now for a 20K. It's basically, if from evaluation all the way through to funded, it's $72. Your 2.5K is $22, which costs the same, but it's 2.5K versus a 20K. If you go to the equivalent, which let's say it's the 25K, because we don't have a 20K high stakes, you're starting off at 195. If you go for a 10K, it's 78. So if you don't want that upfront cost, you can go to the bootcamp, but do know a little bit more patience on your part to try and get through phases. It's definitely a little bit more of a hardcore evaluation phase, I think.
Yeah, and the main thing to remember for you guys that do make it through, the bootcamp is the only one that the conditions, so the drawdown and targets slightly change once you actually hit funded.
Yeah.
So that is one thing you have to remember, because had some of you guys jump in the past and didn't quite realize once you get to funded, it's a 4% total drawdown, not 5%.
Yeah.
But also your target to scale up is now 5 instead of
5%.
6.
Yeah.
Right? So long as you remember that, because it's the only one that has that differential. The other programs are the same right the way through.
Yeah.
Or except,
So
I guess the high stakes is 10%, which changes, but the drawdown levels are the same.
Yeah, so you can imagine a 10% for an 8% as an example, or a 10% for a 10%. That's a 1-to-1. This is a roughly 20% less drawdown in comparison to what profit target you have. However, because it's 5%, it's generally catered more towards lower percentages gains across the account. So theoretically, your risk is still good, because you only need to make 5%. And if you make 0.5%, that's 10 trades, you still have 8 trades of drawdown, where the equivalent for a 1 to 10 would be 1% risk. You still have 10 trades, but you also have 10 trades to make profit as well to get that 10%. So it's very close. It's very, very, very close. The kicker here is the fact that it's 3 phases, but it's the cheapest. That's
and the idea. Yeah, and the idea around it was, that's why it's called the bootcamp, is for sort of more developing, learning traders.
Yes.
The idea with those longer stages is to develop consistency, repeatable structure, get used to that, lock in, develop, hone your skills, that kind of thing, right the way through. So, and you get that, hence why you also get that cheaper price point and only pay the rest at the end once you've actually got there.
Bahari is asking, is there a scaling account on the 3-step? Yes. So this is the scaling plan. So here's the nice thing. Every 5% target that you make, this one is going to pick up. So if you're starting with the 20K, this is now in funded phase, you will, after making your 5%, go to a 25% or 25K, then a 30, then a 40, 50, 60, 80, 100. And then from 100, obviously, it's going to jump to 125, and then it's going to carry on until 4 million in funding. And if you check on the right here, it'll show you what is your profit ratio. So if you started with a 20K and you passed, your first payout that you have will be a 50-50 split. So generally, this 50-50 split covers the cost of that second portion of the account. And then once you've moved up from there, it goes to 75-25, and then eventually it will become a 80-50, 80-20 over here. That's at 2 million. So you're keeping 2/3, or not 2/3, 3/4, 3/4 of whatever you make 5%. So you're keeping 3.75% for every 5% that you make, which is good, especially since, like, let's say you get to 100K as an example. That's $3,750 out of the 5,000 that you've made that you keep. And your risk is generally going to be less because you have less risk to play with, 4%. But I generally think that the bootcamp really does play on the idea of consistency and proper risk management. I mean, if you go and look at, for argument's sake, the 1-step, which is the hypergrowth, the hypergrowth is just the hypergrowth scaling pattern is every 10%, it pretty much doubles.
Yeah.
So 5, 10, 20, 40. So the idea is, if I make 10% here, I'm going to try and get double every single time. So here's a 50-50 split. On a 5K, you keep 2.5K on a 5K. 10K. So if you go to the equivalent 100, no, we don't have 100, 80. It's a 75-25 as well, which is exactly the same as the bootcamp. This one just costs a lot more because you double the account every single time you go up. So it's kind of crazy.
Yeah, so the hypergrowth is more meant for more advanced traders per se. Like, you've been doing it for a while. That's why the overall drawdown and the daily is a bit more tight, more constricted, but it also gives that structure where it does double up quite quickly. It does cost more, obviously, like Rich said, and then pretty much the high stakes is kind of the in the middle, kind of intermediate. So you got kind of starting out, intermediate, more advanced structures for each of the programs.
Yeah, definitely so. There's a question here. On any of the accounts, do you automatically get scaled or can you choose not to? So generally, if you've reached the profit target, you scale, regardless. Okay. So the idea is that you lock your profits, you move on to the next account, you get more to trade with. I don't really understand why people don't want to secure payout.
I can't see any reason not to scale. Like,
it's
the same thing. Now you just have more capital.
You've locked up profits. You've locked up profits,
capacity.
so you've locked up a payout, and you're getting access to more capital. And on top of that, your risk gets reduced back to break even. You still have your 10%. It's not like, oh, okay, now it's 5% for the next. No, it's always going to be 10% on a new account or like a new scaled level. It's going to be 10%. It makes no sense to not want to take a payout, in my opinion.
Yeah, I agree. And so once you tick over that level, it should automatically, basically, it'll disable the account as long as you have no open orders left, trades and orders. Once you close them all and you're over the target, it'll take 5, 10, 15 minutes or something to register. And then it'll automatically disable and your new account will appear on the dashboard. So.
And then your payouts is every 14 days. So once you've passed an account, it becomes 14-day payout cycle. So between every one of your scales, it becomes 14 days. And between every one of your payouts, it becomes 14 days as well. So whichever comes first.
So the only thing is when you do hit the target, it does reset the payout timer.
Yeah.
So say you were 12 or 13 days before payout and you're very close to the target, you might just want to wait until you get to that 14-day mark, take your payout, then cross the account over the line. Otherwise, you'll have to wait another 2 weeks because it hit the target. So it does reset the payout timer as well.
So you can take a payout and it still scales, yes. So you taking a payout does not affect whether or not you're close or far away from the scale. So imagine you have 4% to go. You've already locked up 6% in terms of profit. If it's 14 days after you've received the account, you can take your first payout of 6%. You'll get paid out. And then all you still need to do after that is still make the other 4% in order to scale. So it doesn't get subtracted from it and then all of a sudden, oh, you are now 10% down
got
again.
to remake it all again.
Yeah, they remember you were 4% away and that 4% gets locked and says, okay, you've got 4% to go before it scales. Done.
Yeah, so it's set to like a high watermark, as it's called. So we'll remember that profit level, take the withdrawal, that'll set the account back to baseline. You won't have your profits to add to the overall drawdown, obviously, because they've been withdrawn. So say if it's a high stakes and say you're up 8% in profit, you'll still have your daily drawdown of 5%. However, your total, because you've got the profits, will be 18% for the account to go get next, right?
Yeah.
Once you take that withdrawal, you withdraw the 8%, it'll reset and you'll just have the 10% drawdown. But yes, you only have like a 2% target to go to the next level.
Yeah, your target stays the same regardless of whether or not you take a payout.
Yeah.
So the target is going to be 10%, and if you made 5%, you still have 5% to go. You can take your 5% payout. You'll still need 5% to reach scaling. It's really, really cool, actually, to be honest.
Oh, my throat is still bloody terrible.
Do you think it's because of the rain and whatnot that you've had now, all of a sudden? Like you
well,
went from
I mean,
blisteringly hot heat to super humid.
well, it's because I had the flu the week before, and it's still like lingering. Like I feel fine, but I've still got like the throat, in the nasally kind of back of your throat type situation. I think it's still trying to clear it, but it's when you get to that point where it's just really annoying.
Like I
You
was
know,
going to say that
yeah.
tickly annoying.
Yeah, because you're not even sick anymore, but it keeps yeah.
It's still
Anyway,
it's the remnants of illness is still there.
yes.
Thing is, that'll
Gonna
linger
say,
for months
did you?
as well. Like that won't just go.
What was that, Will?
I was just saying that like that'll linger for months. Like you could potentially have that for weeks or months where you just have that annoyance.
Yeah, yeah. No, it's irritating as anything. But yeah, I was going to say, Rich, did you take many trades earlier? Because I missed what you guys were actually trading. You and
So
Will earlier today.
I took one. I took one trade earlier, and then I marked out Martin's trade. I only took a singular trade on Nasdaq, which was this one here. I entered at 24,245, 285. Sorry, not 245, 285, and my stop loss was at 24,245. I think I marked it. We had this higher low movement, which was showing that we were potentially trying to push higher after testing this bearish order block, which happened to also align with the height of the Tokyo session. We came all the way down on the day, and then we started to push bullishly. And I just thought for NASDAQ, there was more of a potential to try and take these gaps and kind of fill a little bit of it. I didn't know whether or not we were going to reach last week Friday's lows before New York, but at least an attempt to try and reach a potential portion of this gap. And it turns out that we filled about 50% of the gap in its entirety. So I took a trade based on that. We were starting to show this slow upward ascent. Oh, misclicked. Slow upward ascent prior to taking the trade. We're making higher highs, higher lows on the lower time frame. We did not have this like absolute tank off once we reached this area. And I just thought with all of those factors in place, this is most probably going to be a continuation rather than a reversal back from this bearish order block. And took the trade a little bit later than I initially would have wanted to. Generally, I like taking it on the close of the candle. But we were busy on screen, and Will and I were talking. And when I saw it, I needed to go to my terminal, make sure everything was right, and then took the trade. So there was a bit of a delay between when the candle closed and when I wanted to take the trade, or when I entered the trade. Let's rather say. Held it for a 1 to 2. I was almost convinced by LJ from last week to try and keep it running. Just take off, let's say, half or a portion. I think you're muted, mate.
Sorry, I'm coughing too much. I was gonna say with that, from what we were talking about last week, whether you decide to.
Okay, I don't know if it's my Wi-Fi is bad or is LJ muted.
No, I can hear LJ now. I think your Wi-Fi is bad, mate.
I think it was both. I was muted before, but
there's also a delay.
Essentially, yeah. So I was going to say with that, whether you consider taking a portion off, keep some in, bring the stop up, that kind of stuff, because a lot of these trades are quite good and
they are
nail them. You're like, thanks.
yeah, but they're so good.
We do often get that like further run.
Yeah.
So obviously I guess the thing is with taking half off, leaving half on, it's really only an extra 25%, right? If you double the target. So it's not
yeah.
huge. So I can see why you maybe wouldn't. But yeah.
So to give an idea, just for everybody in chat that maybe is wondering what the math is around this. So this is a 1 to 2 and this is a 1 to 4. Okay, so imagine that I have 1% on the table right now. If I have half of my risk removed from the table once I reach the 1 to 2 mark, then I'm only left with 0.5% for the rest of this move. All right, so what is 0.5% of this, of the full risk? So if this was 1% risk, I'm effectively doubling it. So it's 2%, but I'm reducing half. So it comes down to 1%. So effectively, this trade over here is 1% that I've locked up. And now I'm leaving the other 0.5% risk, because the 0.5% risk is still on the table, obviously, if I haven't moved my stop loss. If I've moved my stop loss, then it's now a risk-free trade, and I've locked up 1%. The other, let's say, 2R is going to be on 0.5%, which then comes down to what? 1%. So I take a trade that was locked up at 1% and I turn it into a 2% trade. Where if I moved it to break even, as an example, now there's no risk. So whatever upside there is upside. So it's always that little extra. You could potentially double, but then there's days where you don't even reach this 2R area, and it kind of like reaches half an R, and then you start moving down. And so you always have to kind of like remember the potential that some trades are not going to go in your favor at all. And the running trades are the ones where you're going to make really good, decent profit in that scenario specifically. So math-wise, it doesn't seem like much, but in the long run, it's pretty good. It's pretty good percentages gains that you can make. Whereas if I just locked out 1% here, as an example on risk, and I go for a 1 to 2 and I cut it out, I'm already at 2%. But it's still with risk on the table. So at any point, it can turn around and start pushing lower, as an example. So it feels like it's the same, but it's not quite, because you still have that risk on the table.
It's not quite 2% as well, because like you took half off, right? So you're saying 1% target.
Yeah. This one is 1%, and this is 2%. Yeah. So you're up 3%. Because every 1R is half.
Yeah, but you reduced the trade size by half, right? So if you go another...
So if the first trade is 1% in risk, the second or the...
1% risk, sorry. I thought you were saying 1% in target. My bad.
No. The first one is you're locking up 1% and then letting it run locks up a further 2%. Whereas if I don't lock out, it's just 2% on this first trade.
Yeah.
And letting it run, it gives me an extra 2%. That's, I don't know if that came off.
No, it's right. No. I just thought you were talking about the target, not the drawdown, the risk amount.
This gap over here is effectively 2% if it reaches 4R on half risk. Because then it's 2% for 4 times half R, where this one over here is just 1R when locked out at, not 1R, technically 1R if you started with 1% risk.
Yes. I think this is still...
So this secondary trade becomes half Rs. Every 1R movement of the original trade. The original trade was 40 points, as an example. That was 1%. It gets reduced. And then every second one now becomes...
But if you... Oh, no, okay. Never mind. I was about to say, is Richard really quiet, or is just...
I think it's just you, Will.
It's just you, Will, mate.
Yeah, it is literally just you. Yeah, I know. It is literally just me.
Sorry, mate.
I haven't had this problem, in all fairness. I haven't had Wi-Fi like this in about a month and a half. So, to be fair, one day of really chronically bad Wi-Fi, it's as long as it's sorted by tomorrow.
Yeah.
I can't even open my terminals either to trade.
Oh,
I can't
dude,
even
that
open TradingView right now. It's savage.
yeah, dude, that sucks.
Are you hotspotting off the phone or?
No. So I've run out of my
Data.
eSIM hotspot. So I've ordered more, but it's like doing some downloady things. So I need to like actually download it, install it, etc. So I have bought an emergency backup one. However, this emergency backup one will not let me hotspot. So I was like, well, what's the point in having an emergency backup SIM to do 5G if I can't even like 5G to my computer? I have also looked at seeing if I can get a SIM card in my computer, but I can't.
Yeah, I don't think we're at that level
And
just yet. You can have a router that can have a SIM card added to the
yeah,
router, and then you run your PC via the router.
I was going to say like a 5G
Yeah, I looked at
router.
one of them, but
Yeah.
Yeah.
yeah, I've looked at the 5G routers, but it's just for the time that I'm here, it's just not going to be worth it.
Yeah.
I mean, fair.
We got a few calls on gold once again.
Yeah.
Um,
Gold
we also
to me
had
at a funky place right now. What did you guys discuss earlier, LJ, in terms of gold? I'm not all that keen on seeing buys right now.
so we were saying yes, I would be a net buyer overall. So if you go out to like the weekly type situation,
Yeah, this definitely still
weekly
very
and
bullish.
daily, what moving averages are those? Are they exponential or simple?
Exponential 50, 10. I can. Do you want a smooth or a simple moving average?
Hang on, go to the. Let me check. Give me 1 sec.
What do you want? Like a smooth,
swear
simple?
we're on. Hang on. Unless Dirks was wrong from what he was looking at. No, yeah, that is the 10. That's what I thought.
So this blue one here is the 10. The little purple one is the EMA 10. So simple versus.
What was Dirk on? Oh, it must have been the 8. 8 moving average. Dirk. He kept calling it the 200. I was like, pretty sure it's not the 200, but
This one. Like this.
yeah, so basically we're roughly bouncing off that again, and we've had this climb the whole way through. So I think for near term, we're talking about how we've pretty much had the liquidations in gold as far as margin calls with the rest of the market selling off, and there has to be portfolio rebalancing. A lot of large firms or funds have certain fiduciary responsibilities in regards to how much allocation they can have to a certain asset or stock or whatever it might be. Same with pension funds, everything else. So when you see everything else tanking, gold is still elevated. Those levels come off. And also in general, you get margin calls across the board for certain levered funds like hedge funds and the rest. At this stage, I think we've pretty much plumbed that through. We've had a good amount of time and we've seen this consolidation strip on gold. So I would probably, I'm not exactly, running out there to buy it, but I do think we have relative lows near term in through here.
Interesting.
Doesn't mean we're just going to rise right up. I think it's going to be a bit more sideways action, a bit of chop. But obviously the lows from today, we had that extension. We were basically getting, we had the the massive drop from what was that, like 4th of March. Then we had the further dips, and we were getting lower highs. Sorry, higher lows, I should say. Higher lows through there on like, so if you go, I don't know, the 1 hour or something, you can see it easier. Yeah, so recent price action, and yeah, you can see the big drop on about the 4th of March, a bit earlier. The big boy, the low to the left. Yep. So through there. So we had that massive low created through there with the wick candles, and then to the right of that, you can see we've created slightly higher lows the way through, and pretty much today. Go to the right. Yeah, today we had a slight breakthrough that, but you can see where we closed on those candles was basically by the wick lows through there, and we've held steady since. Yeah, so that's pretty much the key area to focus on, and we do have a bit of a descending slope for the highs right now, so we've got lower highs at the same time.
Yeah, I see what you're seeing. Yeah.
Technically, overall, we were getting lower highs and higher lows, so coming into some kind of triangle, and we've obviously made a new low below that today, but then very much recovered. That seems more on that systematic type situation with everything going on, rather than raw price action of people wanting to sell gold overall from here.
Yeah.
So I don't expect us to run
sense.
higher. I don't think we'll scream lower just yet. I think it'll be a bit of consolidation at this point. Sideways action.
I just want to point out the resemblance between what happened over here versus what's currently happening. So we had this nice strong push higher. We had 2 bearish weeks that respected. I'm just gonna hide this 8 one just to. This is the 10 EMA on the weekly. So this.
That's right. Get rid of the 8. That's Dirk's thing. I prefer the 10. Sorry, Dirk.
Yeah. But
10 is better.
It's just that it conflicts a little bit in my mind when I'm looking at it. It's like blue, purple. I just want to focus on the purple.
Yeah. Yep.
Anyway, so we had 1-2 weeks of bearish price action on the weekly time frame. It basically respected this 10 EMA as well, and then it created 1 week of sideways action, and then it started to reinitiate an attempt at a push. Right now, where we are right now is we had this bearish push for a few weeks, bullish push for a few weeks. We had 1 week of very similar price action, nice big bearish candle, long wick above and below, and now we're on our second one of potential bearish price action. Now, obviously, there's no promise or guarantee that this week or next week is going to end up like this. I'm just pointing more towards the fact that there's a little bit of a similarity, on top of the fact that it seems as though we may also come and test this 10 EMA on the weekly the similar way than what we did back here all the way back in October. Just like the similarity. So just looking at that in a nutshell, it's just like, okay, there's a potential for upside. However, I would much rather wait for this week to complete and then start showing the potential of a next one. That's if I'm only looking at the weekly specifically. So I agree with you, LJ. I can see there is the potential for longs. Not now though. That's kind of like where I'm stuck. It's I don't know, not yet.
Put it this way. Like I showed this chart earlier. So this shows the liquidation of those long contracts because of those margin calls, right? So basically that's what we're seeing. Now, obviously gold has been a great trade. People are going to want to jump back into that eventually once things calm down. So that's probably what we'll see. And just like you were saying, I'll just jump back to your chart once again. I think, because you already have it up, so I think exactly that. I wouldn't be, like I said, not betting on huge upside, not betting on huge downside. We'll probably trade sideways, get another tap towards those bottoms, and then start to lift. So
Yeah.
basically, though, I would
Agreed.
prefer to bottom fish and find those lows and start buying up, right?
Yeah, agreed.
Versus the other way, right?
Yeah,
So prior to this, we were definitely trying to sell tops. I think the potential risk, even if this settles down, we'll start to see more pricing for gold with the entire situation that potentially it flares up later again, right? So that will be a further backdrop through the gold price.
Yeah, it's definitely, once again, you cannot entirely compare what happened over here, which is that weekly one, versus what happened over here versus what's happening currently. Vastly different geopolitical standings, vastly different time frames. One is smack bang in the beginning of the year, the other one's like more towards the third quarter of the year. So, but in general, just from a technical standpoint, it does look like a potential start of something that we've seen recently as October. I do like that idea of let's come down a little bit more. Let's retest some of these like areas down here, gather up some nice buys, and then start pushing up. That would be lovely, because the thing is we do have quite the gap between where we are now and where we were not 2 weeks ago. So I do like the ideas of buys. Maybe not this week though.
I like the ideas of buys. I don't like the ideas of cracking new highs. So there's various banks that have said, 6,300. Obviously, I called 5,500 to 5,600 last year and stuck by that. And right now, that's been pretty much on point. I'm still sticking with it, because the thing is, if this gets better, there will be a persistent bid on drops for gold, but not necessarily a new bid for higher price, unless we get some kind of collapse of, say, the jobs market in the US. The Fed has to aggressively drop rates, that kind of thing. Right now, that is definitely not the current picture. So it's just like you highlighted with the peak last year, that 3,500 top after the Trump tariff fiasco, let's put it that way. And we had that sort of sideways trading, and we had a bunch of those attempts at prices driving higher, and everyone's like, okay, going for the tops again. And then we just failed. And then we went again, and we failed. And then, so I think it will be a very similar situation here. And right now, it's a little bit hard to nowcast, if you want to call it that. Because there are a bunch of variables. Obviously, with the current situation, is going to completely change the dynamic of the Fed, as Dirk and I were talking about, and the potential for monetary policy in general, their commentary as well, even more so than the policy rate itself, may drive things much more heavily, right? So we'll get more into that rhetoric phase, and obviously we'd also have the shift of the new Fed chair coming in. But we have seen
I've forgotten about that.
Yeah, in the past 4 weeks, once Warsh comes in as Fed chair, the policy rates were about 26% for a cut. They've now risen to 62%. So you've got this kind of split between certain pundits talking about rates needing to be reduced, and other people saying they need to go higher because of the higher energy input costs because of the war, therefore inflation, potentially that kicks over to the food aspect, all that kind of stuff. It's not really a good reason to increase rates, especially with the job market right now after last week's payroll number. So we definitely have to wait until next month to see if that gets revised and how it gets revised. That's the big one. Definitely. Next month, payroll number is going to be very, very important.
Crucial. Yeah.
Yeah.
Yeah. I think
I
you can
think
also
the Fed
yeah.
between now and then will pretty much be sitting on their hands, lax commentary saying we don't really know, this could happen, that could happen, the war, blah blah. Like, it's pretty much a nothing burger from then.
Yeah. Yeah.
So
At
they're going to
this
wait
point in
until
time.
that jobs number to actually try and see where things are, and then only after that they can start to extrapolate potentially if the war is not finished by next jobs number, where we're going.
Which is
But
unlikely.
at this point, the war should have settled down by that stage already.
Yeah. I think definitely the idea is, I forgot, to be dead honest with you. I forgot that we're going to have a new Fed chair. I completely forgot. Because when you were like, oh yeah, no, new Fed chair, I was like, Powell, oh, crap. Yeah, so
You just come in one day, you're like, where'd Jerome Powell go? Who's this guy?
who the hell is Warsh? Who the hell is... yeah.
Kevin Warsh? Who's this guy?
What's
Like, what?
Yeah. So I'm going to be dead honest with you. I forgot about the Fed chair change. What I wanted to point out is that this on the 4 hourly, we do have from the 6th of Feb until pretty much over here, which was the 3rd of March. So the whole of February, we had this nice 4 hourly channel pushing up. What we did have was the respect of the upper end of that channel. We had, so obviously a channel, you need 3 points in order to establish a channel. So the first 3 points were respected in general. We were roughly playing around the 25% and the 75% mark of this channel in any way overall. So when we did eventually break to try and take the upper end, the 100% mark of this channel, we roughly were at that point where we started to really sell off. And it was this sell-off that eventually had us pierce lower than this channel, as well as an attempt to push back into it. We never reached above the 25% portion of that channel before trying to push lower again. And that coupled along with the fact that we have the same weekly movement as what we had back in October is giving me that idea of potentially either like capitulating in this area for a little while, or potentially trying to get back into this channel, but not really reaching even the 50% point, and then trying to push back down again. I don't know how much of that's going to play out. Begs to be seen, because the war can have sudden impacts out of nowhere, and generally gold is supposed to rally during times of uncertainty, generally, but it's not really reacting the way that I think most people may have anticipated that it was going to move, depending on, or like if you compare it to previous times where we had like really these big war announcements and so on.
Well, I was saying with Dirk, like every time you have those crises, gold sells off initially, right?
Yeah.
Correlations all go to 1 with everything, and it's just sell everything, ask questions later.
Yeah.
Right? So that's basically what we've got. Now, last week, it seemed as though we're getting a bit of a lightening of the situation. Friday was a bit more quiet. Then we had a couple of headlines here and there, but nothing too crazy. The weekend into today, we saw escalation. So hence, everything gapped, oil way higher. So it's kind of still the same situation, but obviously there would have been a huge amount of liquidations last week. So eventually we will get into a situation of people trying to jump back into good trades. Same thing we were talking about, the whole tech space and all the Mag 7, or what do you call it now? Not Mag, like there's other players in there, whatever, you know,
Yeah,
same deal.
you can just
The big tech players, either way.
yeah, you can just call them the Magnificent Seven or Eight, however many there are now.
Yeah, but okay, so I can't bring up my VWAP indicator that I've made on CTrader myself on here on TradingView for you guys. But basically, we've got the VWAP base kind of goes like that through here.
We do have a regular VWAP.
So the top level, mid level, yeah, but TradingView doesn't quite work properly because it doesn't have the proper volume from
Yeah.
the books. So it's always completely wrong. And
Dog
if you go
shite.
back to this area with the big drop, the top VWAP goes through here. And it's kind of like that. So we've got a bunch of lines through here, which makes it a bit difficult. Obviously, this is my rough drawing. But the point is the more recent price action since mid-Feb, this is the base of the VWAP, and we've pretty much tapped into those on these low wicks. And also the tops through here going back to before the big fall from the peaks is basically where we've topped as well. So we're hitting the base of VWAP from the recent price action and the tops from the prior exuberant run that we had, pretty much. So we're pretty much just playing between levels right now, and hence the entire point is that right now everyone's trying to liquidate, cover margins, so you end up getting that positioning on both sides and playing back and forth between that. So you got pretty much these levels around 5K up towards the 5,200 mark right now. So I'd keep playing ping pong, frankly, between them for the time being.
Yeah, I think we're agreed definitely on gold. I can see the upside. I can see near term either consolidation or just ranging. But with war markets and whatnot, like you can never exclude any like sudden rallies or sudden drops. I mean, it really is going to depend on whether or not risk sentiment is really going to be in line with expectation. And in this case, I don't know whether or not risk estimate right now is in line with expectation. Because we're just not seeing, or at least we didn't see what we envisioned maybe let's call it the reaction. Maybe now we're starting to see a little bit more of that potential run up for gold and some of the other assets as well. But yeah, it's interesting time, I think, to be in the market right now because we're getting a lot of volume and we're getting good movements. Just not necessarily the movements that we expected and not necessarily the movements that we always wanted. But there's volume.
Yeah.
The market's definitely moving. So I can't complain, to be dead honest with you, mate. Like, I can't complain. If I had to compare the way that stuff is moving right now versus how it was when we were going through the government shutdown was crap. I had very little trades. There was very little volume. There was very little directional bias. We were struggling between 2 points for a long period of time. Gold obviously was rallying and doing its thing because uncertainty. We're not getting data. Let's buy more gold.
Yeah.
So I do like the way the market's moving at the moment, though.
Yeah, that situation was terrible. I will say this is very systematic as far as like crises go. It's very one way across the board, very orderly as well.
Yeah.
It's not being erratic. It's very measured, very thoughtful.
It's not very typical. It's not a very typical war market.
I mean, yeah, it depends. I mean, wars are normally, funnily enough, a little bit easier to interpret rather than crises. Because crises, there's like a lot of unknowns from certain players that haven't divulged certain things. Wars, you can kind of aggregate all the players and kind of figure out where stuff is going.
Where it's
So generally speaking, it's a bit better. Now, not always. It depends on what type of war, that kind of stuff. Even like we saw Russia, Ukraine, we saw things just absolutely explode. Obviously, that's to do with the NATO situation and Europe and how much they get involved. And Ukraine isn't quite a part of NATO. They want to join, and so it creates this confusion there. But I think as well, because we've had all these things going on, obviously coming to this, and especially after the Trump tariff fiasco, I think markets are also a bit desensitized.
I was about to say,
everyone's on the cusp of expecting chaos already. So the thing is that hits markets the most is when it's unexpected.
Yeah.
So everyone's already on the pulse for something crazy to go on. And these days, that's kind of the norm. You're always looking out for some Trump tweet or something else. So when it does happen, everyone's like, okay. Right?
I mean, it's going to have its impact. It's going to have its movement. But it's there's very little follow through to it. It's just like, we've reacted. Shouldn't have reacted. And then the next time something happens, they're like, we'll wait this time.
There's definitely been some fear. Like in say the move in oil prices today has definitely been excessive, and that's why we've seen them come right back. Pretty much every other market has been pretty lax, even natural gas, everything else. So it's really just oil that has moved very aggressively and probably over its skis. Per se. So typically with that kind of jump in oil and the potential energy shock for Europe, you would have seen euro-dollar gap far, far lower and keep trading lower into the 114s easily. Right? But we had that gap, we've recovered, and now we're consolidating through the higher level around mid 115s. Right? So it's been pretty calm. So this is the perfect kind of crisis that you want as far as trading.
It's a structured.
Crises are not good, obviously.
That's a structured crises.
Yeah, it's very systematic. You can follow it. It's not chaotic. It's not erratic. Great for trading. Large pip movement, large activity, volatility. Obviously, traders live or die by volatility. If the market's not moving, can't make any money. And this is very systematic, however. It's when you get the whipsaw, that's very difficult to trade. Rich, I will have to say, I got to let my partner in, who's been waiting, if that's all right.
No, dude, you can head out, mate. If
you need me to come back, I will. So I know Will is...
Yeah, so William is struggling with the Wi-Fi. Yes, and then Samir and Victor is not here today.
Okay.
So you go say hello to your partner.
All right, I'll send you a message and then figure out. I'll be back there. I'll be up. All right.
Shot, mate.
Cheers, man.
All right. There we go. Thank you to LJ for that. Yes, like I mentioned, Samir and Victor not going to be here today. Samir asked for some time off, and Victor has a family emergency. So you guys are going to be stuck with myself. It was supposed to be myself and Will, but Will is struggling with his internet at the moment. But that is the way that it goes sometimes. All right, so let me have a little look here at chat, because I have not done that, so I do apologize to everybody. I have started with 100k high stakes, now in step 1. Can I take another same program now? So there are limitations on which size accounts you can have if you have 100k. So generally it's about allocation that you start out with. So if you have 100k, generally you cannot get another 100k unless this one is a new one is won. But the problem is that one that you have won will only become active once your current one is no longer a 100k account. It's generally the same with the 50k and the 100k. You can't have both. You can have one, but not both. But you can have as many, like 2.5k, 5k and whatnot to make up your allocation. But generally 100k singular, and then a 50k singular, and then 25k, 10k, no issues there. So with the 5ks, I think, I can't remember correctly, but I think 5k is also only one. But don't quote me on this. If you want to know the actual numbers, do contact our support team. They will be able to give you the best numbers, not just ones that I'm sucking out of air at the moment. Sophie is asking, would you advise for beginners to focus on only one instrument? I'm only 0.4% away from funded, but I have decided to only trade Euro USD, which kind of crap at the moment as of right now. So if I just go to Euro USD, yes, it is a little bit sideways. As of right now, we are entering into a little bit of consolidation. And overall, this gap, like LJ has mentioned already, generally the expectation was to see a further push down lower based on the energy crisis that we're having right now out of the Middle East and the war and all that kind of stuff. Europe is going to be very impacted, not just on the energy front, but also on the commodities front as well. Anyway, so advice. Here we go. If you are 0.4% away and you've decided that you're only going to trade Euro USD, let me give you this advice. Don't force it. All right? First things first, you made a decision to only trade Euro USD. So I'm going to go on that assumption that you also reached the, let's say you are on a high stakes account, you reached 9.6%. Well, not 9.6%. In this case, let's say 8%. You're down to 5%. So you've made 4.6% already. Don't try and force it to get funded. If you are not seeing your setup on Euro USD, don't trade it. Don't force it. Because here's what's going to happen. You're going to force it, and one of two things is going to happen. You're either going to become funded because you're going to reach your 0.4% profit gain, or you're going to lose a lot of traction that you've made. Now, the upside of you passing, you're going to be funded, you're going to be happy, you're going to, wow, congratulations me. That is going to be a very short-lived emotional experience. You losing a lot of traction that you've made is going to have compounding effect. It's going to be a net negative for you because you're going to feel annoyed, you're going to be angry, you're going to be disheartened, and it's not going to balance out that happy feeling of you passing the account. Okay? So generally, I will always advise that you stick to your strategy. And if your strategy said only stick to Euro USD and Euro USD is not giving you the, let's say, trading conditions that you require in order to take a trade, don't trade it. You're 0.4 away. You can come back on another day. Now, that's one side. Here's another side. You could alternatively, instead of not participating at all, you can choose another asset that you are familiar with and that is in line with what your strategy is giving you or what you would normally trade on Euro USD, and you go and you take your risk allocation of 0.4% that you need to still make, and you break it into a few trades so that you slowly but surely build your way up with this other asset. So that could be, let's say hypothetically, you decide to take a major pair like Euro CHF. Not Euro, USD CHF, just as an example. And you have 0.4% to make. So long as you don't need to make 0.5% gain, like a profitable day, let's say that's already done, you can go and put a 0.1% lot size risk on a trade and see how that plays out. And if it plays out in your favor and you make 0.2%, congratulations, you're 0.2% closer. But if it goes against you, then at least you're 0.5% away. And then you can say, okay, you know what? I'm just going to step away. So you can get that confirmation that maybe it's time for you to step away if you don't want to step away right now. That's what I would suggest. Either step away completely, come back another day, or if you're going to trade, look for an asset that follows the same trading or the same structure as what you're looking for in terms of your trading strategy or your trading profile that you're using, but severely reduce your risk. Don't give away in one day that you've built up over weeks or months. So just don't. You're going to be happier for it by stepping away. And in any way, this is a good time for you to potentially get used to patience and being patient, not trying to force it. Primal Light saying, I think that gold might bounce off the 5K a few times before going higher. 5K is very close. We're sitting roughly around here as 5K is there. So this is roughly the point for 5K, which is in line with where we had last week's low basically on Tuesday. So if we were to come back down, that's the wrong button. There we go. Between there and here. Yeah, I could see that. So 515 to 49.96. We could potentially hop around there. We could even go deeper. I don't feel like we're going to go deeper on gold necessarily, because if I pull this towards the side, we have a little bit of price action over here that potentially can be tested. Yes, there's always the potential to go way deeper, like 48.50-ish. But I think for now, the fact that we have made a higher low here in relation to this one over there, I think there is a potential that if we do come back down here, that we might try and push up from there. What is your opinion on medium-term impact of the current situation on Euro USD? Do you see the next few weeks as a consolidation phase? 2, or do you think that the Euro USD, or the USD in this case, would somewhat gain due to the oil price peaking? So LJ mentioned that for Euro USD specifically, because of this vast impact that we're going to have with the higher oil prices and whatnot, his expectation was that price would most probably try and push lower, which in this case is better for the dollar. So me personally, I am not sure that we're going to see that just immediately. I think we're going to kind of be stuck here for a little while at least, and then see whether or not that negative oil impact, let's say commodity prices picking up, the price of imports is going to pick up, transportation, all of that kind of like stuff, the energy crisis and whatnot. I think we're going to see a bit of this and then a potential push down. So I think we're going to try and pull up a little bit, consolidate, be stuck in this area for a little while, and then we're going to start seeing, okay, the oil price is now really affecting everything. Everything is picking up. And then you're going to see this definite downturn on the Euro USD. Yeah, that's what I'm thinking is going to happen. And I do think short term, in any way, because I am a short-term trader. So for me, I don't really care what's going to happen next month. I don't really even care what's going to happen next week. I generally look at what's happening right now and whether or not I can capitalize on what's happening right now. But forward projecting outlook, it's not looking good for the euro. However, it wasn't supposed to be... we were supposed to have more of a reaction when the oil prices started picking up, and we're just not seeing massive movements. We are seeing some gaps. we are seeing a little bit of a downturn. But if you look at the weekly and you look at last week, that is a massive sell-off last week, when the whole war and everything was announced, and all of that kind of like the first strikes happen and whatnot. You had quite the sell-off. Question is, how long are we going to try and be stuck here before we start selling off more? Interesting question. I passed the 5K phase 1 on the 19th, and after a couple of wins and a couple of losses, now on 4,975, so you're down $25, from the base 5K. Balance, and I got really scared. Do you have any tips? Okay, so 1% is $50 on a 5K. You're down 0.5%, correct? So daily facts, you're down 0.5% on phase 2. Is this on the high stakes? If this is on the high stakes, you have another 9.75% to go. I would not be worrying, mate. Really, I wouldn't. I would try and go and have a look at what it is that you had done during phase 1 and try and emulate that. But also, if you feel like you're a little bit scared to do something, like to take a trade, remember this. You passed phase 1 by following your plan, all right? And you've already proven to yourself that you can do this. You're past phase 1. You need to make less now. However, you're feeling scared, so I would suggest what you do is just reduce your risk a little bit until you start gaining confidence, but don't change your strategy. Stick to what it is that got you funded, well, that got you past phase 1 in this case, but just reduce your risk for phase 2. You still got skin in the game, you can still trade, but you are, at this point in time, protecting your psyche, you're protecting your psychology, but at the same time, you're protecting your account by not going full margin on every trade and making sure that you risk responsibly. This is the difference, by the way. This is the difference between people getting to a point and then absolutely losing all steam and collapsing, and people that reach a point, start losing steam, and step back and say, hold on, I'm not going to lose everything because I'm starting to feel an emotion. That's the difference between those two people. One of them is going to get funded and is going to get a payout. The other one is not. It's up to you to decide which one you're going to be. So always remember that. Any entries? As of right now, I'm not really seeing anything that is interesting me whatsoever. I've already had a singular trade on the NAS. The NAS is kind of stuck between these 2 points right now. I am waiting for New York session to open up, which, by the way, is going to be in 15 minutes. So the New York session is opening up in 15 minutes. Then we should see some reactions. What do we expect to see? There is always the potential that we can try and fill this gap. We've kind of halfway reached the gap on NAS, and it's going to be the same with the US30 as well. US30 also has this gap. And we also... Did we? No, we didn't. We didn't quite fill the halfway mark on this gap unless we go down to here. Yeah. So we've already filled half of the gap because this movement over here is not on the MetaTrader. That candle there is not on MetaTrader. It's basically this candle. So even on US30, we've already filled half of the gap. There is the potential for us to go and fill the rest of the gap on NAS and on US30. So once New York opens up, we should see whether or not it fills and then potentially starts going lower. In terms of euro and dollar, euro dollar and pound dollar. We'll have to wait and see. I'm not really seeing any trades as of yet as well. We are kind of stuck here as well right now. So if you consider the tops of Tokyo, we wicked above the tops of Tokyo and then immediately went into consolidation. So I would wait. Definitely I would wait. Lows of this morning. Lows of this morning was not tested yet. Highs of this day has already been tested and we haven't pushed through. I still think that there's a potential that we can fill this gap in its entirety during the New York session. But as of right now, I'm not really seeing any trades. Not really. I mean, GU does have this nice upward channel. It looks good. Maybe a potential pullback of sorts to somewhere over here. And then potentially try and push higher. That is an option because we are making higher highs and higher lows, bar this one over here in relation to the previous one. But overall, it is looking decent for a potential. Let's start here and work our way up. We are seeing a decent channel right now. We're just not seeing the upside of this channel really blowing up. We're seeing a little bit less so. We're seeing more of this. So potential pullback to somewhere over here, to this small little area of consolidation. Not really much of a consolidation, but like let's say higher lows, higher highs, a potential pullback back to here, and then a rejection, and then a potential push higher. What is, if we take the absolute bounce and just slightly below, let's do this. 12 pips or so, and then if we were to try and fill this gap, which is all the way over there on the closure of that candle. This is almost a 4-hour trade, but it is risky because you do have all of this down here that could still be tested potentially. That could still be tested potentially. So I would always caution or preface caution. Let's look on the 15-minute whether or not there's actually some bases. I mean, this is just a very slowed upward tick, isn't it? It's just very slowed. We're still waiting. If I put the EMAs on because I switched them off, let me just get rid of this one and this one. We are trading above the 50 EMA, and we have been for the majority of the London session. We have been respecting the 10 EMA as well in general on the 15-minute. On the 5-minute, it should be similar. Yeah, so when we did break above after trying to push lower and failing to push lower, taking these highs, when we did come back again, we kind of respected the 50 EMA quite nicely and reacting off of it, but still very subdued, very slowed. What is the full movement from, let's say, over here to where we are now is 45 pips. Actually, it's not so subdued. It's actually quite the movement. Yeah, it just looked a lot less with the way that I had it collapsed here. It's not bad, to be dead honest with you. Yeah. Potential area of retest. I think it could be this whole section here. Yeah, previously struggled to close above on the 5-minute at least. Really struggled, did wick a few times, but did not have the downward push that you would expect if this was a high resistance point. It's not a high resistance point at all, because you're not getting full push through lower. You're getting semi attempts that are still higher lows. So potentially this could be a short form trade if price were to come back down. Try and respect the 50 EMA. This is a 1 to 1.5 trade with a potential 1 to 2 being up over here if it were to come back. So it's not horrible, but consider that it took from the bottom to where it is now to climb 70 pips. That's quite a bit. That's quite a bit of a movement. And we have the New York session that's going to open up in 5 minutes or so. There might be some volatility, potentially. So do expect the potential for a bit of a deeper pullback to try and test these previous low swings that we had. And remember, this reaction that we had down here did create a base on the 5 minute. So last attempt for price to try and push down lower before volumetrically pushing up. So if it were to potentially come back, this could be an area to be tested. But at that point, you've already swept up so much of these lower swings that potentially you've already got a change in the direction of the trade as well, or the charts itself. Could become bearish at that point if we are already coming down to sweep this. Like I'm saying, so much price action over here for you to break through. That's on GU. So EU, it's breaking above, which is good, because then that means that we can potentially come and try and fill this gap in its entirety. What does it look like on the 15 minute? Is there price action on the 15 minute that could theoretically be rebounded from? This doesn't look too bad for an area of interest. Multiple attempts, reacted off, pierce through, retest, breakthrough, retest. So this could be a potential area. It's soon. It's within 14 pips or so. So it's within 15 pips. We might see that. It's potential. Anyway, let's have a look. Brilliant, Rich. Such an easy to watch and listen. Thank you very much, Johnny. Do appreciate you being here. Today is a little bit of a special case because everybody that's supposed to be here today, some of them are off and some of them had some emergencies and whatnot. So we're not the full crew today. We do have excellent traders and excellent analysts on Tuesdays, Wednesdays, and Thursdays as well. So do come back again tomorrow. Tomorrow is going to be more of a full day. We've got Anastasia that's going to be here tomorrow. We've got Griff, Pedro, and then hopefully Victor and Samir will be here. I'm pretty sure they'll be here. Murdoch saying 5K for sure is only one. I have one at the moment and can't get another. Yeah, thank you very much for confirming that. I also have a 5K, but I also didn't intend on getting another one, so I didn't actually check whether or not I could. On the 5K high stake, should I take 1% risk of the account size or 1% of the amount I have loss overall? So generally, when you are looking at 1%, it's usually 1% of the 12 o'clock, like PM, 12 o'clock. Not PM, AM, PM. 12 PM account equity. So if you have, and I'll just show this to you with the calendar. Not a calendar calculator. If you have a 10K account, you know that 1% of that is going to be $100. So if you want to take 1% risk, every trade should be 1%, correct? But now let's say you've won 5 trades in a row for a 1-to-1, so you're $500 up. So a $10,500 account, if you divide that by 100 to get your 1%, it becomes $105. Now, it's not a massive difference, but you could go from 1% to 1.05 or 1.0 or 1.1% risk. And that changes as the account equity changes. If it goes up, you're likely risking less if you risk the same dollar amount as you did previously. So you're slightly less. So I would say risk percentage of what you have available. If you're going up, keep your expectancy the same by risking 1% of the account balance. If I've lost a bit, let's say I've lost 7% and I only have 3% left, I don't really know if I want to be risking 1% per trade, because that basically gives me 3 trades before I lose the account. I would consider reducing my risk quite a bit, 0.25% risk, something like that. But in general, 1% risk of account balance. So 10K, that's $100, 100K, that's $1,000. And to help you along as well, view it as percentage. Don't try and put a dollar amount to it, because the moment you see a dollar amount, you're going to freak out that you have $1,000 trade on risk. And there's some people are going to look at that and think, $1,000, this is crazy. Just look at it in percentages. It's always relative. So 1% of a 10K is the same as 1% of 100K. It's 1%. If you're going to look at it at the dollar value, obviously it's going to be more. But you also have, on the one side, on a 10K account, you have $1,000 to lose in total. And on a 100K, you have $10,000. So you losing $1,000 with 10,000 allowance, it's the same as losing $100 on 1,000. It's relative. So just keep that in mind. Great advice, thank you. Maybe I'll start a new challenge to get a feeling for other assets with clean sight and no pressure at all, one step at a time. I would add this as well. Instead of going and paying money to try and get another account to test it, go and test on a demo account. Get yourself most brokers have free accounts, demo accounts that you can trade on. So just you can go and get yourself a free one with a broker that is available in your country. More often than not, they do give demo accounts, and then just test it there. That is as risk-free as you can go without feeling any sort of pressure, really. The idea is not for you to change the way that you're trading, but to see whether or not you can emulate the way that you're trading, but on a different asset. If you're going to lose money doing that, you're going to feel like, oh, I'm risking now for testing something. Testing should be risk-free, in my opinion. What am I looking for in gold or EURUSD, which will lead you to take a trade? Good question. Generally, I think most people kind of like understand how I approach the market. I'm very simplistic when it comes to what I'm looking for. So if I were to take Euro USD right now and I go to the 5-minute, I like the fact that we're breaking up higher. Okay, so I generally want to see some sort of structure created, whether it is a bullish or a bearish structure, it really doesn't matter. I don't trade with a bias. I don't look at the day and say, oh, we're bearish over the day, I'm only looking for sells. I feel like the way that I trade, there's opportunities on both sides. Yes, some of them is going to be more likely to play through, but still the opportunity is there. I want to see a structure change or continuation. So in this case, we've had the low of the London session, and then we've had a higher low so far. We've had the high of the London session, which was all the way over there, where previously this was the high of the London session. Okay, if I just move this out of the way, this was the Tokyo high, which I do take into consideration. Okay, so generally you have had the high and then a higher high, you've had the low and a higher low. All right. So I want to see one of two things. I either want to see this continue. So I want to see more higher highs, more higher lows, and then I wait for a area where price is showing me more willingness to continue pushing up. So I want to see more volume, candles being a little bit more volumetric. So I would take this as the last swing point down here, which is now a higher low in relation, even though it's not much higher. It's still a higher low in relation to the previous one. This is technically consolidation. You can think of it as consolidation because you have multiple high points over here. I want to generally see structure continue. I don't want to trade in consolidation. Consolidation, I generally want to see one of two things. I want to see it break above or break below. As simple as that. If it breaks above, I want to see it come back down, retest the consolidation to prove that it wants to continue pushing higher, and then I will enter a trade. Same with if it breaks lower, I want to see it come back to the area of consolidation and then push lower. You're not always going to get it. Sometimes you're going to have a lot of volume that comes into the market. It's going to push price away from your consolidation area, and it's not going to come back in a timely fashion. It might already recreate a new structure by that point, which is going to make it difficult for you to enter without feeling like, oh, it's already done its move. So generally what I look for is once I have had a break, like in this case, this top section over here has been broken, I want to see price struggle to push lower. So I want to see a continuation of this price action pushing higher, okay? So if I had to take a trade around about this area, I would probably have tried to take the trade on this candle breaking. And I would have had my stop loss just below, and I would have gone for a 1-to-1 or a 1-to-2 or something like that to try and just steal something out of the market. I'm not the biggest fan of breaking or taking breakout trades, because breakout trades have a tendency of reversing, because you can have fake outs, definitely. NASDAQ for me is a nice signifier of proper price action as of right now. The currencies, not so much. This area over here obviously is not filling me with like joy, the way that it moves. But when I see lower highs or lower lows and higher lows and higher highs, that kind of like thing, showing a definite structure movement, I want to enter on that. So what I'm looking for in general, let me just go to a day that does not have a gap. Let's go on Friday. Friday is a good example. Friday, we had the highs of Tokyo which were created. Okay. Establish an area, establish a zone. I want to see this area respected, meaning I don't want to see price break through. I want to see price react off of it and push lower. So what did we have? We had the establishment over here, and then a retest of that established area. And then price started to push lower. How do I know that it pushed lower? Because we have a recent low swing over here, which was the last previous attempt to try and push price lower after establishing this area. This candle over here pushed much lower. So we broke a recent low swing. Okay, cool. So what do I have? I have an established area, which is also the high. We have the low, which was this one, which got broken. So this is the low. We have a new low, which was created over here. So lower low. So what am I waiting for now? I'm waiting to see whether or not this movement here is the actual direction that we want to be in. Was this just an attempt to come and pick up some liquidity down here, which is the low of Tokyo, to try and push price higher? So I want to see whether or not this established area down here, which is the low of Tokyo, gets respected or disrespected as well. So in this case, what am I waiting for? I'm waiting to see whether or not the next leg, this leg over here, after creating this new low, creates a lower high. And if it creates a lower high, then I know, more certain than not, that price is most probably going to try and push lower. So what do we have? We have 1, 2, 3, almost 4 bullish candles that does not break that recent lower high or the previous high. So lower high over there, it failed. It slowed down as it came to this area as well with these 2 candles over here to try and push price up. It slowed down. And then the very next opportunity that we had to try and push price lower, we had a nice volumetric candle in this one. So what would I have looked for? A sell on the close of this candle with my stop loss being just above. In this case, it would have been a great 1 to 2 as an example, or even a 1 to 1 with NASDAQ, with my stop loss being just above this swing point over here. What helps, what assists in viewing this is having a look at the EMAs. The EMA is expanding away from the 50 EMA. So the 10 EMA, this purple one, is expanding. It's moving further away from the 50 EMA. So you're seeing some sort of volume. You're seeing it on the candles. The candles are larger as it's going down than it is going up. You're seeing it respecting EMAs. In this case, the 50 EMA, it just wicked. It doesn't really close above. You had a reaction of an established area, which was a high, previous day high, previous session high, previous day low, that kind of like stuff. And you're seeing structure align. You're seeing a high, you're seeing a low, you're seeing a lower high, you're seeing a lower low. Well, in this case, lower low and lower high. You're seeing this happen. Then you just need to react. And that is exactly what I'm going to be looking for on euro, on pound, on gold, all of them. That's what I'm looking for. I want to see structure created. I want to see established areas respected or reacted from. If we're going to see a structure change, I want to see price heavily slow down during or close to areas of interest. So in this case, this was an area of interest that I marked up not too long ago. I want to see price slow down. I'm not going to take a buy just because it hit this level, just because it touched it. I'm not going to now all of a sudden jump in on a sell. I want to see if this area is indeed an area where price wants to react from. So right now, we've wicked this area right now. I want to see price try and go lower. I want to see price reattempt to test this area and then start pushing lower. Ideally, if I can get a slightly lower high, that would be great. A lower high would signify to me that this is a much stronger area of resistance where price is struggling to push through it. And then there is always the potential for you to then create a new downward structure from there, because you have all of this areas down here to try and test. You have orders that are sitting down here that are waiting to be traded in. So that's what I would like to see. Now, inversely, if price does break through this area where we are right now, then all it is confirming to me is that we have upward structure. Higher highs, higher lows. So price comes back down, maybe to this little area over here where we previously struggled to break through. We have a slight little base area as well on the 5 minute. So this candle over here being a base. For those of you who know, a base to me is just back and forth between bulls and the bears. And that was the last time that the bears attempted to fight back before losing to the bulls, where the bulls started pushing much higher. If price were to come back down here and react off of it, we have a higher high in relation to the previous high. We have a higher low. This would then be the new higher low in relation to that previous higher low. It's just a continuation of structure. And then I would want to try and enter. What might prevent me from wanting to get in is how strong or volumetric this attempt at a pushdown is. If it's very strong and not very slowed, like it's big, strong candles in relation to the previous ones. In this case, they look mediocre. If you had to compare these candles to these candles, which ones would you say are stronger? It's obvious it's the bullish candles. So I don't want to see this kind of candle trying to push it lower, because that's volume. That means that this area up here might be more of a respected resistance point and price might continue pushing lower. So in this case, 50 EMA is being respected. We seem to be having upward bullish structure with higher highs and higher lows. We do have this whole gap area to try and fill still, which we could potentially. So I'm leaning more towards the idea that euro is going to try and push up right now. So I want to see how much of this lower structure over here, or lower time frame structure, is being respected. On gold, it's similar. Gold has been printing the high of the day, or the high of the Tokyo session, London session, tried to, but failed. We are printing lower highs, lower lows. Right now, volumetric, like I said, well, like we said earlier, New York session, we're going to see a little bit more movement in gold. I don't know if this movement down here is going to be slowed. I think it's going to be a strong one if we can start pushing lower. We are already 15 minutes into the session, and we had a bullish opening candle of the session followed by two bearish candles quite strongly, and we've already created a new low on the London session. So there is a potential for us to come all the way down here or even lower. So there is a potential for us to break through, retest, continue down, try and take these previous swing points down here, try and push lower to get to this area of support. That's kind of like what I'm seeing right now on gold. And it's because of price action. You have a equal high almost here. So high of the session, an established area. Let's do this. You have the last candle before price started pushing lower. This was the last attempt to try and push price up. Sorry, let's do that. Last chance. Price started pushing lower, retested it, and then started slowly pushing lower. Not a lot of volume, to be dead honest, but now you're getting a little bit more action, a little bit more volume in the market. Makes sense because it's the New York session, more participants. So let's see what can happen here. Price can potentially come back to the 50 EMA. It might even... this isn't a really crazy strong area in my opinion. This is a little bit stronger. Because this attempt here is what created a new high in relation to these lows. So potentially price can come down to this point, which is, let's say, 50-50, $5,050. If it continues to push lower. So 1, 2 bearish candles, a potential bullish candle right now, another 2.5 minutes before this 5-minute candle closes, then I need to see follow through. I need to see another bearish candle trying to push price lower, and then I could potentially get in on a sell to try and hopefully push price a little bit lower, maybe even to the midpoint. But we have to see how strong this bullish attempt at this low point is right now. Ideally, if we came back to the 50 EMA as an example and maybe have, let's make this 40,000 and this 20,000, so 1 to 2 R exactly. If we were to come back down up to this point, I would much rather have my stop loss be above that most recent swing point. So something like that. And then I would potentially look for a 1 to 2, which could theoretically pierce past that lower swing point during Tokyo session this morning. But that's, once again, this depends on whether or not we're going to have a bit more of a retrace back into the higher portions of this New York session. Because the New York session has only just opened up. However, let's say hypothetically we do not push lower from here and we start printing bullish structure, higher highs, higher lows, then I'd much rather look for a buy and then potentially try and buy in to either the highs of the day or the highs of the Tokyo session. Strong candles so far. Struggling to print higher highs. We're printing lower lows. So in general, I would say higher likelihood of a potential sell to try and push price lower. Maybe even come and retest the 5K, let's say 5,015 to 4,996. There's that potential. All right. High stakes, I have a 20K in big drawdown as well. In that case, I would say step away, mate. Like, just take a bit of a break. I had to do that the other day. I lost a 20K account that I had for a long time. Silly thing happened. I lost the account. It is what it is. I stepped away. Got myself a new account. It's already in profit. So sometimes it's best to just kind of like step away for a little while, gather your bearings and carry on. Gold, we were just looking at now. Have you traded today, Rich? Yes, I had a singular trade this morning. That wasn't the trade. This one was the trade. So this was my trade entry this morning. 24,285 on same thing, structure, higher highs, higher lows. We broke above an established area, and when we tried to push price lower with these two candles, we failed. We made another bullish candle. On the close of that candle, I decided to get in. So a buy on NAS. According to LJ, well, as you can see here, I should have kept it to try and push it higher. But I'm still not comfortable with that idea. I like my 1 to 2s. I like not being in trades for too long. I like locking up profits and then moving on to a next trade. So every trade that I win, I know that the next trade I have 0.25%, 0.5%, 1% that I can lose, and I can still be break even either on the day or on the week or on the month or something like that. So I like locking up profits. Probably leaving some runners on the table that could potentially be like amazing runners, like for argument's sake, last week Friday was a very, very nice attempt to try and push price lower. I did have a sell, but once again, the sell was not a long lift sell. It was short. So this exact price action that we had here, I did take a sell on this candle. Wasn't entirely on the closure of that candle, but I had a 1-to-1 here on this one last week Friday. So had I left it and potentially just reduce or bring my stop loss down every single time we reached a swing point, I could potentially have been in quite a bit of profit until the end of the day. But I'm just not comfortable leaving my trades on for so long. Not my style. So yeah, just the one trade today. I am waiting for the New York session to show me what it wants to do. Right now, we swept the highs, basically. So the most recent high that we had, we swept it. We have yet to break and close above. So to me, this is starting to set out as a bit of a resistance area. We do have some base areas. So here's the base area over here that was not reacted off of, that price can potentially come back to. Let me just remove this, and this. We do have the highs of Tokyo, which was also an area of interest, also an established area that price can potentially react off of to try and push off. We do have this bullish order block down here that potentially could also still be tested. However, if we get down to here, I'm probably not looking for any more buys for today at least. It's too much of a retracement. The pullback is way too deep. Ideally, I would love to rather just see price try and pull back up again, fail, and then start pushing down, and then break to try and test these. So I'd rather look for sells instead of trying to buy my way up from here. Too deep of a pullback. Oh, wow. Okay. Used to watch us on the London live trading. Oh, that's cool. Then you should know Richard Wells as well. He was the originator of the London live trading floor. He will be here on Thursday. So, yeah. Thank you, mate. Really appreciate you joining us here as well. Welcome to the big leagues. Tafts Forever is saying, opinion. GU will cover the gap created at the end of February, beginning of March. So GU onto the daily. January, February. Maybe on the 4-hourly. End January, beginning March. So this gap here, the one of last week Monday. So this. Yeah. So you want it to come to about 134.56 to 134.70. There is a potential. I mean, gaps do like getting filled in general. Scary point of view is the fact that we did make a lower low. Oh, is my mouse starting with its problems again? I might need to get another mouse. We did make a lower low here, but at the same time, we also made a higher high last week Friday. Scary, but I do think that we first need to come and test last week Friday's highs and close convincingly above that before we're going to potentially come and test this. Once again, consider price action after the fact as well. So yes, we have a gap, but we have a lot of price action. Some of it sideways, some of it equal lows, some of it lower lows. Do take them into consideration as well prior to just saying, I want this to be taken. Ideally, I would love it to be taken, obviously. But local price action does play a role. And this gap that we have here first needs to be filled as well. We're getting close to filling it. So there's 3 minutes left on this candle. This is a 5 minute. Let's look what the 15 minute. So the 15 minute, 3 minute before this candle closes. Where did we react? So we basically reacted off of this low here. So the low of the consolidation of last week Friday. Well, not over yet. 15-minute candle doesn't look horrible. I still like this idea for a potential trade. Doubt it's going to come all the way down. Yeah, doubt it. What does the zero lag show? Quite bullish. Yeah, I think this is potentially too late. I don't think it's going to come back because we have 2 minutes left on this 5 minute candle and it looks decent so far. Not over yet, not closed yet, but it still looks decent. 15 minute long wick below, pretty much slightly higher high in relation to that previous one. Yeah, I think this is not going to happen. I don't think it's going to come deep enough to pick up this order and then potentially pick up. Obviously, I don't have a trade in, but yeah, you kind of get the idea. 15-minute long wick above on NAS. Like I said, we just wick this high end. We've come back down to test the Tokyo high, which was also in this case, it was a bearish order block, but it's now no longer a bearish order block. Let's just call this a breakpoint because this was the point at which price broke up above. We'll see if we can, with this 5 minute candle now, it's definitely going to close as bullish because we have 46 seconds left and it looks pretty bullish. We'll see whether or not there is a follow through bearish candle. or a follow-through bullish candle. For follow-through bullish candle, we'll probably come and test this highs again. If that does happen, then I would be more inclined to look for buys. Whereas if it is a bearish candle, I would much rather be inclined to look for sells. The follow-up candles, let's say. Euro looking interesting now. Yeah, it is. It wicked this area of interest that I had marked up. Hasn't pushed lower as yet. We'll see whether or not it's literally just it just wicked onto this base area and it's printed a bullish candle. Let's see in the next 5 minutes whether or not this one is going to be a bullish candle as well. Need to see follow through. Nasdaq, we'll see with that one as well. US 30 and Nasdaq do tend to move similarly. Both of them have the high with a lower high, but this one I think is slightly different because this one on Nasdaq we broke through the highs of the London session as well as the highs of the day. Maybe this is potentially if we can start printing, in this case this is now the low, this is the high. I want to see a higher low potentially like this to come and fill the rest of this gap. That would be cool. That would be a good directional trade. But it's still waiting. Huh? Barry, Rich, I thought you, a nice person. Why are you streaming at the same time as Dave, daft lad? You should be teaming up. Oh, wait, I never thought you were a nice lad. Anyway, so interestingly enough, we do have the futures channel that released today, the YouTube futures channel, and you guys are more than welcome to leave me if you want to, and you can go and join Dave, who is streaming on his lonesome on the futures channel section. We should have a link in the description for the futures channel. Do go ahead and join Dave if you want to with the New York Open. Dave is a swell guy. Love Dave. Awesome guy. Yeah, go and join the futures channel if you guys want to. Love the stream, mate. Smooth articulation as usual. Thank you very much. I really appreciate it, mate. Thank you very much, Free BD. I am here every single day. We're trying to bring out good, solid content. It's free, of course. We only ask that you like and subscribe. If you do subscribe, then you make sure that we become more visual to other people. So the YouTube platform sees that there's good engagement. It sees that people like the content, and it tries to push that to more people so we can get more people involved, get more people potentially to trade with the Fivers. In my opinion, yes, biased, but still best prop firm out there. So yeah, we do appreciate it. And then once again on Wednesday, this coming Wednesday, we are going to have the 100k subscribers giveaway. So please come and join us on Wednesday. The giveaway is going to be between LJ's segment and Sol's segment. So it's going to be, let me just give you the exact time. The giveaway is going to be between 12 and 2 p.m. GMT. So between 12 and 2 p.m. GMT. Do come and join us. We're going to have some fun. We're going to talk a little bit of crap. We're going to give away some accounts. I'm not yet going to tell you how many accounts. But once again, it's free. And it's going to be exclusively to everybody at the live stream. So if you're here on the day and you've liked and you've subscribed, you have a chance of winning an account. Free of charge. Not cost you a cent. You just need to be here on the day. That's all. It's a pleasure, mate. Once again, I don't know everything. I don't claim to know everything, but what I do know, I feel like I know decently enough that I can potentially explain it. So if you understood exactly what I said, then that's great. Then I've done my job, mate. Then yeah, love it. Thank you very much. I do. Well, dude, that's awesome. I'm glad you're here. Really, I am. For those of you who are waiting or patiently waiting for Samir and Victor, Samir is off today. He will be back again tomorrow. And Victor should be back tomorrow as well. Victor just had a emergency that he needed to go and attend to today. So, yeah. Do I consider trend lines on the high time frames? I do sometimes. So I might go over to the 4-hourly from time to time. But because I am a intraday trader, I tend to kind of stay between the 1 hour and the 5 minute in general. So I don't tend to hold trades longer than 2 to 3 hours in general. I think on average my trades, it's roughly 37 minutes to 42 minutes a trade. That's like my average trade holding time. What I do use the higher time frames for is to see if there is an area during the higher time frame where price could potentially be close to where it recently or previously reacted from. So just to give you an idea, this is NASDAQ. I like trading NASDAQ. If I have a look over here, I can see a bit of a resistance area, which is not a crazy big one. It's not the highest time frame or whatnot, but it's a decent one. So let's say hypothetically, we were trading roughly around here during the lower time frame, 15 minutes, 5 minutes or whatnot. I would be less inclined to look for buys. Even though the price action is showing buys, I would be less inclined because there is a good likelihood that if we do reach this area that there might be a rejection. I would obviously wait for the rejection first before I start selling off, but you get the idea. Higher time frame, I look for areas of interest and then I want to see how price reacts around that area. So general high swings like this one, there's no follow through. Like price absolutely tanked down from there. So to me, this area is an area of high interest. Should price come back to it, I would most likely look for sells if sells present. All right. Euro USD, massive drop off. Let's go and have a look. Go to the 5 minute. Yeah. So this reaction that we had over here seems to be a little bit stronger. So here's what I'm going to wait for now. I am going to wait for another attempt to try and push price up. And then I would most probably look for a sell on Euro USD. So once again, even though we had the reaction here and there was a bit of a push down lower, generally, if I put the EMAs on again, generally it does respect the EMAs quite well, but I want to see volume. And this is a volumetric candle to me. If we got that on this candle over here, that would have been cool. Then I could just go for a buy. It would have made sense. Right now, buying doesn't make sense at all. We're going back down to test this higher low. This is a volumetric candle. It's very large in relation to all of the previous candles that we had. This is a convicted move. So I would much rather sell from here than buy. GU should be the same. Yeah. So even though I did mark this as a potential buy, like I mentioned earlier, the volume of this candle plays a massive role in whether or not I'm willing to take a trade, especially if it's a break and retest. You want your retests to be slowed. You want it to come back down and have like this arching effect instead of a knife pushing through your zone. So this is not a trade that I can take. And that's why it's important for me to react to the candle sizes and the momentum of that candle and the volume of that candle. Instead of just saying willy-nilly, okay, I'm going to place a trade there and buy the moment it gets to that point. Veloso saying GU, same as EU at the moment, mate. It is a little bit more volumetric, but once again, this one is reacting a little bit differently than EU did. EU, if you have a look, we had this area of interest that it literally wicked off of and then started pushing lower. But GU doesn't quite have that exact same. Actually, it does. Let's see. Let's take the full candle. Let's do this, and then let's go all the way through. So pierced a little bit into it. Once again, a little bit deeper. 3 wick rejection, you can almost say. Price then started pushing lower. When price came back to it, it literally wicked. If you don't believe me. It literally wicked that box. And that box is just the low point here. The last time price tried to push lower, the lowest point, as well as the highest point of that candle before price started pushing higher. So basically last attempt to try and push price lower. That's where we came to test, and we started selling off. Ooh. This is on the 5 minutes, so this is quite the volumetric candle that we had previously. So this area here now no longer is of interest to me whatsoever. I will wait for price to potentially start pushing lower. One thing that you can do is you can potentially look at this as a channel. You don't take into consideration these wicks because price, when it came back to it more than often, it respected it. So this is an outlier. This is an attempt to try and push price lower, which failed. And then price made higher highs, higher lows, higher highs. So general bullish structure. We've broken through. What's the potential now? There is a potential to retest and then potentially push lower. Remember, volume moves markets. Like you can see a candle, it looks very big for a sell down. It's potentially a strong candle and potentially the start of a new bearish cycle. But yeah, we'll wait and see whether or not this is indeed a new bearish cycle or whether or not this is just a deeper than normal pullback to try and pick up some liquidity to try and push price up. The way that it's going right now, I doubt it. I doubt that this is a liquidity sweep with the intention of trying to push price higher. I can see a potential like this, pushing down. We do have local structures, lower swing points that can be tested if we do break through. If we do not break through, that's okay. But let's see. Gold, let's see what gold is doing. So that would have been quite the trade to take. This was based on, I think I drew a fib on this one. Can't even remember why. Yeah, so just a little bit deeper of a pullback and then a potential to push lower. I mean, if you took this trade, it's not bad. It would be a 1-to-1 by now. So if this was a trade, I didn't take it for, just make sure that everybody is aware. I did not take this trade. This is not a trade. We were just discussing it, that this is a potential movement should price come back again. It's pushing lower. We want to see it maybe come back and retest like this last swing point to try and push price lower. So last swing point like that to try and test it. This low point over here got disrespected, broke through, closed through. No, actually it didn't. It's breaking through now. 30 seconds or so, then it will potentially be the close through on this one. Let's see, NASDAQ. Still struggling around this breakpoint. See, normally I could have taken a trade like this one for a 1 to 2 as well. The option was there. Could have happened. But generally this like sell down that you have here and then just blindly taking a trade once there's one bullish candle to try and buy up doesn't always work in my favor. Okay, back to gold. Let's have a look. I'm just going to delete that because I didn't actually take that trade. Gold is definitely printing lower lows as well as lower highs. That's basically a slightly equal high. This high over here. So you have microstructure here, a break of the microstructure, a re-establishment of a microstructure, a volumetric reaction. Yeah, it's difficult to just know when to get in on gold when you have like these volumetric trades like this, because you don't want to catch a falling knife. So you don't want to accidentally go and sell here at the bottom and then it starts retracing because this was a volumetric move. Offie is asking, can you analyze gold in the higher time frame 4-hour chart? What would be your key levels? All right, cool, let's do this. All right, first things first, remove all the drawings. Fresh analysis, higher time frame. As of right now, we do have a 4-hour channel. Okay, so this is from Wednesday, last week. We have a slight channel, slightly downward. We have had multiple attempts to try and push price lower. We are generally making lower highs and lower lows on the 4-hourly. Okay, so generally a downward trajectory. Difficult word to say, trajectory. Okay, Ghosty, my cat. Okay, so we have a general downward direction. Yes, short term, it's only since last week Wednesday, but what we do have is we have had like a attempt to try and push price higher and then a failure. So the last candle before price started volumetrically pushing lower is technically this candle over here, but you can consider this the high, the new low, the lower high. So this is where we established a new downward trend. Okay, so this area to me becomes more interesting to see if price can come back to this. I'm just going to call it a bearish order block, even though it's not, in my opinion, an order block yet, but right now. So if price were to start pushing up, this is a potential area for it to try and test. That's one area. The secondary area is we have had this area of consolidation. This was a few days of consolidation. When price broke above and retested it, it failed. But when price re-entered the same area, as you can see, we reacted off of it. So this was an area of consolidation. It is now a resistance / support zone. As of right now, it's resistance. So it's a break point for me. So if price were to break above this, there is a potential for it to potentially push higher. If price does come back down or come back up to it, reacts off of it, starts pushing lower, I would expect it to have a similar reaction than it had in these last two attempts. Okay, so breakpoint, a higher one should we break through. Now let's look for a lower point. We do have a slight area of consolidation over here, which happened to also have had 1-2 reactions off of. So this is an area of support. I'm just going to call it a break zone. If it's an area of support or resistance, instead of changing it and saying, oh, now it's support, now it's resistance, I just call it break zones. Because if price breaks through it, then it becomes a resistance point. If price breaks above it, then it becomes a support zone. So right now, we're stuck between these two areas, 2 breakpoints, consolidation, multiple reactions, consolidation, multiple reactions. We have a slight downward trajectory between these 2 points. Technically, we are consolidating between these 2 points because we're not breaking above or below it. If price were to break below this area, where can we potentially come and test? We're looking for an area where there was previously a strong reaction and a failure to push lower, which seems to be right over here. So this was the lowest point down here. When price had another opportunity to try and push lower, it failed. So this is the break point, and we've already had a singular reaction off of it. So this becomes a nice area of support. Should price come back down to it, I'm going to mark it as a bullish order block, even though it isn't right now, just visually so that you can see the differences between them. So if price were to break lower, retest and continue, then this is going to be what we're going to be aiming for. Yes, there are areas to the left that you can potentially test and react off of, but this was the biggest reaction with a singular reaction off of it already. So biggest move, last attempt to try and push price lower, re-establishment of a new trend or a new directional movement. And it was on this candle, and it was already retested. So if price were to come back down, this is what I would want to see tested. However, if price pushes above, retests and continues up, this is the area that it needs to come and test and break through before it can potentially go and look for all-time highs. Like we discussed earlier, myself and LJ, there is the potential for us to come a little bit lower, sweep, and then continue up. But that is going to depend on, if you go to the weekly, if this week is going to be the same as what we had over here. So a push up, 2 weeks of bearish candles, a push up, 2 weeks of bearish candles, and then we completely stall out selling, and then we start reinitiating potential buys, taking a little bit of time and then ramping up. Is that something that we can see? Yes, we can see that. Still technically very bullish on the higher time frames, weekly, daily, and so on. Still quite, well, not so much on the daily, but like very weekly, and on the monthly, we're very bullish. So higher time frames, still very bullish. Lower time frames, obviously, is going to change. 4 hourly is a little bit consolidative. Hourly is consolidative as well. 15-minute might look consolidative as well, or it might be making lower highs and lower lows and potentially be bearish. It's always something to take into consideration. Would you say that we're making lower low, lower high on the 15-minute now? So yes, I would. So right now, if we just take the Tokyo session highs as the high of the day, even though it wasn't, but like just for the sake of argument, when we had an opportunity to try and break above it, we failed. So this is, yes, a lower high. You go and look for the lowest point prior to this being created. And that is this low over here. That is the most recent low before we made the high. In this case, it took quite a while. We wicked it, but we did eventually break lower. So you can think of this wick over here as a new low, even though it's barely lower. But you get the idea. It's barely lower, but it's still a low. So you can see that the high that we have here, that was the high. This was the low. This one over here is a lower high. And this down here is a lower low. So once again, as price reacts, makes a lower low, you want it to make a lower high, which it did. Lower high. And every time there's a new swing, so multiple bullish candles, bearish candle, multiple bullish candles, bearish candle. Every bearish candle that you have is technically a swing point, or it is a reversal point. In this case, this ended up being a reversal point. It wasn't just a swing. So the bullish candles in this case was the swing because we're in a downward trajectory. So right now, lower high. Sorry, lower low, not a lower high. What do we want to see? We want to see price try and push back up again, create a lower high, continue pushing lower, enter for a sell. That's generally how you would trade lower high, lower lows. Wait for establishment, wait for a pullback, and a continuation of that established movement, directional bias, and then enter. So yes. Would you say you're making lower lows and lower highs on the 15-minute now? Yes, I would. It's very clearly going lower. And you don't have to do exactly what I'm doing here, but just a general idea of marking up the highs and the most recent low points and then seeing how price reacts in that area. So generally when you have stuff like this as well, where we're not really breaking lower lows, but we're making slightly even lows, but we're staying within a high and a low. We're kind of just stuck in there. That is just general consolidation. Yes, you can get higher time frame consolidation. You can have higher flow consolidation, where you're going a lot higher and lower and higher and lower, but a very big band of highs and lows that just kind of like stay the same. That's just higher flow of consolidation. Those generally have the best breakouts. If you have a higher, longer time frame, let's rather say, consolidation. So in this case, if we're going to have a breakout between these 2 points, it's probably going to be a strong breakout because we've been stuck here for a while. Yes, you have your price action in between, but eventually if one of them breaks and it gets retested, it's going to be a strong one because we were stuck here for so long. And you generally see it like if I go onto the daily. Long-term consolidation. When we eventually had the breakout, look how long that breakout was, how strong. Look for more consolidation. There isn't all that much. Maybe this, you could have said, was a bit of a consolidation on the daily. When we had the breakout, strong. So sounds so silly when I say that. Breakout strong. Anyway, yeah. As of right now, gold a little bit more bearish, lower time frame, 15-minute, 5-minute as well. Lower high, or this is the high, this was the low, lower high, lower low, potentially creating another lower high, potentially creating another lower low. So 15 and 5-minute to me is bearish. I would say the hourly is also bearish because on the hourly you are making lower swing points as well. But the moment you start getting towards the 4-hour, it's a little bit more consolidative. The daily is definitely a bit consolidative over the last few days. The weekly, it's, as of right now, still bullish. So highest time frame, in this case weekly on my chart, we are very bullish still. We haven't broken structure as yet. Lower time frame, bearish, taking recent structures into mind. Okay. Dude, pleasure. I agree. I'm leaning towards downside break before we resume swings up. Yeah. Like we discussed this morning with LJ, it makes a little bit more sense to potentially have a little bit more downward movement, but slowed. And then a new invigorated bullish move. So a little bit slowed and then a potential push up. And that kind of also aligns a little bit with whether or not, or like the impact, let's rather say, from the current geopolitical escalations that we've had, whether or not that input is going to be as expected or against our expectancy. Expectancy is that generally when you have wars, you have conflicts, you have uncertainty, you see assets like gold rise higher, because generally it is seen more of a risk off. If you are uncertain, you would much rather go into gold, because gold shows a propensity to try and push higher. If you are not very risk averse, or if you're very risk averse, gold would be a good place to kind of like buy into, versus looking at something like euro or pound or whatnot, or even the dollar. I think that's also one of the reasons, if you look at the JPY, it gapped higher, because generally in this case the yen has always been seen as a little bit more of a safe haven currency. If you have a look at the yen pairs, some of them are not doing that well, like EU and whatnot, but in general the majority of them have pushed higher. So if we go on to the daily, you are seeing lows and highs. So in this case, that was the low, this is a higher low, that was the high, this is a higher high. And you're generally seeing it with these swing points as well, that it's trying to push higher. Ever since the conflict started, USJPY has been generally pushing up. So yeah, risk on and risk off assets, not all of them are acting the same or the way that we expected them to move. Like gold has been going a little bit sideways, but in general, wartime, uncertainty, geopolitical unrest, that kind of like stuff, currencies are not doing that great. You would much rather go into something like gold as an asset to try and alleviate some of your risk, because it just generally starts pushing a little bit higher during those uncertain periods, but it's not doing that right now. It's kind of stuck. So yeah. EU possible short setup. Let's look at the 5 first. Okay, so if I go to the 15-minute, we wicked this recent low that we had over here. Strong reaction from above. 15-minute candle so far printed a bullish candle after rejecting. No follow through just yet on 15-minute. On the 5-minute, we've had multiple bullish candles. A bit of almost a doji, not quite. The candle didn't open and close at the exact same point, but a potential pullback. To where? So if we take this base that we had and we look at this now as a new base, so something like that. Price can potentially come back to it and then react off of it. Bigs to be seen. I mean, the highs, the Tokyo highs as well on Euro doesn't look horrible either as a potential area, because when it was established, strong attempt to try and push down. We did break a little bit off these lower lows. We tried to come back up again, failed, then push low, creating the low of London. When we did come back up to the Tokyo highs, we semi-respected it, went into consolidation, broke through, came back into this area over here, which was in a higher area of interest, failed to push through, started printing a little bit lower, nice volumetric candle. I mean, if we were to reject here and start pushing lower and then actually break and close lower than this low point that we have over here, I would then say with certainty that we're going to start selling off. because local structure matters right now in this case, because you've already had a singular reaction and you have these lower highs and lower lows which are playing out. So you want to see a slowed movement. So you want to see it slowed arch, then try and push lower, retest and continue. So right now, this one is about to print a bearish candle. It could be a good time to potentially look for a sell. It could be. It is slowed quite a bit. So strong volumetric candle, an attempt to push price up higher, not so volumetric, weaker, not as convicting. You know, the conviction is not there as strongly. This is starting to look more like a potential sell. Stop loss maybe just above the swing. Aim for the most recent low. I mean, it could work. You could have your stop loss just maybe a little bit above, let's say 10 pips or so from where we are now. 15 pip, that would be this low over here. If that low were to get broken, can we get to here? That's a base. We could. So if these lows over here get broken, closed, we could potentially come and test here if it continues pushing lower. If we don't, we might just kind of like get stuck here. But something like that could work. Okay, I'm going to mark it as if I have just taken the trade. Okay, so this is generally what I would be looking for. New base created, reaction of an established area. This candle is way too strong for me to get in on this candle, but potential rejection here. So this is potentially what the trade would have looked like. So let's just keep it up here. Not super convinced of the trade, to be dead honest with you, but we'll see. What's the 15-minute doing? 15-minute is still bullish. I don't like the fact that we did not close lower than this low swing over here. Not the biggest fan, but there might be some potential movements stemming from this area over here. Possible short on Bitcoin. I can see why you would want to short, because you have this area of support over here, but there is a lot in this support. There's a lot of space. This morning we reacted off of this area over here. Last attempt to try and push price lower before we had a strong push up higher. Price came back down to it, reacted off of it and started pushing up. Okay, let's say hypothetically that area doesn't exist. This area of interest doesn't exist. What else is there for us to test for potential buys? That is a potential zone to buy into. And then this last candle over here, potentially after that, can also be a potential area to buy into. And then the very last attempt to try and push price higher before collapsing lower. So 3 areas potentially, if we assume that this area down here is a bit of a stronger support zone to try and push price higher. However, if it's not, if it's short term, it isn't a very strong support zone, we do have these areas over here where we are currently right now as a resistance point to try and react, to try and push price lower from. Or what I would say is we do have this low over here. This is a higher low. And these areas over here generally have been respected so far. So not yet, in my opinion, not yet a push lower from here. I would want to see it come into this area first, respect it, and then start pushing lower on Bitcoin. iSecret saying, MetaTrader 5 platform so hard to trade, how to trade directly in TradingView with the Fivers fund. So generally with the TradingView platform, you have something called Trade Locker, or you can log your, or you can, let's say, connect your brokerage to TradingView. I don't think you can do that with the Fivers, unfortunately. The Fivers has MetaTrader 5 and CTrader that you can generally trade CFDs on. So if you don't like MetaTrader 5, you can try CTrader. CTrader does have a extra cost per account. I think it's $10, but that is just what it costs to use CTrader, where MetaTrader is free. But it's not that different. Once you get used to MetaTrader as a platform, you'll realize it's very simplistic. It's not a very good drawing platform. That's why I like using MetaTrader. Why I like using TradingView, not MetaTrader, to draw, because it's intuitive to draw here. You can't draw like this with MetaTrader. MetaTrader, you have to go, okay, arrow, another arrow, another arrow, you know, that kind of like stuff. So TradingView, way more intuitive with drawing. MetaTrader is fine for trading. Like, really it is. Melvin saying, thanks, dude. Pleasure. Melvin Kennedy Fernandez. Oh, dude, cool name. I love the name Kennedy. It's one of my favorite singers' name is Miles Kennedy. Cool name. Centaur Wall. Silver analyze. Pull back to 81, 82, and then bull run. My thoughts. Silver. So we had a look at silver earlier. These two areas pretty much, this one over here and this one over here, was pretty much what we wanted to see break and continue. The only issue that I saw was the fact that we were struggling in this area, but we already made a lower low on the morning. However, we're not pushing higher, which kind of gives me the idea that if we were to have a break, it's probably going to try and break up higher, based on the fact that we've had multiple attempts in this area to try and push higher. And when we actually had our break down here, there was nothing in it. Price didn't try and push even lower. So gold and silver is a bit tricky at the moment because it's not reacting the same way as you would have expected. Well, not silver. I don't care about silver when it comes to like the war efforts and stuff like that. Gold is not moving the way that we expected it was going to move, based on the geopolitical unrest that we've had. Whereas silver kind of like rides on the coattails of gold, in the sense that if I were to do this and I put the two next to each other, okay, there's a lot of drawing here, but this is both on the hourly. You'll generally see that they have similar movements, though silver is not as volumetric in the same sense. When they both go into consolidation, or when the one goes into consolidation, the other one kind of as well goes into consolidation. We have attempts at breakouts. You have attempts at breakouts. Silver follows gold generally, but I feel like it runs on the coattails because gold to me is a precious metal. Gold to me has more uses. Gold to me is generally more sought after. And on top of that, gold is more of a risk-off asset. If you don't want to participate in bonds and stocks and stuff like that, you would generally go for gold. Who trades silver? I feel like silver has for the longest time not really given us much, and only over the last few months has actually started to show much movement. This is from December. From December we started pushing up, whereas gold has been doing gold things for the better part of since forever. You know, gold has been naught but pushing it from 2024, like really pushing higher. So you can basically see, can't really see it because but you can basically see roughly the $2,000 mark was like a high resistance point. And then when we started breaking through that, we just, in the space of, this is March 2024, in 2 years, we've doubled the price of gold. With silver, yes, we've also doubled. However, much longer periods of consolidation. And then when we finally had the breakout, we did start pushing up. Yes, we did go from 31 all the way up to 122, which is 4xing, which is crazy. But when I'm talking about long-term growth, gold has been better. In the interim here, silver has been pretty good. Not gonna lie. But that to me means it might be prone to deeper pullbacks. It's not used to this movement that it's having right now. I just don't feel like silver has the same application that gold has. So driving force behind it is silver. Silver is doing good. Why? Because gold is doing good. General. So as of right now, I would say this 84.86 to 85.5, we really need to break above this point. Retest it potentially, or at least have a much shallower pullback before continuing up, and then potentially testing these previous swing points before we get all the way back up to about 90-ish. Just my personal opinion, obviously. I'm not saying that that's how it's definitely going to go, but I just don't see too much value in trading silver when I can be trading gold. Silver generally has more spread, generally has, I would say, the same price action as gold, but gold can give you sweeter movements and doesn't cost as much to participate. Your spread is not as much. So, just my personal opinion. It's probably the same reason why I don't like trading Bitcoin. I used to buy and hold Bitcoin a long time ago. I have gotten rid of all of my Bitcoin, but I would consider getting back in Bitcoin if we can potentially break closer to 80. Yeah, I know, a bit late and whatnot, but I think the end of the Bitcoin market low is probably going to be around October. But that's just because of cycles. So I would rather wait for it to show its propensity to want to start buying up closer to that time, and then I'll re-enter again. Maybe. We'll see. I've kind of lost faith in Bitcoin. Personal opinion, just a personal opinion. Don't let my personal opinions impact your decision making. Bitcoin to me is not what it was promised to be. Bitcoin to me is not it was supposed to be decentralized, and it feels like it's way more centralized now because of governments pushing into it and trying to regulate it. But at the same time, we're seeing the higher numbers and it pushing into new all-time highs because of governments kind of like wanting to regulate it. So they want to be in control, and if they can be in control, they can put the price wherever they want. That kind of like thing. Nights in Asia is best for silver. I mean, yeah. I mean, look at these moves, mate. This was last week, Tuesday. What a sell-off. But then you had the continuation during London as well. Buy up during Asia. First section of London, we buy up as well. Massive sell-off attempt, retest, and then eventually we come back to it later in the day. Tempted a buy up, consolidate. Tempted a sell down, consolidate. Same thing today. Buy up, consolidate. So yeah, agree with you. Tokyo session, the Asia session, it's good for silver, but it's good for gold as well. So in general, gold and silver do move very nicely during the Tokyo sessions. They do generally move quite well. TradeBurner, like your funded accounts, funds are real or simulated because many other firms clearly mention at the end of their website that all the activity related to trading are done in simulated funds. All right, so evaluation accounts will always be simulated, always. There is no way that a prop firm of any sort is going to risk testing someone's ability to trade with actual funds. So all evaluation phases are simulated accounts. Then, once you become funded, it becomes a different story. You get different types of accounts. So we call it booking. So you get A booking, you get B booking, you even get C and D booking. And all of these types of books basically refers to how your actual trade interacts with the CME or plays out with an exchange. So generally, A booking is the best, clearest, cleanest, because your trade is directly playing out on some sort of exchange. And you generally get this more with futures accounts, because its price is derived directly from the CME. Okay. B booking means that the broker can take your trade and it can either take the opposite direction or it can have it go through as is, meaning that B booking allows for a certain amount of manipulation of the trade. C booking and D booking are similar to that of B booking in the sense that you can control how much of a certain person's trading actually goes through to the market and what portions of it is being adjusted by the broker. Funded accounts work the same way. You get different booking, A booking all the way through to D booking, sometimes E booking, F booking. It really depends on how the prop firm wants its traders to interact with the market. Okay? Good traders, profitable traders that have proven edge, that have proven consistency, are more likely to be placed on A booking in general than somebody that is more gambling, is struggling to pass accounts. It makes more sense to have them more on either a B booking. It's not to say that they don't trust your trading, is that they're not willing to risk their capital with your trading. So you can still make money with B booking because what they could do is they can take the literal opposite of your trade. So let's say hypothetically, I'm not a very profitable trader and I decide, okay, I'm going to buy, reverse. I'm going to buy from here to there, and that's going to be my stop loss. If I'm not a good trader, my prop firm or the broker that I'm using may as well just literally do that. They might take the literal opposite of my trade, because they look at my data and they see, Richard is struggling. Richard has a 40% win rate and he's got a 1-to-1 R. Clearly, I'm not profitable. So 60% of the time, if they take 1-to-1s, they're going to make money by taking the opposite of my trade. So in this case, the Fivers has a pool that it trades. And if you become a funded trader, you gain access to that pool. And you have a portion of that pool to trade with. So there's a very lovely video that Sol, our CEO, has done with, was it Titans of Tomorrow? I can't remember the YouTube channel. But Sol had an interview with them, and he was talking specifically about how the Fivers operates in terms of booking and how it provides liquidity to traders. Very interesting. Go and have a look at it. Just search for probably Sol CEO, Fiverr CEO interviews, and then you might find it on the Titans of Tomorrow. I believe it was Titans of Tomorrow. Please don't quote me on that. But yeah, that's generally how it goes. Very clean setups, unbelievable. Yeah, silver tends to move very nicely, as well as gold during Asia. It's one of those crazy things, but it makes sense because during the Asian session, that's where the majority of your players are that want to trade gold. China, Russia, India. You even have Australia that plays a massive role in trying to buy and allocate gold within their structures. So a lot of participants during the Asian session that want to participate in gold. Gold extra, yeah. Euro USD retesting apparently getting rejected. Yeah. Okay, so this trade, had I taken it, would have been an absolute failure. It is what it is. It's one of those things. So it seems as though you are correct in the sense that this low swing down here was a bit more of a rejection. So now the question is, are we going to continue playing sideways game, or are we going to actually try and push price up? So in this case, maybe not. Actually, let's have a look at NASDAQ. Look at this on NASDAQ. NASDAQ ended up rejecting that area completely. It started pushing up, and it seems as though it definitely wants to come up here. So NASDAQ has already filled the majority of the gap. There is very little of the gap left. We can potentially see it absolutely push up. But yeah, so like I said earlier, this rejection, or this area over here, this established area, which ended up being, it was an order block, became the Tokyo high. We broke through the Tokyo high. We came to touch it, has now definitely become a much stronger area of support. Yeah, I do like this potentially. Maybe price can come back down a little bit to try and pick up, to try and push higher. Where can it potentially push back down to? Well, I would suggest that this area might be a good area to have a look at. So 24,442 to 24,701. If we take a FIB tool from the last leg to push up, that's just 0.5 to the 0.618, which is the golden zone area. So if it were to pull back, that's if it's going to have a pullback, it might come back down to here. If not, let's look on the 15-minute. Maybe something like that. So 24,471 to 24,424. That's if we're going to get a retracement. But yeah, right now we're too close to filling this gap. I would much rather see how we're going to react once we've actually filled the gap, and then see from there. All right. You are a very good mentor. The explanation is far better, and I understood how everything works. Dude, thank you very much. I really appreciate that. Not everybody is going to agree or maybe even like the way that I explain things. But for those of you who do like and do resonate with it, I am very, very thankful that you guys enjoy it, or that you at least find it informative, or maybe that you find it easy to understand. That's my goal, and it's always been my goal, is to just find people that resonate with the way that I trade. And then I don't want to necessarily teach you how to trade in that sense, like teach you exactly how I trade, but rather kind of like see if I can kind of like adapt the way that you approach the market from my point of view. But at the end of the day, I would always advise people to find their own method, find what works for you, and then build from there. Once you've claimed ownership of your own trading process, it becomes easier for you to find fault in it and find ways to improve it. But yeah, thank you, TradeBurner. I appreciate the kind words. All right, we have pretty much come to the end of the stream, guys. I want to thank every single last one of you that has joined us today. Little bit of a different session with the fact that Victor and Samir wasn't here today. We will be back to normal tomorrow. Mouth work. For everybody that stayed around, I would really appreciate it if you guys could drop us a like, and if you haven't already, please subscribe. It goes a very long way to help the algorithm push our content to more people. And then once again, on Wednesday, please, everybody that has liked the stream and subscribed, please rock up on Wednesday when we're going to do our 100k subscriber giveaway. Free of charge. You just rock up. You need to be in the stream on the day. There will be a link that will be provided on the day for you to go to. You register for the giveaway. You have a chance of winning a few accounts. And yeah, this is not the only giveaway that we're doing. There's a bunch of other giveaways that we're going to be doing later throughout the year, as well as potentially later in the month. So yeah, thank you very much to everybody who was here. Thank you very much to Remy, our producer in the background, for working on all of this stuff and making sure everything runs smoothly. We appreciate you all. All right, guys, we'll see you all tomorrow for another Tuesday edition of the Fivers live stream. Cheers.